Good morning, everyone. I'm Cousin Vinny coming to you from theclosingprint.com. That was the opening bell. You didn't hear it. It was on mute. Sorry about that. Okay, just watching the spiders at the moment. Futures are up marginally. Watching the New York Fangs. Apple is up. Apple's up. CBRS is higher. Okay, looking good. Looking good. Let's see. We've got about 20 stocks, 25 stocks advancing on the NASDAQ 100. Let's see what we have on the S&P has 145 stocks. So that's the lowest number we've had in the morning for advancing stocks in a couple of weeks now. So, given the down day we saw yesterday, we're in the lower part of yesterday's range, as you can see with SPY. 21 day is just below. Wouldn't be surprised if we touch that. Let's look at hedge flows. Mostly purple. 0 day. Okay. Okay, you can see this very large area down here at 7,500. 0 day. 7,500. That is 91%. 95, 96%. It's growing a little bit. We got this negative gamma here, about 88%, and overhead a little bit right there at 75.25 resistance. Look for a move above that level or a doji today. Wouldn't be surprised to see a doji. Let's go take a look at up-down volume and get test the market's temperature. Okay, up-down volume is currently mixed. 1-to-1 up on the Qs, 1-to-1 down on the SPY, 1-to-1 down on the NYSE, 1.6 up on the NASDAQ Composite, 2,700 stocks. Let's go look at the comp for reference. Okay, so the comp is hanging in there. Doji. The comp, NASDAQ Composite, it's got about 2,700 stocks plus or minus. Every time I check, it changes a little bit. So it's about 2,700. 2,400 in the New York Stock Exchange. So that's important to watch. New York Stock Exchange. 2,400 components. As long as this is staying at the highs, this is fine. We had 2 wicks up here at the high. I see Frano taking some risk off the table. That's a good idea, I believe. Earnings have been good. We've been beating by 84%. S&P 500 companies, on average, beating 84%. The 5-year average is about 78%, and the 10-year average is about 74%, if I remember correctly. Point is, earnings have been good, so that's what we need to keep us propelling higher. Let's see what junk bonds look like. Junk did push lower back to the 50-day. We need to see a bounce here. Okay, so overall, the markets look like they're looking for direction, which makes sense. Okay. Microsoft is down again today. Intel is down at the moment. Let's see. We've got CBRS higher. CBRS, first bullish candle in 4 trading days. This would be day number 5. Let me send a message to my son. He's been trading this. Okay, there we go. CBRS. So if you've been buying CBRS down here at the lows, I've been buying CBRX. Okay, this looks like it's going to bounce today. SoFi was also off recently. That's basing. SoFi is bouncing again. Okay, SoFi. Let's look at the stock charts. Easier to read. Stock charts. Okay, still in a base. Got to break above 20 eventually. Okay, Nike. What's that doing? Nike. Nike. And the nukes, OKLO. Nukes, not much going on there. Let's see what's actually moving in the markets today. Again, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. If you're just joining us, it is Wednesday, June 17th. About 5 minutes into the trading day. Applied Materials chips are up again. Let's see if NVIDIA can catch a bid. Teradyne, LRCX, Lam Research, Western Digital again. Applied Materials, the top of the S&P 500. Trending, Bollinger Bands opening up. This is a familiar look as we saw back here in March when Micron's Bollinger Bands started to open up and they started to run the upper bands. LRCX doing the same, AMAT doing the same thing right now. LRCX also trending. LRCX. Okay, we're just 6 minutes into the trading day, looking for S&P to bounce. We'll keep an eye on hedge flows. For now, it's too early. We had a VIX expiration. Okay, so that's the reason for the jumpiness this morning. Remember, okay. Okay. Okay, CBRX is on the move. CBRX. They don't have it here on stock charts. I forget. All right, over here, let's see. CBRX. Moving higher. Go to the 15-minute. CBRX turning up. Bullish day. 5 days. This is the first one. 4 days prior. Bearish. All right, so if we can't get back to 25, that would be nice to see 25 on CBRX. CBRX turning back up. Okay. CBRS. Okay, let me see what he's got going here. Let me check my son's Robinhood account. Did he close everything? Okay, yeah, he closed it. All right. NVIDIA continues to drop off here. Amazon, those two looked pretty good yesterday. Amazon looked like it was going to do something. It's still very early. Let's look at Amazon. Okay, Amazon rolling over. Okay, Rackspace, RXT, that put together a deal with AMD yesterday. Okay, it gapped up, closed lower. Today looks like an outside day. RXT, Mondo. RXT, let's see, what's the other one? The other one, where are you? OBAI. It's a penny stock. OBAI gapping up today. All right, looking pretty good. Let's see, Apple following through. Again, I think Apple has the best strategy for AI. They're not spending a lot of money, CapEx, compared to Google or Microsoft or Meta spending nearly, what, $1 trillion, 80 billion, 100 billion. I don't forget the numbers that Meta's spending on their Prometheus project and the Hyperion, I think, is the other one. Anyway, all the New York Fangs are down a little bit today. So New York Fangs are in the lower part of yesterday's range. Okay, could come back in. We had a nice bounce on Monday. Remember, the choppiness that we're seeing this morning is likely due to VIX expiration. Okay, so VIX down here at 16. Maybe I buy some August 20 calls, something like that. Let's see. Let's go here. While we're waiting on the markets. Okay, so resistance 7,600. Right now we're trying to bounce. Okay, we got FOMC at 2 p.m. We got Warsh, first time he'll be speaking to, I guess, the reporters after their decision. He'll be speaking at 2:30. I see you. Here you go. See that? I went to the store for you. Yeah, I missed the opening bell. Kitty's had no food. Mama didn't go get the food, so Papa had to go get the food. See that? Who's your daddy? Huh? There you go. Where's your sister? There she is. Okay. You want some too? Here. Goose. Here. All right. Customers are short puts and long calls. Market makers are positioned against the flow. Funds are short gamma, anything below 7,500, which implies that dealers are positioned to buy the dip below. Dealers are positioned to buy the dip below, okay, after this VIX expiration. They have negative gamma to the upside to offset customers. Customers are long to the upside. Okay, that looks good. All right, looking at SpaceX, of course, it's been crazy lately. All right, SpaceX, let's go take a look at that for now. SPCX. Doji inside of yesterday's wick, but higher, or starting to bounce now. This is holding up remarkably well. I was talking to my son about how IPOs usually fade. Bottom out. Okay, there goes CBRX, CBRS. Okay, that's on the move. Finally, CBRS is finally on the move. Okay, so we are almost 15 minutes into the trading day. Okay, so this looks good. CBRS, OBAI is moving a bit lower right now. Okay. CBRS. CBRS, first bullish. Yeah, note the low wicks on the daily chart that's showing buyers. All right, CBRS looking good. Big bullish reversal day. Okay, this is ripping back in the other direction. Okay, CBRS. I just posted in the trading room. This is the first bullish day in 5. All right, so this is definitely buyers. Ten analysts cover CBRS. All 10 are bullish. Okay, CBRS looks good. NVIDIA is starting to recover. Apple's at the high. Again, Apple's got the best strategy, in my humble opinion. Not that the markets give a hoot about my opinion, but if you're not spending a ton of money, think about it from family finances. You get yourself so far in debt that all you're doing is working every day just to pay the credit man, right? Life sucks when you're like that. I was like that back in college days, right? You get so far into debt that all you're doing is working every day just to pay the interest. You know, Apple doesn't have that issue, at least not from what I've been reading. They were smart. They didn't spend all the capex. They piggybacked off of Google's or Alphabet's Gemini, right, to do their AI. That's how they'll address it. Okay, so let the other guys compete. What happens to Meta when they're like a gazillion dollars in debt? I don't know. It's just something to think about. Apple, at this point, daily looks pretty good. It's coming off the low. It's bouncing around here at the high. Watching the S&P. S&P, now that VIX expiration is over with, let's see if we can get a directional clue. Junk bonds, we want to keep an eye on that. Okay, I don't want to put money to work until, okay, this is good. This is good. They're already starting to show up. Okay, we hit the 50-day, gap down, hit the 50-day, and starting to rise. Now, this is telling you that these particular individuals, not a lot of them yet, the volume's not high, but when these people invest or put money to work, they're not worried about the markets crashing. Okay, they're starting to put money to work. So that's what we want to do. We want to start to put money to work. We want to analyze, and then once we get a good sense of what's happening here, all right. So the New York Stock Exchange back into yesterday's wick high. That looks good. It's the climb percent. Let's go see what that looks like. Okay, if this is all pointing upwards, not yet, but Nasdaq is trying to turn. Okay, small caps have turned up, mid caps have turned up. So let's look at the small caps. Let's look at IWM. A couple of you are already into IWM this morning, mentioning it's strong. Observations are bullish. Okay, so let's see. All right, just don't want to buy the high. Wait for it to come back a little bit. All right, S&P is starting to bounce. S&P is starting to bounce. Okay, I have to take a 2-minute break. Keep an eye on SPY here. Looks like we're going to start moving higher. Let me go to S&P 500. S&P. Okay, S&P. Here we go. Give me a sec. Okay, watching the S&P 500. Okay, now that VIX expiration's out of the way, we're looking for a true direction. Oracle, this is day 5, holding on to that 50-day. 50 days up and to the right. I'm going to add to Oracle. There goes NVIDIA. I'm addicted to these Celsius drinks, these sparkling Celsius drinks. Let's see what's in these things. Didn't see anything really that bad. Green tea. Okay. All right, we're looking for S&P to rally. We got stocks like CBRS taking off. CBRS looks good. Okay. Bitcoin, Doji for now. Bitcoin, nothing there. S&P 500. Okay, what about the Qs? Qs, trying to push a bit higher. Qs were off yesterday as well as everything else. Inside day, looking for a reverse and push back up. Maybe head towards 748. Let me enable my audio.
Long dated. Size.
Okay, S&P, you're looking for a push higher. Let's see. Take two. That was active yesterday. Take two, I see. What do we have here? 100% calls leading. Okay, take two. Looks good. Take two.
TSM Pulse. Long dated.
Taiwan Semiconductor Pulse. Taiwan Semiconductor Pulse. Let me just go grab that. See what they have here. Puts leading. Okay, so that's not good. For my long on Taiwan Semi, TSM. Okay, looks like it's not getting through this level. Taiwan Semi. Take two looks pretty good, though. Take two pushing through. Okay, DoorDash, that was looking really good. DoorDash, day 3. DoorDash, okay. Dash, day 3, bullish through the 200-day, right? 50-day, through the 50-day. B-band's expanding and bullish. Okay, RSI is rising. All right, so checking out DoorDash DoorDash, we talked about it on Monday. We saw that activity early. Some of you got in. I have a position. Let me see what it is. DoorDash, I have a position. Let me check it out here. DoorDash, where are you? There you are. Okay, like everything else, I have August now for the most part. I have a few Julys left over. I'm rolling July out in bullish stocks. Stocks like SoFi, I believe I have January calls on SoFi. That's looking pretty strong. Cisco, I believe I have August. That's not moving much. I might have to take this off. Actually, I have July for Cisco. Okay, 125s. That's if it heads back toward the tops of the Bollinger Band. RSI is still drifting lower on Cisco. All right, CBRS. Looks good, CBRS. Looking for that to get back up here. Let's see. Do I have a sell order in CBRS? I have options, but they're out of the money. CBRX, I have a lot of shares. Ooh, that's up nicely today, CBRX. Okay, NVIDIA just rolled over. NVIDIA. Okay, so NVIDIA is not following through yet. Sitting on top of the 50-day. Looking for it to spring off of this level. NVIDIA. Other chips and chip-related names like Applied Materials are doing well. These are actually following through. LRCX. Off the highs. Okay, ASML. The company that makes the machines to make the chips, these huge lithography machines, $400 million a machine. They're crazy.
Q's pulse.
Size of these machines, they're like a bus, the size of a bus. All these chemicals that the company LIN produce. Okay, so this company makes the machines. Lin provides the chemicals and the gases. That just continues to grind along. Companies like VIX, FIX, that's on the IBD 50 for multiple months, provide the HVAC, the cooling all these data centers. You've got Cummins providing power, these diesel generators, natural gas generators, Caterpillar, same thing. All of these are grinding higher. Baker Hughes, that's rolling over. It's going to give you a better entry. Generac, okay, being the hurricane season, we want to see Home Depot higher. Home Depot is trending. Okay, I can't tell you enough. Just buy some in the money options out in, say, November, December, or later. What do I want to do here? I want to go here because during the months of June through September, generally the strongest months of the year for Home Depot, hurricane season, like clockwork. Okay, like clockwork. The 23 hurricane season, the 2024 hurricane season. Okay, you can see how much we can appreciate here, literally appreciate. Home Depot to move higher, back up in the top of the range, maybe. Even a 50% retracement would bring you back to about 375, 380.
Intel pulse. Long dated.
So
Deep calls.
I have Home Depot. It's a swing. I'll hold that for a while. Maybe even add to it, Home Depot. Okay, so you don't want to add at the high of the day, obviously, but Home Depot looking really good. Okay, we just got a little dip there. Home Depot.
Intel pulse. Long dated. Deep
Home
calls.
Depot.
Shenanigans. SPX pulse.
Okay, let's see. Home Depot. Yeah, that's looking pretty good. Home Depot. What's the S&P is turning back down now. S&P. Sorry about that. S&P 500. So we just rolled over S&P. Okay, 21 days right there. Earnings are good, so we should see a bounce in this area. 7,500 is a major level. Let's go look at that. 7,500
Size.
is a major level. Okay, we've got a 95 percentile, 0 day. Let's go non-zero day. At 7,500, still big. We go to net open interest. We should see a bounce in that area. Okay, should see a bounce. So
0 DTE. Call side. Size.
if you're buying anything S&P, give it a few minutes. Might get a really good entry and a reversal. Once we see the hedge flows turning up, we need to see that trending up, not down, unless you're bearish.
SpaceX. Long dated. Deep calls.
I did notice Frano saying that she's going to start reducing exposure. I think that's a good idea. July tends to be the strongest month of the year, but August tends to be the worst. All right. So keep that in mind. Plan around it. My plan is to also reduce some exposure in positions like TRBCX, and then maybe add back when we get to September, October. I can't believe we'll be talking about Christmas again so quickly, but the summer is here. It's June. June tends to be a decent month. June tends to be a decent month. So if you're an investor and you're listening, buying dips are good. Okay, here's your seasonality. You can see July, the center right there, July tends to be the strongest month. Plus, if you look at what dealers are usually doing, right? Not dealers, what the analysts are doing out there.
Long dated.
You can see July through August is okay. August, the second half of August into September tends to be very weak. And then we pick up again in October and November. The last 3 to 4 months of the year tend to be the absolute strongest because people are back from vacation and back into school. All right, so let me just turn this off. All right, so May 16th through June 30th looks good.
Micron pulse.
So coming out of June, we should be good.
Deep puts.
Okay.
NBIS. Deep puts.
All right, so that looks good.
Shenanigans.
And this is based on analysts meeting with these numbers. These percentages are based on what analysts come up with as they meet with the companies prior to earnings for each of the quarters. That this tends to be the averages that they report. And they are always meeting 2 to 3 weeks before earnings are actually out. So that's how they form their calls. Okay, let's see. Intel's inside day on Intel. Let's go take a look at Intel. Okay, Intel's still up here basing. Okay, some of you are concerned about Intel. I'm not really that concerned. Intel gained 220% and then consolidated. All right, 220% gain, consolidation, came back and touched the top of this consolidation zone. 921 day are trying to turn up. If these do manage to turn up and price stays above, look at the direction of the 50 day. 50 days up and to the right. Okay, so we're currently sitting on short-term fair value. Okay, 9 and 21 day, that's a short-term fair value. Intermediate term is the 50 day, obviously fair value. The 200 day, long-term fair value, we don't want to get back to 55. That would be a ridiculous loss there. 70 points. No, thank you. RSI needs to turn back up. So there's a few things that need to happen. MACD needs to continue to turn up.
SanDisk pulse.
And stochastic needs to find some strength. So Intel, not doing much with that right now. So there are things I would like to reduce. Okay, I was going to go and talk about TRBCX. So this is something I would be reducing and then adding back towards the end of the year, or you could do nothing really. Um, not that big a concern. TRBCX, long-term stuff I hardly ever look at. Okay, so we made 183% to date, 185% plus or minus. We got it. We got long at the end of the bear market in 22. We've been long this for. You can see
Long dated.
lack of concern here.
Shenanigans. Tesla Pulse. Intel Pulse. Deep puts.
Okay, so again, what's working? Looks like mostly chips and tech-related names. Cummins gapping up. What did we say Generac was doing? Generac, GNRC. Okay, that's still consolidating. This one could go. They've been making larger generators for these data centers as well. They had quite a few contracts from what I remember.
Tesla Pulse.
Caterpillar and Cummins, though, these are the
Nvidia Pulse.
big names in
Deep calls.
data center generators, standby generators, electrical generators. Cummins and Caterpillar. What's John? I think John Deere might actually be getting into that business too. John Deere looks probably the best. Coming out of a squeeze, just pulled back, starting to move higher. I don't know. I still like Cummins. Still like Cummins. It's breaking out. If you look at the weekly time frame, weekly. Okay, last time it did exactly the same thing. It came back, broke out 813. It ran up 100 points. Currently, we're 10 points above that level. Can we run up to 815 or 900? I got a feeling these are going to be much higher. The data center build out, CapEx spend by these big companies. Just Prometheus alone, from what I understand, Prometheus, Meta's project, the size of Manhattan, from what they're saying, that's hard to believe. If you've ever been to Manhattan, that's a big island. Probably a little hyperbole, a little over exaggeration, but they've overlaid it, the size of it, scale wise, on top of Manhattan. It's pretty big. Imagine you going to college, or was it MIT or Harvard? I forget which one Zuckerberg went to. Imagine you go to college, what was it, 30 years ago,
Long dated.
and you come up with the idea of putting people's family photos on the internet, and it turns into what it is now. And now he's sitting on top of a company that's spending billions of dollars. It's just insane. And then Elon,
NBIS.
worth trillions.
Long dated.
Okay, S&P is bouncing while I'm jabbering away here, as Ron White would say, jabber, jabber, jabber. Love Ron White. If you like comedy, check out Ron White. Funny comedian from Texas. All right, so here's SPY. Got a nice little bounce. Okay, Doji. We tested the lows, probably took out some stops in the process.
Long dated.
Let's see what the changes are here. Okay, we've had plenty of time left in the day, obviously. So we need to see this hedge line starting to trend like it did. What was it? Monday. It was trending all of Monday.
Long
All right,
dated.
so this is what we need to see. We need to see a nice trend up. That purple line. It did flatten out towards the end of the day on Monday, but that's what we're looking for right now. Excuse me, right now. Celsius has got a lot of carbonation. Okay, so 7,500, big level. You can see up here is a big level. So if you're going to trade the S&P, you want to be buying the dips.
Micron Pulse.
Once you see buyers come in and this hedge flow line turns up,
Zero
okay?
DTE. Call side. Size.
All right, so this tool that you're looking at, Spot Gamma, this runs me about $2,600 a year. So I get it mostly for the room, for people to see what's going on in the markets. I mean, occasionally I'll trade the S&P as well, but it's good for, especially for options, when you want to check out what you can expect in terms of selling premium, where the levels are going to be. Okay. Where do you want to sell? S&P, you can see this big level over here on the right, okay? 8,000, that's building. So they're building positions out there at 8,000. Do we get to 8,000 by the end of the year? I think it's possible. Earnings have been good, so next quarter, this quarter coming up, if we beat again, 84%, it's possible. All right, so here are some big levels here at 7,600, okay? So that level right there is 7,600. And then you've got this level at 7,500. We want to stay above. We were just looking at 7,500. Okay, so if you look at net open interest, 7,500 is a big level right there. You can see why. Okay. You can see why. And 7,300 is a big put wall there. 7,400, 7,500. So 7,500 needs to hold. So if we get down to 7,500, that could be a good area. We're 750 right now on the SPY. S&P. Okay, we're very close to it. Let's see if we get a buy. You don't have to buy right at the low here. You can wait for this to start to move higher. Okay, so A was on Monday, right? So A, B, yesterday we didn't get a B. We just kept moving lower all day long. So we're looking for a pivot. I'm looking for a pivot. So that's the S&P. Okay, Cummins, we're talking about energy. We're talking about stocks that are actually leading the markets right now. Let's look at the Dow Jones. Okay, Goldman Sachs. Remember, the banks look pretty good too. You got Goldman, you got JP Morgan. Okay, Home Depot is rising. That looks good. So let's take a look at the banks. Let's look at the banks. Goldman Sachs. All right, they are the lead on the SpaceX IPO. Second to the lead, Morgan Stanley. I would just say they're both in the same category. All right, those are the two top dogs on the SpaceX IPO. Okay, and you got other banks like Wells Fargo also on it, I believe. Citigroup, I think, has got a part of it. Bank of America. All of these big banks have part of this. I mean, that's a lot of money. What was it? 1.5 trillion at the open. The one, what did they open at? 135. 153. That number was the $2 trillion mark. So anything above anything above 153 would be 2 trillion plus. So SpaceX is now engulfing yesterday's action. So a little bit of a pivot here, maybe. Could fade a little bit. All right, CBRS, a recent IPO, CBRS. This is the first bullish day in 5. Okay, notice the wicks. I can't stress enough that if you look at charts long enough and you start to, your eyes glaze over, you don't understand what you're looking at. I don't want to insult anybody's intelligence, but sometimes we just look at the chart and we think we know what's going on. But if you analyze it, you can see that dips keep getting bought. Okay, so the lows, we never closed at the low of the day over the last 6, 7, 8, 9 days, right? We closed off the low. So they're buying down here. And we know there's 10 analysts that are bullish. I know I sound super bullish. I'm building a position. So if I am wrong, I only get hurt partially. I don't want to have 1,000 shares of this and have it, roll over, right? I'll keep adding 50 to 100 shares or buy the leveraged CB, which they don't show here. For whatever reason, stock charts doesn't have that symbol yet. CBRX though. So, you can add 100, 200 shares at a time and you won't get hurt that much on a pullback. When it starts to move, then you can start adding double up once we make it above these pivots. So my threshold here would be this level right in here. Okay, so I want to see this get through this level. If it can manage to get through here, above this level, I'll start to add or double up on my position. So I'll get to like 1,000 shares of this at some point. And maybe some options. Does CBRX have options? I don't think so, right? It's a leveraged ETF. So it's using options to mirror the trade on CBRS. Okay, I know I've been jabbering a lot this morning, but it's only because the S&P hasn't moved much. You're just sitting here waiting for a direction. We have a doji. So whenever we get a doji action, a lot of times I'll just spend time talking about the markets, what's a good strategy. Like, let's do that right now. All right, so here is the S&P, not doing much of anything, but you can see it's coming off the low right here. So I would look at the 1-minute chart, automatically look at the 1-minute chart. Did we get oversold? Yes. Did we make a pivot low? Yes. Do I want to buy? Yes. Where would I put my stop? Under 75.08. Okay, that's 20 points. Can we get 40, 50 upside? I think we can. So there goes the S&P 500. S&P looks like a buy here. Okay. It held 7,500 max OI. Stop. I would say 75, 75, 15, 75, 15. Okay, 75, 15. That's 10 points. Can you get 20 out of this? 2 for 1. Stop underneath the 100 period moving average, 75, 15, or the shorter term moving averages. Can we get 20 out of this? Probably. Lately, whenever I buy S&P, I don't like to buy 0-day. I usually buy the next day, and I'll do a spread. I don't make as much as you do if you go straight calls and you get a good win behind you, a win behind your back. I won't make as much, but I still participate. So I'm watching to see what happens here when it gets to 75.30 or so. Did we break above 75.30? Okay, so that's a level right there, right? 75.30, no follow through yet. CBRS, CBRX, watching that. Okay, so while we're waiting for the markets to continue to move higher, let's look at some of these stocks that have pulled back, like Microsoft. Let's look at the 1-minute chart. Okay, you got oversold, you got a higher low. Price action's also giving you a higher low. There's no lower low, so there's no divergence, but we are mirroring what we're seeing. So this looks pretty good. Meta was strong yesterday. That pulled back this morning, oversold. Okay, so we're just waiting for the S&P and the Qs to get their act together too. If they can move higher, then I'd be interested in Meta with a stop underneath 585, 584, something like that. Maybe. Meta has a tendency to disappoint. Okay, so you can see if you just look at it very quickly, you can see over the last 15, 20 days, mostly red candles, right? So that's telling you the odds are this is going to disappoint you. I'd rather see something that's putting together. Let's compare Home Depot, for example. Different sector, obviously, but very quick analysis. You can see mostly white candles, right? Very few red candles. There's like, 6 red candles out of 20. Okay, RSI rising. We know what's behind it. We know that we have a 60-minute that's trending. Everything looks good on Home Depot. Least star favorite this time of year. All right. Let's get a Monticello beer on here. Lee Star, we're going to play your music for you, buddy. Okay, Lee. Miss this guy.
It's not a Monticello beer, but close enough.
Lee Star passed away last year. Really good guy. If you've been around a while, you know who he is, obviously. If you're a new member, awarded posthumously every time we get a nice rally in something. Stocks that he used to trade, like Home Depot. Lived down in Florida. Did work for friends down in the Keys and the islands. Really good guy. Really good guy. Mr. Lee Star, Rick, the Rickster. He passed away last year. Can't believe it's been that long. Anyway,
SpaceX. Long dated. Deep calls.
okay, CBRS continues to move higher. CBRS. Okay, so we're still in a range. Okay, keep in mind that this could still and might likely stay down here for a while, right? So just know if you're trading CBRS, just know what the range is, right? So this is the range. We'll be in the middle of the range today, it looks like, back into the middle of the range. All right, so we get back up here. First thing we'll be paying attention to is this 269, 270 zone. If we get above 270, then we can anticipate that this 20 EMA will be turned up and to the right instead of flat like it is right now. Okay. We're looking for CBRS, the 20 EMA, to do the same thing the Home Depot is doing right now. Okay. Come off the low and just start moving higher. Higher highs, higher lows. Once you see the 60-minute turning up, it's a really good strategy. You got to get the reversal candle first. You don't buy just because it touches the 20 EMA. Imagine these three candles here pulling back to the 20 EMA, and you bought just because it touched the 20 EMA and it just kept going. You don't want it like over here, all right? So you got to see that first reversal candle. That way you can put a stop underneath that 60-minute candle at 318 right there. You see it? If you waited to over here, you got to fade from 338 down to the 20 EMA, 329, it reverses. What do? You wait for the first bullish candle, you put a stop underneath 329 and just keep moving your stop higher. Okay, if you were to buy today, you're looking for this candle right here to hold and for prices to follow through and break above 342. Most likely it's going to continue this trend through summer.
Q's pulse. Long dated.
It has a tendency to rise, not absent volatility for sure, but that tends to rise during the summer months. Okay. You can see just last year alone from June through September, almost into October, we ran up. It wasn't a straight shot. This looks good. We're above the 10 EMA weekly. This is another threshold that you should always watch for. If you're a long-term swing trader, watch your 10 EMA weekly. Can't stress enough that if it's pointing down and to the right, okay, it's a little more susceptible to failure. You want to see this turn up and to the right and start trending like over here, okay? Once it does, then you know you got a pretty good swing candidate, okay? And you buy or add on dips or get stopped out if it drops below the 20 EMA on the 60-minute. This is Home Depot. All right, looks pretty good. So let's look at some other stocks through the same lens, like Applied Materials, 60-minute up and to the right. You can see it's gapping and going. LRCX, same thing, 60-minute, 20 EMA. What is it? Up and to the right, looks good. Buy the dips, wait for the reversal candle. ARM Holdings been on a run above its 20 EMA, 60-minute. Looks really good, right? It's about to break out. ARM Holdings probably going to do what Micron did. Micron, I sold it at what, 500 and change, whatever it was, and it doubled from there. Micron over here on the left, it was trading at 500 or so, and it got overbought on the daily. Back here at 500 or so. Okay, started to get overbought. Started to see this turn down, so I took it off, and this just kept going. That's all right. Just add this to your experience. What to do when you get a 60 minutes that starts doing this. Okay, so we're starting to push back. Here's a good example. All right, we pull back to the 20 EMA. Micron, it's been leading for most of the year, right? A little extended. If we get a bullish candle here, you can put a stop underneath 1,000, whatever that low is, 1,015. Put a stop under that. Okay, that's 30 points above. So 30 point, can you get 60 points out of this? Absolutely. Okay, NVIDIA turning the corner. NVIDIA. Okay, so here's another good example. 20 EMA is trying to turn the corner. Where is NVIDIA? NVIDIA is below the 20 EMA. 20 EMA is threatening to roll over. If price gets above, if this 60-minute candle gets above the 20 EMA, you could wait for the next one. That would only be like 11:30. And then put a stop underneath this one or the next 60-minute candle. It's got to get back above the 20 EMA though. So watch your NVIDIA. All right, here's Apple, another good example. Apple dipped below the 20 EMA on news. Now think about the news for a second. Okay. The way I look at it is Apple had the Worldwide Developer Conference, right? What they presented, the street didn't like. What about it did they not like? The company's growing, has great earnings. Did they not like the fact that they're not spending a ton of money in CapEx? That makes no sense to me anyway. I think they have the best strategy. You've heard it. So they don't spend so much money. The people that were looking for a big pop, they got out, right? Did we fall off? That's subjective. Did we fall off? Yeah, a little bit. I guess you could call that a pretty big cascade, right? But we held above the 50-day. What's happening? The people who have a longer term vision are buying, like Dan Ives and those characters, right? So long as we continue to do this and we get back above the 20 EMA on the 60-minute, you got a good swing candidate. Where do I buy, Vinny? You could buy right now, actually. Let's see. We just had a little dip. Okay, what does stochastics tell you? All right, so I know I'm jumping around, but hopefully this starts to sink in. Look at stochastic. Okay, this is created by George Lane. Okay, the guy was a commodities trader. He would trade cotton futures. He wanted a way of history lesson for today. He wanted a way of telling whether cotton futures had an opportunity, were probably going to be higher the next day on average. So what he did is he created this indicator that's based on the where prices. Excuse me one second. He created an indicator that's based on where prices close on a daily basis in the upper half of the daily range on average or in the lower half of the daily range on average. And that creates this oscillator. When it gets oversold like this and starts to turn up, like over here in March, you can tell when it turns up, it's telling you that on average, closes are going to be in the upper half of the daily range. So that's when you want to buy when this starts to turn up. Not up here when it's embedded, you start to take some profits off because eventually you get a little overheated, RSI rolls over. Now that RSI is rising, Apple looks really good. Plus the story looks good. Volume looks good. MACD's turning. Momentum is shifting. Okay. The latecomers will start buying after it's already back up to the highs. You know, I don't know if it's going to happen. Apple might do this or that. But if you see it turn and stochastics is turning up, that's telling you a likelihood we're going to close in the upper half of the daily range. You look at your 1 minute, where are we relative to the high of the day? Can we see more? Look at the daily, look at the ATR. ATR does about $7 a day. Notice it turned down, by the way. $7 a day, it's up $1.39. It did dip a little bit into yesterday's price action. So I would say you probably got another $5 in this, $4 or $5. So $4 on a 50 delta call is going to make you $200. 4 points on a 50 delta call is going to make you $200. 1 50 delta call. So if you buy a 50 delta call, this continues to move higher for $4. Can you get there? That should make you $200. 50 cents on a 50 delta for every point in rise. Okay, so we're still waiting for this to move here. Be nice if the S&P also pushed higher. S&P. Okay, S&P is making higher highs, higher lows. What about the Qs? What about IWM? Okay, IWM. What about the New York Stock Exchange? Okay, New York Stock Exchange at the highs, making new all-time highs. New York Stock Exchange. What's RSP doing? I mean, we practically had everything bullish here. RSP, the equal weight index, it did drift a bit lower, but now it's bullish. Number of stocks above the 20-day. I can go on and on with the supporting indicators right now. The number of stocks trading above the 20-day. Now, this is a little bit negative at the moment on the S&P 500. We need to see that turn up, but it's making higher highs and higher lows. Number of stocks above the 50-day rising, equal weight flagging. Okay, so this is sort of neutral bullish. So going back to the original idea, if I'm going to trade Apple, I want to see stochastics rising. Perfect. It's reset just like it was over here in March. What led to that follow through? Same thing with Home Depot. Look at your stochastic. Okay, stochastics from oversold. What did it do? Closes in the upper half of the daily range on average on a 14-day basis. This is 14 right here. Okay, stochastics 14.3. That's the default, but it's embedded now, so we could see this move a bit higher. My guess is we're going to get a rejection at 351 or the 200-day or both. Okay, so we're continuing up. Got a little bit more to go. We're at 339, so you got another 10 points to go with Home Depot. We're going to make it there today? Not likely. But if you buy the dips like this right here, perfect. If you like Home Depot, this was your entry right there. Okay, let me take a snapshot up. We'll come back and visit this in the evening session. You'll see that this is most likely going to be in the upper half of the daily range by the end of the day. Okay, I'm going to just put a timestamp on this. Okay, you see what's going on here? If you're a new trader, a light bulb should go off in your head, right? Stop. And this is at 10:30. Okay.
Intel Pulse, long dated. Tesla
Let me just, that's fine. Okay, 10:30. All right, so there we go. Is it going to go straight up from here? Maybe. Higher highs, higher lows. Will it drift a little bit lower, then move higher, drift a little lower, move higher? Probably. This run up this morning was pretty active. It trades on the floor of the New York Stock Exchange. So, these market makers get these bids and they fill all their bids on the floor. I'm not sure if people still stand around and look for, because they can do everything electronic now. I don't even know why they have the NYSE set up the way it is anymore. Ancient art. If you know who Danny Riley is, Mr. Topstep, he used to be on the floor. That's why he's called Mr. Topstep, because his booth was on the top step in Chicago. Floor trader extraordinaire, really nice guy too, nice Irishman. Benny, why don't you get back to trading? Right now, I'm just watching the S&P. It's not giving us a trend. It's just chopping around. So chasing this right now makes no sense. I'm watching that 100 period moving average, the red line. Can we get back above it, or are we going to chop around it? Doji up-down volume is 1-to-1. If you recall earlier, it's still 1-to-1 on the SPY, 1-to-1 on the Qs, 1-to-1 on the NASDAQ composite, 1.5-to-1 on the NYSE, 2-to-1, almost 3-to-1, just ticked up to 3-to-1 on IWM. So IWM seeing more activity, but still choppy. Still choppy. So whenever the markets are choppy, putting in a doji, what I like to do is study the markets, talk about, strategies, talk about how you might want to approach a position, watching for stocks that are showing relative strength that aren't paying attention to the S&P 500, like Home Depot, which we just showed you. All right. So as long as it's 1-to-1, we know that it's going to be like choppy doji time. And so what we want to do is keep an eye on trace and hedge flows. Hedge flows most likely are going to go back and forth, up and down, just a sine wave to the right. If you know what a sine wave is, if you have a oscillator. Okay, looking forward 1 day. Purple still on the screen. Let's go to GEX. Okay, lots of gamma here. Okay, if I pull this back, you can see the major levels are 7,600. That's the call wall. Okay, 7,600. I don't think we're going to get above that That's resistance for now, unless we get a bang out rally. All right, 7,500 is a major level support. We got a 100-point range, basically. Okay, CBRX, CBRS. Okay, SpaceX, what did it do? SpaceX pull back, right? Starting to, all right, outside day. If you don't look at the wicks, it's an outside day engulfing yesterday's body. Okay. Home Depot looks good though, right? Home Depot. Okay, the dips keep getting bought. Home Depot. It's riding the upper Bollinger Band. If you've read John Bollinger's book, Bollinger on Bollinger Bands, great book, by the way. You buy the squeeze, inside the squeeze. You look to the left. What's the high prior to the squeeze? Okay, going into the squeeze, what's the high? Once it breaks above that, that's your trigger. You keep an eye on it. If you know John Carter, he created an indicator called the TTM squeeze. It's based on Bollinger Bands and Keltner Bands. When the Keltner Bands go inside the Bollinger Bands, that creates the squeeze. When it breaks out of the Bollinger Bands, that creates the trigger. Pretty simple indicator. All right, watching Home Depot here. Okay, Home Depot. You only need one stock, by the way. One stock a day. You make $500 a day. That's $10,000 a month. Why go after 20 stocks if you're a day trader? Why do that? Concentrate on one or two stocks and try to do them the best you can. Like, for example, let's say I came into the day and I'm going to day trade. What do I want to do? Do I want to buy up here at the high or do I want to wait? If I don't get in at the open, I have to wait, see where the first pivot is. Once I get the first pivot, RSI gets oversold, then I've got a pretty good advantage. I can buy the dip, look for the follow through. It's not guaranteed that it's going to go back up to the highs given what the S&P is doing, but looks pretty good. So if I'm going to day trade, all I need is for every 2 points, 50 delta call. It's going to make me $100. So I have 5 calls, 50 deltas. Stock moves 2 points. Okay, I'm going to make $500. I'm done. I'm done for the day. If I do two stocks, they both move, or maybe one doesn't, I need to get at least 4 or 5 points out of those 5 calls on one to average out to make more than the other, than the loser. But if you're doing this with every stock, waiting for the 1 minute chart to set up, like Apple just pulled back, so Apple didn't work, right? What else? Intel turning up. Okay, let's look at the 60-minute. It's iffy. So I'd probably pass on this for a day trade only because of the 60 minutes very choppy. It's not clean like Home Depot. Okay, that's very clean. So I know if I buy the dip on this, I'm probably going to make 2 to 4 points at least, or I can see it very clearly, right? Okay, so all the New York FANGs are pulling back right now. Amazon, okay, below the 20 EMA. Don't want to touch it right now. Google, below the 20 EMA. It's got to turn back up. Got to get that first bullish candle. Microsoft, below the 20 EMA, trending lower. Don't want to touch it. NVIDIA, don't want to touch it. MAT, top of the list. I do want to touch this one. Not at the high of the day. I want to look at the 1 minute chart. Okay, it's flat right now. It would need to at least pull back a little bit for me to be interested, and RSI would have to get oversold. So that's a possibility later in the day. LRCX, gapping up. Do I want to buy it here? Probably not. You already had one dip. Another dip. Maybe with this one, you want to wait until about 11:30, 12 o'clock to see where it is. Excuse me, the carbonation from these Celsius are really making me very crude this morning. All right, so we're looking for LRCX to do something. All right, ASML, same thing, right? It's holding the high of the day. 60-minute is trending. All right, you got your first bullish candle. Put a stop underneath this. It's at the high of the day. A little tough. just off the high of the day. Can this keep going? Probably. A couple of weeks ago, I was looking for ASML to break out of this squeeze. Okay, right in here. Finally did. I never did acquire a position, unfortunately, but it did work out. Stochastics and MACD both got oversold and turned back up. Now they're embedded or at the highs. So you have to think with Core 1M, it was below 8 again yesterday, Core 1M. All right, so Core 1M, people are still chasing calls. You can see we're dropping back down now. We're holding near this 8 level. So this relationship between options for individual names and the indices, when it gets down to lows like this, it tells you that calls are super expensive relative to the S&P 500 or the Qs. So you know you're paying too much for your calls. You don't want to do that. You don't want to buy calls when they're super expensive. You can also see it here. If you look at the scanners, you can see everything is congregated in the right quadrants, the right half of the screen. That means that these are very expensive. You'll see a high risk reversal rank at 96%. So that's telling you that has a high probability of moving to the left eventually. Okay, Meta pulled back too. So Meta pulling back. All right, so back to Meta. So Vinny, I understand all of this explanation. Why don't you throw out some trades here? And so that's what I'm doing. ARM, Home Depot. Home Depot was a good looking chart. Home Depot. Okay, 1 minute. We already had a first dip. So it's probably going to give us a second dip, maybe. If we put in a higher low and stay above the 100 period moving average, we stay above this and turn back up. That's $1, 339, 340. If it gets back above this pivot, stop at 339, look for it to follow through, take out 341. That's 2 points, 1 to 2 points. I don't know. I don't like the markets at the moment. Seagate Technologies. Okay, Seagate. That was active yesterday along with Western Digital. These are at highs. So let's look at stocks that aren't at highs that are moving off the lows. How about that? Let's look at it from a different perspective. Let's look at the financials like SoFi. Okay. So this has obviously created a base. If you look at the weekly time frame, SoFi, fairly inexpensive name. So here's a good example of, okay, I'm looking at a different sector than what's been leading, tech. I don't want to buy tech because it's too extended right now. I want to see some pullbacks. So I'll look at the stocks like Home Depot, or in this case, SoFi. SoFi turning back up above the 10 EMA. So already meets this criteria. It's got to be above the 10 EMA for me to look for a long. It's got to be below the 10 EMA and dropping if I'm thinking about a short. Okay, it's not the case. It's moving higher, creating a base. We know that BlackRock has something like 70 million shares. I know it's ridiculous. BlackRock, you've got, who's the other one? I can't think of the names off the top. Susquehanna, and I forget the other, Jane Street. Jane Street, those are the three biggest names in it. I think it's like 80 million shares between the three of them. You think they're going to buy this down here on the dip and not look for it to push back up? Now, are they going to be right? Three firms? I mean, there's always a possibility that a stock pulls back, but I like the odds that I have these kind of people behind us. So we thought it was going to break out this last time it popped here. Okay, so what's happening? What's happening, Benny? It looks like, to me, it looks like this bottom that's occurring right now in SoFi. So this is a swing time frame, by the way. Okay, you can see the cup, right? Pretty obvious. It's above the 10 EMA. 10 EMA is turning up. That 10 EMA is probably going to do that too. 10 EMA is going to go like that. Okay. 10 EMA is going to turn up. Okay. So that's your 10 EMA. Okay. That 10 EMA. Let me grab a hold of this. Okay. 10 EMA is going to turn up. Okay. I'll turn it green so that's the same color. All right. So 10 EMA is going to turn up. Now, if you get a 50% retracement, let's take a look at that. 50% retracement from the high to the low. Okay. Just 50% is 23. 382 is 21. So 3 points from here. Okay, let's see an appreciation. All right, so from here, to there, that's 17, 18%, right? From where we are right now to 382 on a weekly, that's 18%. If we get up here to the 50% retracement, that's 30%. Okay, so if you buy options deep in the money, like say the 20s, no, the 15s or whatever, 15s, this could do well. Buy it, say March next year, something like that. I think I have March actually. Let me go look at SoFi. SoFi. Hope everyone's having a good day. I know I'm blathering away right now, looking for the S&P to move. We're a doji right now, so there's nothing to fear really by not doing anything. SoFi. SoFi, I want to build a position here. Oh, that's up. Oh, that's up a lot. Holy smokes. All right, so, I have June 16th. Wake up, Benny. Let me roll these. Let me roll these out. Actually, you know what? I'm going to take profits and then buy something else. Create a closing order. Okay, I'm going to do. Let me sell 10 of these. Okay. All right, so I just sold those 10 of those for $5,800, $5.80 each. SoFi, I had the June 16s. No. What do I have there? What the hell did I just do? Let's see. Let me just go to my trades. Filled order. Where you are? Filled orders. Filled orders. Yeah. Okay. Oh, you know what I just did? Dumbass. Those were those were leaps. The June 2028. I just sold the 25s, 2028s, but they were a nice value there. So what I can do is get back into these, but buy these a little lower. SoFi, I have the. I'm thinking that by the end of the year, these are going to be much higher. Wow, that's way out in 2028. Okay. All right. So what do I want to do here? Let me just take a look at these. SoFi. Oh, and it just dropped off just as I did that. Interesting. Huh. Daily looks good. So, all right, S&P is moving lower right now. S&P is moving lower. Okay, 7,500. We got to hold 7,500. You know that. Let's keep a high on 7,500. Okay, was there some news there? Let me just look at my news channel here. He's speaking at the G7 summit. So Trump is speaking. 7,500 needs to hold. That's a big level there. Oh boy, Cerebrus, that's up quite a bit. CBRX is up 2,400, 2,450. CBRX, okay, that's good. CBRS. All right, so it's off the best levels of the session. CBRS. Okay, looking for this dip to get bought. Okay, let's look at the 60-minute. All right, it's above the 60-minute. That needs to start trending higher. We talked about that earlier. S&P 500 pulling back right now. All right, Trump is speaking at the G7 right now. All right, 7,500 is holding. $7,500 is holding. And would love to buy a dip here. Tomorrow's a spread for tomorrow. Let's see. S&P, everything's down right now. Looks like we might bounce S&P. Do I want to do something for tomorrow? Let me see what these options are going for. S&P 500. For tomorrow, let's see. That's going to be what, the 18th, Thursday? I'm going to get back into SoFi, by the way. Sold those leaps. 18th. All right, so tomorrow's 25/30s are $23. All right, looking for a bounce here. S&P looking for 7,500 to hold. If it gives way 7,500, we could move back down to 7,425, 7,400. So this needs to hold. Not doing anything yet, S&P. Okay, you can see we're sitting right on the 20 EMA on the 60-minute. We need to bounce, so we need to see that bullish candle. starting to bounce a bit, but note the 100 period just continues to drift to the downside. So we have a bearish fade. Don't want to do anything with that yet. Okay. So Trump is speaking at the G7. I guess that's the end of the G7. It's only a 2-day thing, I guess. So what is it? India, Germany, France, the UK, Spain. Who else is in that G7? Or is it the EU? Is it the EU part? Does that represent all of those? I don't know. Let's see, G7. G7 countries. Find out. United Kingdom, Germany, Japan, Italy, Canada, and the European Union. Yeah, okay, so the European Union does represent all of those countries except for Germany and United Kingdom, France. Okay. France, USA, Great Britain, Germany, Japan, Italy, Canada. Okay. S&P, no follow through yet. All right, so 7,500. If 7,500 gives way, this can be pretty bearish, pretty quick. Dealers will have to start selling futures. Okay, next level looks like is 7,430. If we lose 7,500, 7,430, it's a pretty big area. Okay. So this is 7,500. We're sitting right on top of 7,500 right now. 7,430 is the next level down right there. Okay. All right. S&P still showing weakness. Okay. Nothing here. All right, NVIDIA, also pulling back NVIDIA. Okay, at the low of the day. Apple pulling back. As good as Apple looked this morning, it did make lower highs, lower lows now. Looking for a bounce, though. Looking for a bounce. 2 days, 2 steps forward, 1 step back. Okay, what happened to my audio alerts? S&P trying to put in a higher low.
NBIS, long dated, deep calls.
In by NBIS, we got calls coming across right now. NBIS. Okay, breaking higher. The markets are lower. Some of these stocks are ripping to the upside. Nebius Group, NBIS, Nebius Group, pushing higher. Okay, higher highs, higher lows. 60-minute. Good example of the 60-minute. Wait for that reversal candle off of the 10 or the 20 EMA. Put a stop underneath the reversal candle, the bullish reversal candle. Look for the follow through.
Good pulse, long dated.
That was a 20-point move right there.
Meta pulse, NBIS.
All right, so these New York FANG components are all below their 20 EMA, so these are off the table for now. Intel's trying to get back above the 20. This actually might get going. It's about a $10 move back to the highs. Intel. If it does manage to turn back up, watch the 1-minute chart. Looking okay. Relative strength compared to everything else. The Qs, IWM. IWM looking pretty good. What's the 10-year look like? The 10-year yield. Okay, that's sitting on the 50. If the 10-year yield loses the 50-day, this is going to be huge for IWM and small cap traders. Okay. Okay, look for that to bounce. Watch that 10-year yield. Junk bonds, we need to see that rally up. Okay, so this looked a lot better earlier. If you recall, this was a bullish candle. Now it's a doji. Microsoft turning. Apple's at the low of the day. No short covering yet. Apple, Amazon, Google, Meta, NVIDIA, all at the low of the day. No short covering yet. They just keep pushing it lower. Okay, so Amazon rolled over. Google back to the 50-day. Meta hit the 21-day, got rejected. NVIDIA. Okay, none of these are working. However, many stocks like Applied Materials are bucking the trend, showing relative strength. All of these are following through and pushing higher. ARM Holdings, double top. Do we keep going, ARM? I think it probably will. ARM's been showing a lot of strength. Okay, let me just look at this real quick. Okay, so what is okay, Microsoft turning, Apple's still dropping. What's AMD doing? AMD. All right, Doji, rather a wick on the bottom of the candle. AMD looks like it wants to keep going. Remember, they just announced a box, a $1,500 box that goes up against NVIDIA's $8,000 box, outperforms it from what I understand, or at least gives good performance compared to NVIDIA's box. A little brick looking thing goes for $14.99 from what I understand. Let's see, AMD. $1,400, $1,500 for an AI desktop. Challenge to NVIDIA's cloud GPU business. Okay. All right, so it's pretty interesting. AMD's got given a challenge to NVIDIA. If you look at the weekly time frame, very extended. A lot of these are so hot. The only way I would trade these is with options, and I'd probably be doing spreads. And even then, we know that Core 1M is very low, and S&P is testing the 1500 level. So let's focus on this for a minute. S&P is testing the 7500 level. Sorry, 7500. Okay, if we drop through this level, the next one is 7430. If you're thinking about shorting it, okay, let's go take a look at VIX. VIX was very low. I was telling you this morning, right at the open, at the expiration, I'd be thinking about August 20 calls now for the VIX. Do I want to do it? It's at 17. So puts are fairly inexpensive on the S&P with VIX down here at the low. SpaceX showing more weakness. SpaceX. You could trade the SPCQ. I don't know if. Yeah, they have it. Okay, SPCQ is the short SpaceX here. Okay. We mentioned that one when it was at $8.50 yesterday. It's at $12.50 now, or $12 and change. SPCQ. SPCQ continues. Okay, all the New York Fangs are off at the moment. SPCQ, that's short. The SPCX. SPCQ. Okay, S&P is trying to hold on to the 7,500 level. Okay, we're about to move. We're about to lose 7,500 S&P. All right, so 7430 is the next level down here. 7430. Okay. All right, so that looks pretty good. All right, 74.30 is the next level. If we lose this 7,500, right below it. Okay, we're trying to hold this level. S&P 500 is trying to hold this level. SPCQ is halted, is that what they said? No. $7,500. They're trying to hold it at 7,500. Okay, if we get a bounce here, it'd be a nice long setup. Be so cool to see a bullish engulfing candle. Engulf yesterday and Monday's candle would be cool. Okay, SPCQ, the short SpaceX continues to ramp higher. S&P is trying to negotiate this area and bounce. S&P is trying to bounce. Be a nice move back up to VWAP, right? All right, S&P is trying to bounce. All right, there goes NVIDIA. Shorts covering NVIDIA. Starting to see shorts covering NVIDIA. All right, S&P is starting to bounce. Okay, watching hedge flows. All right, these need to turn up. Hedge flows need to turn up, start trending. Okay, pretty clear where the support and resistance levels are. Okay, so you got support at 7,500. Net OI. It'll be interesting to see here. Will we bounce? Will we bounce? All right, starting to bounce now. Okay, let me take a look at that. Let's see. All right, HD, Home Depot. Okay, Home Depot, VIX, Home Depot. Okay, we got a little dip here. All right, so if you liked Home Depot, the dip, let me see. Should I add some here, Home Depot? Okay, I'm going to add some. Let's see. Stochastic RSI oversold. Home Depot. Let me see. Let me add to Home Depot. Home Depot. Gonna be good. Gonna be good. Let's see. I have December, right? December. Home Depot. I do want to add back to Home SoFi, by the way. Home Depot. Home Depot. December. January. I have January. Okay. Home Depot. All right, they're starting to build open interest at the 360 strike for January. Let me see what other options here. Home Depot. If you're interested in Home Depot, I'm just going to go through a little analysis here real quick. December. Let's see. December. Got a decent amount of open interest in December. 50 deltas through 30 deltas. A lot of open interest there in the money. Okay, November. Let's see, November. Okay, open interest, not a whole lot. October. Some. September. Okay, September has a lot of open interest. Okay, so it looks like, yeah, there's a lot going on there. September. From 340 all the way up to 340 all the way up to 400 for Home Depot. Okay. S&P is trying to bounce here at this level. 7,500, trying to hold on to 7,500. Okay. Big level right there, 7,500. All right, it's kind of quiet at the moment. Just watching for a bounce. See if we can sustain a bounce here, if we can get this hedge flow to turn up or not. Higher low starting to build on S&P. Why is 7,500 important? Because we know what dealers are going to do. If we bounce at 7,500, we know that a lot of coverage, a lot of hedging is going on at that level. So we want to see the hedge flow line rising, telling us they're buying. Okay. As we move away from that level, people are going to monetize their puts as well. Traders. Apple's starting to turn right now. Apple. Okay, let's see what Apple's doing. Apple's trying to turn. Okay, very bullish day. Apple, we've moved 50% into yesterday's price action. And now we're starting to bounce. Shorts are starting to cover Microsoft, being a turd that it is. Okay, Microsoft, a little short covering. Apple, same thing, no follow through yet. Okay, Intel is showing some strength, relative strength here. Intel's starting to go. Okay, we got this level right here. Okay, Intel, watch Intel. Intel, watch Intel. Yeah, Wells Fargo, Andrew, I would probably either sell them or roll them out to September, August, September, and go out at least 10 handles, I would think, higher. Because Wells Fargo, these banks look really good. You know, they're doing very well. Wells Fargo. Okay, the daily. $85.90s. What do you have? Wells Fargo doing well. Okay. Notice the hedge flow line is starting to trend. If we make it through this level right here at about, what is that? 75.15. If we get through 75.15, we could get all the way back up, excuse me, to the high of the day, create a doji, hit the top, the high of the day, and come back in. Intel's trying to go. Intel's trying to push. Okay, S&P trying to rally through this area. S&P Intel is looking pretty good. S&P 500. Okay, nice bounce off the 7,500 level, exactly where you would anticipate prices to reverse. Looking good. Mhm. Still trying to push a bit higher. There we go. Now we're starting to go. Okay, we're right through VWAP now, so looking much better. S&P. S&P doing well. Okay, let's see how far they can push this through. Pushing through, pushing through VWAP, looking good. All right, so far we came down to the 21-day over here on the right. Looks like 7,500 is held for now. Move back up to the highs would be excellent. Continue to push S&P. We're looking for the New York Fangs to see some short covering. We're seeing a little bit on Google, on Amazon, Microsoft, NVIDIA, Tesla now. Tesla's getting the most bang for its buck at the moment, pushing off the low as the S&P continues to rally. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday, June 17th. Just watching the markets here with 20 minutes to go for lunch. Okay, back to VWAP. Shorts covering a little bit, but still no really substantial follow through. Looking for more momentum, a little bit more volume. All right, Microsoft looking a little better coming off the low. Microsoft. Earlier, we talked about a number of stocks that if you looked at your 1-minute chart, you'd probably have some good setups here. Let's take a look at Wells Fargo. Wells Fargo with the dip, 1-minute chart, looking for a follow through. Many of these banks look really good. Wells Fargo is one position. Morgan Stanley, another. Continue to push higher. Goldman Sachs. All these banks look good. Okay, just don't buy the high of the day. If you're just tuning in now and you're looking for new entries, okay, wait for the dips. Get your best entry. These are bullish, most likely will follow through. Making new highs. Tesla. All right, Tesla looks okay. Looking for these stocks that look like shorts are covering. Microsoft, not my favorite setup, obviously, sitting here below the 50-day, but it most likely will bounce in the short term. Tesla right at the 50-day moving average, as you can see. Tesla 50-day right there. I was hoping that it would move above the 200-day this week. Hasn't done it yet. So still assume a doji for today. Not going to get much higher than the high of the day. So I'd go to something else if you're looking for day trades. Home Depot. Okay, that did give you a little dip. Home Depot is already starting to turn back up. SoFi, another one. SoFi at the high of the day. SoFi. I did sell some SoFi. I want to get back in. I'm not going to do it at the high. Look for it to dip. SoFi. Home Depot looks good. Okay, Home Depot, HD. That looks good. Home Depot coming off the low, looking good. Tesla, yeah, Tesla needs to get back above the 200-day. It's trying to get back above the 50-day. Tesla. Okay, looking at the stocks that are doing the best today, aside from banks, let's see what else is working here. Okay, so Dow Jones, Caterpillar, Industrials, looking good. Banks look good. Honeywell, Industrials, JP Morgan Banks, 3M, Industrials, Financials, AXP, American Express, Nike, consumer, I guess you could call it consumer discretionary, but it's / consumer staples because people need shoes, right? Nike taking its time coming out of this level. I got the 45 strike calls. Let me just see what they're doing. Nike M. Do I want to add to this? Okay, these are up. Nike, I have October. I have October. I also have June next year, June 45 strike calls. Also have October's Nike 45s, 45.50 call spreads on Nike. All right, so looking for that to push a bit higher. Okay, Nike. S&P is still trying to climb more. S&P, it bounced off the 7,500 level. We know why. Pretty obvious why, right? You know what dealers are going to do when it gets down to a level, a major level like this. People will start to take profits. Once they start to take profits, the dealer is going to hedge around this position. We look for a reaction. We got the reaction we were looking for if you're bullish. Starting to make higher highs, higher lows. Also talked about a trend needs to develop in the hedge flow line. That shows you that dealers continue to buy on the way back. Let's go look at 0 day. 0 day, this is a 97 percentile. There was 1 billion here earlier. There's still 973 million in gamma. So they took a little bit off there. About 200 million has traded out. Okay, so profit taking here. You can see the difference. Look at 60 minutes ago. Okay, look at this. Okay, 60 minutes ago, there was 1.1 billion. Now there's, 10 minutes ago, there was 973 million. All right. So they basically took off 200 million profits or rehedging, whatever. Heading back up, we're getting above these levels here, 97 percentile at 75.15. We're above 75.15. We're at 75.19 and climbing, which is telling you that dealers are buying, okay? Knowing this information makes your life a lot easier. Instead of guessing all the time, trading the S&P 500, you can go with the flow, literally go with the dealer flow, which is rising. We're above a level now. We're above this level right here. I was just pointing to 75.15. We're currently trading 75.18. We want to see this continue to push higher. Once we get above this level, there's not a whole lot between here and 75.60. That's a 93, 94 percentile. Okay, you can see that area is building. 60 minutes ago, it was 379 million in gamma. Now it's 574 million, and most likely when it updates, it'll be closer to 6 or higher. So we know that level is building and can plan accordingly. All right, so here we go, S&P turning up. Okay, so President Trump finished off, I guess, finished off the press conference at the G7. And we got Warsh coming up, his first FOMC as Fed president. They're not really talking about it very much. They're talking about Blue Origin. According to Bloomberg, Apple investors are tired of AI promises. want tangible progress. I think they're missing the point. I really do think they're missing the point with Apple. Although I guess Apple's promising something, apparently. I don't know. I think the people who sold over here wanted to see an immediate breakout. Didn't happen, so they started selling after the WWDC. Are making higher highs, higher lows. RSI's at 50. MACD and stochastics are turning from oversold. Histogram is shortening bars on the MACD, so that's momentum is clearly shifting. You got volume showing institutions over the last 5 or 6 trading days have been buying more than they're selling. I like that stochastics is turned up now. 21 day. Okay, so we want to get above the 21 day. Bollinger Bands are fairly wide, so volatility is still pretty high. 50 days up and to the right, so we'd like to see the 9 and 21 day turn up and to the right to match what we're seeing on the 50 day, that green line. Okay, here's Apple. Sorry. Okay, what's Intel? Intel's still trying to do something here. Apple, got to get that, the 50 days up and to the right, the green line. 200 days up and to the right. So it's this short-term back and forth that needs to resolve to the upside. Microsoft just a little profit taking there, a little bear flag on Microsoft and NVIDIA and Netflix. Tesla trying to do something. Intel, keep watching Intel. All right, so we are hanging out right at VWAP. Is this going to be a doji today, or are we going to finish in the upper half of today's range? S&P 500, we're going to finish in the upper half of the daily range. Let's take a look at stochastic. Stochastics turned up. So the odds, momentum-wise, the odds are with the bulls as stochastics is pointing higher. MACD's building shorter histogram bars. Volume past 3 trading days, not today, but the last 3. Actually, this is S&P, so they don't have today's volume. So the past 4 trading days, we had 1 bearish day, 3 bullish. We're looking for a follow-through. Okay, did you follow that? Stock charts doesn't show the volume on the S&P until after the close. I don't know why they do that, but it is what it is. It's their site. They can do what they want. S&P needs to stay above VWAP, starting to fade a bit. So this could roll over, very possible this could roll over. So if you got profits, maybe scale out a bit. This could turn into a lower low. If we take out 7,500, that would trap a lot of bulls. Okay, watching for a follow through here. Push higher. Hedge flows. Hedge flows still making higher highs, higher lows. Hedge flows still making higher highs, higher lows. Okay, let's see if we can't bounce through this area. Okay, we got a lower high pivot. We need to break out and make higher highs now. Okay, let's do it. Let's do it. We need more of these New York FANGs to turn up. That would help us out. Speaking of that, let's take a look at it real quick. Nike, of course. Nike is trying to continue higher. Just talked about the 45 strike call. I have those out in October. 45.50 call spread. New York FANG. New York FANG, we want this to bounce. Okay, so right now we got a doji spinning top. That's good. That's better than a red candle coming back to the 50 days. So a doji here could be a pivot and a higher high tomorrow into a big OPEX. They're expecting a lot of shenanigans tomorrow on the OPEX, Thursday OPEX. We have Friday, Juneteenth off. Okay, Apple's turning back up. Watch Apple. That's going to help out. Apple's starting to rally. That'll help out the S&P. Okay, Apple's coming off the low. 300, remember yesterday we got above that briefly. We're trying to get back above it today. If you look at the daily on the right, Apple's looking good. You got a wick that's telling you that buyers are stepping up. inside of yesterday's price action, which was very bullish, above the 50-day, that blue line down below. 20-day overhead. If we get above 300, that's a call wall. We would expect to see dealers scrambling to buy shares. That would create a squeeze. If you're trading Apple, got to get above 300. All right, so we're $1.50 away from that now. Apple's turning up. Okay, looks good. All right, so between Apple and Microsoft, that makes up 13% of the weight of the S&P 500. So if we look at that real quick, we want to see these turning up. We want to see the equal weight turning up, and we want the number of stocks above the 20-day to turn up. Okay, not there yet, but we're holding on pretty well. This is the equal weight index, so everything's the same. It's not skewed towards Apple, Microsoft, but if we do, that's almost 12% right there, right? Between Microsoft and Apple. So if those two can bounce, that'll help. There goes Apple right now. So Apple's starting to go. Apple's pushing higher. I really believe they're screwing up this Apple idea, but you know what? Who cares what I think? They didn't spend all the money that Meta and Microsoft. Does that make any sense? I mean, I equate it to going into debt to finance, your happiness, right? Instead of getting a second job, you buy on credit cards, you live for the moment. And when the bill comes in, you go like, oh crap, now I have to get that second job, right? And now I'm working for the man instead of working your finances out. That's what Apple's doing. They're piggybacking off of Google. I think that's a great idea. But doesn't matter what I think. I'm just watching price action. If we manage to recover and move back up towards the 21-day, that'd be great, at least for starters for this week. Okay, I was yapping a lot there. Looking at AMD. Earlier, AMD, I was looking for a bounce in AMD. Okay, we got the buyers at the low of the day for AMD, right? They showed up. Notice the Bollinger Bands are coming together. So what's that telling me? That's telling me that if I'm expecting a big move and I'm buying out of the money options, I'm probably going to fail if I do that. All right, because Bollinger Bands are coming together. That's telling me price is probably just going to stay right in this area, probably in the upper half of the Bollinger Bands, I would say. And then maybe we break out to the upside. RSI is above 50, rising. MACD stochastics, recycling, turning up. We got volume previously. AMD looks like a pretty good candidate if we can manage a follow through. So if you look at the 1-minute chart, AMD, here's your 1-minute chart with RSI. You can see where you get oversold. You put a stop down below, and look where we are now. AMD is going some more. I believe I do have AMD already, right? Position. Let me just check here. Yes, I do. Okay, so AMD, that's up quite a bit. $40 a contract. That's looking good. What do I have on AMD? I got June 18s. Very curious. I got to get out of these. Okay, create a closing order. Okay, we're going here. So I'm going to keep my finger on the sell button for AMD as it rises right now. Okay. Okay. All right, AMD. I'm going to take a little profits off here. Okay, 525, 530s. AMD. Also have some 550s, 552.50s. Those aren't going to work. There's got about 40 cents left in those. I'm just going to take them off rather than let it go to zero. They expire tomorrow. Probably could see a little bit more upside in AMD. That's okay. Not everything is going to work. 550, 555, 552. Okay, that looks okay. AMD turning up. AMD looks good. SoFi, So fine. SoFi, I took profits this morning. Okay, into this ramp higher this morning. It's making another higher high, higher low. SoFi, I know that BlackRock has a huge position in SoFi. So does Susquehanna and Jane Street. So I definitely want to be back in this. Okay, higher low. I could wait a little bit longer. Let's see. Let me go out to. Let me see what December looks like. December. Okay, there's a lot at the 20 strike. Okay. Buy those. 20 strike. And I'll buy. Okay, I'm back in the 20 strike call. That's a 55 delta on the 20. SoFi, I just bought some December 20 strike calls. We're just out of the money. They're a 55 delta. So they're pricing in a move. There's 12,000 in open interest. I sold some this morning. I bought again. I might go out and do some leaps again. For now, I got December's, the 20 strike call on SoFi. Yes, it is the high of the day. So I'm scaling in, knowing that if it does pull back, I'll get a better entry. I can double up my position or whatever. Look for a bounce. There goes Tesla. Tesla's starting to move. We're looking for Tesla to move back up, close green on the day, and get back above the 50-day. For starters, tomorrow's Thursday, last trading day of the week. Looks like the 200-day isn't going to happen this week. So best case scenario, we stay above the 50-day, I would say, and push a bit higher. I don't want us to be below the 50-day. What's SpaceX doing? SpaceX. Okay, with a little bounce there, SpaceX. All right, so that's starting to turn up. So SPCQ is backing off. What's he talking about? Okay, SpaceX turning back up. CBRS, holding below 230. It's at 225 more or less right now. CBRS. Apple, more importantly, we're looking for Apple to continue to move higher. What do I have in Apple? Apple positions. Apple. July. Okay, I need to roll these out to August at some point soon. Maybe by today, tomorrow. I'd like to roll these 300. I have the 300 call. Also have some 310, 315s that I got back into that are in July. I got stopped out of the 310, 315s. I think it was last Monday I bought them. I got stopped out midweek. Got back into them towards the end of the week. Apple 310, 315s for July 17th. I need to get back. I need to roll those out to August. At the same time, I'm also thinking, okay, I need to start reducing my exposure into OPEX. We got Warsh speaking today. There's, some risk that's out there, shorter term trades. I had some options that I bought, I think, beginning of the week that expire tomorrow. So I need to reassess those, see if we can manage a follow through. Apple's trying to push a bit higher. S&P breaking a bit higher now. Okay, so looking for S&P. President Trump speaking, so I don't know if that's having an impact on the markets at the moment. Okay. Stop talking. Let's get going here. S&P. Apple. Okay, let me change the channel. There's only so much politics I can listen to. Everything he's saying is basically leading towards some resolution, more so than continuing the bombing campaign. Agree to disagree. Let's see. Apple. SPCX. SPCX. SpaceX turning the corner. Okay, a little dip there. Shaking the tree a little bit. People start selling. Now they're buying up the dip. Are they trying to buy up all the shares out there? I think there's a partial lockup that expires. Like the way the deal's written, from what I understand, August is the first time that anyone can sell from the original IPO. And it's only a partial sell. It's not like whatever. So I imagine Elon's convinced everyone that he's made millionaires of are looking to stay in the stock. Can you imagine some of these people, if they hang in there and this thing goes like it's expected to go? All right, there goes Tesla. Tesla looking good. We need to stay above the 50-day. So far, this looks pretty good. All right, go to the 1-minute chart. That's Tesla. Go to your 1-minute chart. And let's take a look at that. RSI was oversold at the open. We made a lower low, another lower low. Now we're starting to push higher. We're doji at the 50-day. Best case scenario, you make 3 or 4 points upside. 50 delta call, that's $200 per contract. Okay, Tesla, instead of talking, maybe do something with Tesla. Let's see. I have a position here in Tesla. Okay, these are all July. Okay, it's after 12, so hopefully CNBC is talking markets instead of listening to the president. I don't think so. They probably have him on. Yeah, he's still on. Okay, let me go to Schwab. Okay, so Tesla's pushing a bit higher now. Okay, Tesla looks good.
Before this nice over 5% pop that we're seeing here today, the stock was in bear market territory, now down about 19% from those all-time highs prior to earnings. And the earnings were good, guys. And the caveat was that the guidance was lighter than what the whisper numbers and maybe the street anticipated moving forward. If you listen to some of the CEO comments, he wasn't, probably as
Tesla rallying.
And the market ran with that and started selling off the stock. Now, the stock ran into those earnings with the expectations of that beat that they got. But when you give, lower guidance, sitting at all-time highs, this typically happens to it. But yeah, they kept their $580 price target to be aggressive buyers at current levels. If you listen to the hyperscalers and the broadening out of what a lot of these tech companies are doing as far as, these special integrated circuits and and chips that maybe aren't GPUs and the demand in that space, that, hey, maybe the outlook's better than what the CEO gave at this point. But a pretty hefty price target here on Broadcom. But we did see a bunch of price target hikes, not only in Broadcom, but some of the semi-equipment makers, KLAC, Lam Research, AMAT, also today, ARM Holdings. So, yeah, a lot of positivity here today in the tech space as far as analyst notes go.
Okay, Tesla's on the move here. Tesla, watch your Tesla.
remember a time in my life where analysts and media gave them everything.
Oh, he's still talking. Jeez, stop talking.
Analysts coming out and saying that some of these reports about a breakdown with Google and Broadcom are not true.
Okay, NVIDIA turning up as well. NVIDIA looking good. Check your 1 minute chart, RSI. Okay, Tesla on the move here. Tesla going.
This little sector of the U.S. economy with NVIDIA, Broadcom, AMD. AMD's a little bit of an exception, but NVIDIA and Broadcom, I've never seen two companies so unloved that numbers are so strong. These stocks can't catch a bid. Now, Broadcom's catching one today.
Okay, Tesla got a nice little bid here. RXT is gone. Rack space. Nice little pop. Outside day. That was a good one, Mondo. Thanks. RXT, PCT. All right, Mondo, thanks for the heads up. Selling RXT. Okay, at the high of the day, RXT, PCT.
Yeah, not surprising that we're seeing a little bit of a pullback here. It's only, 3% pullback as of right now, just above 195 bucks a share. But one of the more interesting things is, options started trading yesterday, 1.7 million contracts traded on the session. That was third highest out of the big tech names, just below Tesla and NVIDIA.
RXT, nice profit. Thank you, Mondo.
Between call and put volume. Call volume is about 474,000 calls traded today. Put volume about 465,000 puts. So almost equivalent at this time. So maybe some people creating some hedges at this point. Weekly options start trading tomorrow in SpaceX, according to reports. So that might.
Thank you, Mondo. That was a good one.
Those volumes even more because they're only trading monthly options now. But it's not surprising to see a little bit of a pullback after that. A jump from the IPO price of 150 bucks a share. So yeah, this is going to be one of those volatile names. We talk about Tesla this way, and we have for years. The volatility, the beta that's in this name. SpaceX, because of the valuation levels, the hype around it, the global interest in this stock, I would expect beta to remain pretty elevated in this name, at least in the near term, if not the long term.
Great point. And you wonder if this will be one of those names that ends up being like Tesla, where you're
Yeah, it doesn't matter. I'm going to take profits off in the strength while I can and reduce my risk. Tesla continues to push a bit higher. Tesla, watch Tesla here. Tesla's still pushing. Okay. SoFi. Okay, SoFi looking good. SoFi catching a bid today. SoFi. A big move on SoFi.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm gonna be sick. We have to buy that now.
I love that commercial. That's funny.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe to schwabnetwork.com. Welcome back to Fast Market here on Schwab Network. Intel back in focus after announcing that its next generation 18A manufacturing process has entered initial production. This is an important step in the company's effort to reclaim its leadership in chip making. Think of 18AP as an upgraded blueprint for building faster, more efficient chips, both for Intel's own products and for outside customers. The update is especially significant because Intel is trying to grow its foundry business and compete more directly.
All right, pretty decent move here in SoFi. Looks like it's going to go now. Decent day. I got a pretty decent sized position in this. So pretty happy with what I'm seeing right now. SoFi. I had a couple of days last week where I was questioning, but then I started thinking, you know what? These guys have so much. These guys being BlackRock, Susquehanna, and Jane Street. Actually, Jane Street has a bigger position than Susquehanna, which I was pleasantly surprised to see.
Well, I look at Intel and I see the 1-year chart showing a low of 1897 was their low. It looks like the rally is about 460%. Obviously, the United States government has an $8.9 billion stake. NVIDIA has a stake of about 4%. Both of them have stock around the mid to low 20s in terms of the stock. And the optimism, Diane and Tom, is getting a bit expensive, right? It's Neiman Marcus optimism that we have right now in Intel. And I think they need a lot of good news just to keep the stock where it is right now.
I don't know. I disagree.
So, yes,
not that the markets care.
I believe that Intel is now safer than it's been. I just don't know how much of this good news is priced in and how much this stock is really past its value. So I'm very wary of how far this stock has run. They've got good news coming up. Is it good enough to keep the stock right here? I have no idea, Tom and Diane.
Listen, when I walked into
60-minute.
market before, I love that analogy. I was like, oh, it just feels like I can't touch this stuff. I'm big here.
Excuse me for clearing my throat in your ear. Okay.
It's a lot more expensive on a valuation basis than AMD and especially NVIDIA, which, by the way, just turned positive on the session. But Intel coming out with this new chip, maybe trying to get Apple under its wing. Google Alphabet already said they're going to start buying chips from Intel, NVIDIA. They
SoFi.
$1 billion in Intel, along with that nearly 10% stake the government took. SoftBank invested $2.5 billion in the company. So there's been a lot of underlying positive tones for this company, but they're still losing money on the foundry business at this point. But this is trying to broaden out their customer base. Now, if you look at why the stock has had that parabolic move, since maybe March of this year, is the fact that CPU pricing has gone through the roof. Demand has skyrocketed at this point. Now, they, according to Mercury Research, they own about 67% of the CPU market at this point. But AMD is digging into that because just 4 years ago, that first quarter of 4 years ago, they had 88% market share in CPUs. And now, big brother NVIDIA is getting into the CPU market. So valuation's really elevated in this stock, but a good story here today based on the fact that, hey, if they can get Apple as a major customer, that would definitely help in the near term.
I like that characterization too. Big brother NVIDIA. All right, let's get to the example trades for Intel. Kevin, let's start out with you. What's your approach today?
So
Actually, Susquehanna does have a bigger position than Jane Street.
That comes out, it doesn't mean the stock's going up, unfortunately. All right, and we've seen that. There's often a disconnect between news and excitement and then the actual numbers. So what I looked at is the expected move out till next week, June 26th. About $14, I rounded that, and I looked at something in a 2-week put calendar spread. And so for $2.05 is what I put it in at. I'm buying the July 10th 105 put, and I'm selling the June 26th 105 put. And so just looking at where the stock is right now, using that right column on the Thinkorswim platform to help me with my strike selection. And Tom, I gave a calendar spread about $15 below, $16 below where the stock is trading. Gives you about 7.5 deltas. It's collecting theta, and it's long about 5, just about 4.5 vega, Tom. So something where I get directional P&L. I can also get long vega P&L, Tom, because I don't know. They can come out with a lot of news that's all good, and it still may not keep the stock here, Tom.
Let's break this one down. 23 days to expiration. Kevin went out to the July 10th weekly option series, bought the 105 strike put, sold that same put in the near term June 26th weekly options that expire in just over a week. Now, you're paying roughly about a 205 debit, so there's your risk, $205 for this downside exposure. You can see here from the risk profile, it apexes out as far as profitability goes at or near the strike that you're doing the calendar on. So it gives you that downside exposure. But you've got a nice wide range for this stock to trade in to be potentially
SoFi.
105 is the area you want it to go to. If it trades 110, 100, that's still in the profitability range here. You've probably got a range of about $95 on the downside, maybe 117, 118 on the upside. And Kevin's trade is 2 weeks wide, right? So you'll have that opportunity or potential to roll that short option and creating credits. And Kevin, I looked at just the 1 week roll from the June 18th to the June 26th weekly options. And those are over $3.50 on at the money puts right now. So if this stock does fall down towards 105, those credits that you can collect on these adjustments really start to explode. That takes a lot of the risk, or maybe all the risk on it.
July 8085. Okay. I would go 95, 100 at least. Andrew. Take some maybe take some profits on half profits.
This will expand the price of that calendar also, so you'll get the double bang for your buck here. Where hey, if it goes lower, it's going towards where you want it to, towards 105. But then also, if you see a spike in volatility, that might expand that price also. So giving yourself that downside exposure on this one. Kevin, I looked at something a little bit different here that is a little bit more passive, but it's capital intensive because I looked at a cash secured put here, and I went out shorter term.
Okay, SoFi looking really good. About to break out here, SoFi. This Bollinger Band's open up. This is going to get really fun very quickly. SoFi, do I want to add to this? Let me see. What do I got? I got 25 calls. Ooh.
It takes your break even down to 106.50 to the downside. Now, I mentioned that capital intensive, right? Because you've got a lot of risk.
Okay, SoFi.
The stock were somehow go there.
SoFi.
Possibility, but not high probability that it will. But your max loss by $10,650 if it did go to 0% for some reason. So, Kevin, looking at this type of trade, it's a little bit more passive. I've got a cushion to the downside, break even here. You got to be comfortable owning the shares. But at the same time, if you think like, hey, I wouldn't mind buying the shares if the stock does fall from these elevated levels, and you sell this put here, and even if it doesn't go below the 110 strike, you're still going to be profitable on this type of trade.
Yeah, I mean, the cash secured put has the same profit profile as a covered call, and the covered call has risk down to zero if you're long the stock. This gives you $10 in cushion, $10, $11 in cushion, where you can, the stock can go down and you can still be profitable on this trade. Now, if it were to go to 110 or even lower, yes, you can do one of two things. You can, actually one of three things. You can either take the stock, right, and your break even would be 106.50. You can extend duration if the market lets you, or you can close the trade if you don't like it. But this is one that it's collecting data. It does have risk down to zero, just like a covered call strategy has risk down to zero. But it's Tom. The great thing about this trade is you don't enter at 110.
Short puts on Apple.
Yep, and as you mentioned,
Interesting. 1,990 short puts.
Close your put if you don't want to get assigned on that. If it does slip below the 110 level, as Kevin mentioned, you could extend duration, maybe roll that short put to another week.
2.3 million in premium. Nice.
But you've got to be prepared to own the shares on this type of.
There goes Intel. Intel ripping here.
There's your bull bear debate there in Intel, Diane.
Intel ripping.
We've got cash tags coming out the table. My portfolio will be along. Take a look at Kroger ahead of its earnings tomorrow morning.
Okay, there goes Intel. Intel. Nice little rip here. Breaking out. Okay, nice breakout. Intel. Buyers low of the day. Buyers.
I'm Seth Barnes, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
Parents didn't really talk about money at all. In college, everybody around me had money. I didn't want anybody to find out that I wasn't middle class. I was using credit cards to do anything. I ended up with $20,000 credit card debt.
Tesla going. Okay, Tesla looking good. All right, so 405s.
This is about how my finances got wrecked and how I fixed it. If I could do that.
Okay, let's get Tesla on here. Tesla.
No politics, no spin, just the market from open to close and beyond.
Okay, what's S&P? S&P just sitting here. Okay, S&P.
schwabnetwork.com.
When you invest, you are not wagering on an outcome and walking away with either a windfall or nothing. You are a participant in wealth creation. Our purpose is to help investors build and protect wealth over time, not to make financial security feel like Las Vegas. Owning beats hoping.
All right, S&P.
In the long run, belongs to those.
S&P still hanging out here.
Welcome back to Fast Market here on the Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studios. Time now for our cash tag segment. For that, let's bring in our next guest, and that is Andy Swan, co-founder of Lifefolio, joining us today to take a look at Kroger ahead of its quarterly results.
Hedge flow still trending higher.
This year, I mean, we're off by 1% so far this year. So it's not a great year, not the worst year. But what does sentiment look like now from you guys' point of view, Andy?
Well, this is the most negative.
Tesla still pushing, looking good.
The trend has
Tesla. Tesla, nice little pop on Tesla. 50-day. Big bounce. Hammer. Hammer developing on Tesla. NVIDIA. Intel. Nice pop on Intel.
General up 20%, Instacart up 19%, Costco up 9%, Walmart and Amazon are positive, and Kroger is negative. And I have a feeling if we had Publix on here, it would also be quite positive. It's just dominating Kroger in every market that I've seen it go to. So,
okay, what's Home Depot doing? Home Depot.
Traditional supermarkets
All
aren't
right, RXT just off the highs, Mondo. Okay, Home Depot off the high of the day as well. Still trending. Buy the dip. Tesla, nice dip buy on Tesla. That turned out to be a nice trade there. RSI oversold. 1 minute chart following through back to break even on the day. Red to green. Briefly, let's see if it follows through.
Yeah, Andy, that kind of fed into my question on that. You mentioned the demand stuff. Your sentiment data is so much farther below the stock, and the stock's pulled back 19% from those all-time highs that we saw just a few months ago after their last earnings. Is maybe some of that downside, data that you guys are seeing already built into the shares on this nearly, bear market pullback that we've seen?
Yeah, you would like to think so.
Intel pop and drop.
I don't think that's happened.
Just erase that last candle. Intel
A continued decline in our
pop,
data
boop,
that has been very
and pull back in.
over the past year, quarter after quarter, lower and lower scores. The stock price has reflected that nicely. We don't see any signs of a turnaround, and we don't think
Shenanigans.
necessarily that the stock market has fully
Speaking of
gone out
shenanigans, where is my
the negative
shenanigans?
cycle, the negative feedback cycle that the Kroger customer is in right now, and the alternatives that they're finding. Once you switch grocery stores that your family uses, it's very difficult to get people to switch back.
Yeah, I used to go to Kroger. I go to Publix all the time. Much cleaner store, fresher produce. Okay, Discord's having a hard time connecting here.
And this, a lot of times we see stocks act like this, and they become a little bit of a value trap. There's the PE ratios get compelling and low, but when the business itself,
Okay, there we go.
consumer demand
Just
are
rebooted it.
constantly decaying, then those low valuations tend to become value traps, and that's what we think we're seeing with Kroger right now.
So do you think that there is a shift? Because when you look at your chart, consumer demand is...
All right, SpaceX calls leading on SpaceX. We got a nice block here of 4 times baseline. SpaceX 4 times baseline moving here. 1234. SpaceX.
I talked to friends and family when we got our first Publix here in Louisville. People went in there and they were like, "This is the Chick-fil-A of grocery stores," compared to going to Kroger, which feels like the drive-through at Wendy's, and it's a terrible experience. And
That's so true. So true.
2 Kroger stores to get to Publix, one of the Publix in town.
All right, so SpaceX, SPCX. All right, got a big trade there on SpaceX. Apple, we had some put sellers on Apple. SPCX. Okay, trying to turn the corner there. Micron, calls leading 100%. Micron with the calls leading. We're at the high of the day. Micron, no surprise here. No surprise here. Micron leading. 60-minute, above the 60-minute 20 MA. Apple needs to be above the 60-minute 20 MA. It is fading a bit, so we're looking for that first bullish candle. Can't seem to get above 300 or stay green on the day, it looks like.
Long dated.
Intel. Intel's above the 20 MA. It's trying to pop above this level. A couple of sellers just came in and tried to push it back down. So we'll see what Intel does by the end of the day. Tesla at the high of the day here. Nice little pop on Tesla.
Long dated.
Yeah,
Deep calls.
it's kind of weird because our data says the exact opposite. That people they're door dashing a lot more. They're eating out a lot more. They're actually relying on the grocery a little bit less, which is counterintuitive. But I think it kind of comes down to the point of this is one of those experiences that people want to keep. They might give up, the $700 lease on a new car and instead keep their entertainment and eating out type of stuff. They might cancel the Caribbean cruise, but they keep some of life's little daily pleasures intact. So that's the theme that we're seeing here. It's not
SanDisk Pulse.
consumer is
NBIS.
in
Long dated.
terrible shape,
Deep calls.
but the ones
Intel
that are
Pulse.
having a little bit of a tough time,
Shenanigans.
they aren't trading down to eating at home and going to Kroger every night. They're finding other ways to save their
Intel
money.
Pulse. Long dated.
Quick question.
Shenanigans.
Your earnings score on this one.
Yeah, we're negative 25, which is slightly bearish, and we think the Kroger turnaround story, the outlook.
All right, Tesla, can we push a bit more? NVIDIA is trying to go too. NVIDIA is pushing above VWAP. Watch that. If it gets back above the 50-day, we could see a nice surge back to the upside.
Let's get Kevin back into the fold. Tom, you got some insights from the portfolio team. Your thoughts for the example trade?
Yeah, this is a pretty dour setup from the
Okay, we got 2 o'clock. We've got FOMC. Warsh. Is it Kevin? Kevin Warsh. His first FOMC. Pretty much everyone knows what to expect from him, just from him being in the social circles for so many years. They know what he represents and what he's thinking.
stock a year ago, and they were pretty high on it, but then the stock shot to all-time. The stocks, the option market pricing in about a $2.80 move in either direction. Anticipating the shares going into earnings. How do you want to look at this one from an example trade?
Yeah, well, you're right, Tom. Like Folios, it's really representing what their CEO said, that they're in grocery wars right now, and it's Walmart, it's Costco, it's Target, but make no mistake, Kroger has 1,250 flagship stores, and they control a total of 2,800 stores in 35 states. So they're gonna work that combination or that relationship between lowering prices and margins.
Robinhood.
And so,
What's going on with Robinhood? Robinhood breaking out. Robinhood breaking out.
Family. And I looked at the buying the June 26th, selling the June 18th, 66 call calendar.
Robinhood breakout on the daily.
It's trading about 29 cents now, so volatility is actually creeping up here a little bit, Tom. But this one gives you a slight skew to the upside. Now, based on if you're bearish on this name, you could clearly do a 58 or 57 or 56 put calendar as well, Tom. But a very inexpensive way to play a directional move in Kroger, because the front expiration is trading about a 107, and the June 26th is trading about a 48 implied vol, Tom. So big dispersion there between the two implied volatilities.
Yeah, that lowers that cost to give you exposure to the
Robinhood, if you still have those calls, Robinhood looking pretty good here.
do the call calendar. Maybe you would look at the put calendar, but this is really short-term positioning that Kevin.
Intel trying to push back up. Tesla as well.
Options buying that 66 strike call. That's 9 days to expiration, and then in the near-term options that expire on the 18th tomorrow, sell that same 66 strike call. So just a 1-week wide 66 strike call calendar to the upside, paying roughly about a 25-cent debit. There's your risk. $25 per spread.
long
get
dated.
some exposure to
Nvidia
the upside. Now,
Pulse.
you've got break evens. You want it to go at or near 66, but anything between maybe 62 and a half, maybe 69, the upside could be potential profitability on this way.
NBIS,
this type of
long
trade.
dated,
Kevin mentioned
deep
net vol
calls,
dispersion
deep
lowers
puts.
the entry point price, and that lowers your risk on this trade. You've got some assignment risk on that short call going into expiration over the next 24, 26 hours or so. So keep that in mind on this one. But an inexpensive way to get some directional bias. Now, you were bearish. I just looked at the 1 week wide 58 calendar on this.
Long dated,
You know, if
deep
that
calls.
sets up
Robinhood looking good on the daily.
Zero DTE, call sign.
Bollinger Band's opening up. If you're interested in Robinhood, wait for this dip. Wait for the dip to buy Robinhood. Robinhood. Getting a little dip now. Big breakout. Looks good on the weekly as well.
Zero DTE, call sign. Size.
Kevin took this ended up being a bull bear debate essentially because you're taking into account that like folio data and adjusting if you are bearish for this example trade. Thanks, guys. We've got the breakdown coming out. George Sillis will join us. Take a look at Microsoft after reports that walked away from a $3 billion Oracle deal, only for Oracle to deny that report. That's next on Fast Market.
All right, Intel trying to go some more. Intel. Intel trying to go. Watch Intel. Looking good. Intel. Inside day, a hanging man candle. Looks like a hammer. This just happens inside a price action. Looking for a follow through and a push back up to the highs, 130. SoFi. Okay, pulling back a little bit. SoFi. I'll probably get back into some SoFi soon. Add some, I should say.
Zero DTE, call sign. Size.
Okay, let me put something on for lunch. I'll be right back. Give me a couple of minutes.
reports.
2% now.
Long dated.
Stocks falling about 20% on the year. Time now for the breakdown for that. Let's welcome in George Hill, senior market correspondent. Take a look at Microsoft today. So even though you've got competing headlines where Oracle trying to push back, it feels very he said, she said. The market seems to be paying more attention to this Business Insider headline. How do you make sense of the price action, George? How do you break this one down?
Well, I mean, this is interesting because, you know, for all intents and purposes, if you look at things like valuation on Microsoft or even the analyst ratings, the mid-target rating for Microsoft is around 560.
Soft
The
pulse.
mid-target around
Long dated.
$870. Stock is trading around $385. So something is amiss with Microsoft. I think the Oracle news and Microsoft back and forth based on this $3 billion deal that may be put on the back burner for now based on government security concerns is really a small issue, to be honest with
Amazon
you,
Pulse.
compared to some of the
Long
bigger issues
dated.
that are going on in the software space. Microsoft does own about 30% of OpenAI. You also have to consider that OpenAI's deal with Oracle is still very large. So my point is that both these two behemoths, Microsoft and Oracle, are deeply tied to OpenAI. So for what it's worth, I think that's a challenge. The other thing is the software narrative is still putting pressure on Microsoft, as well as Oracle, as well as the rest of the group, which includes, you know, other enterprise names like CRM, ServiceNow, many of which actually started falling once again in early June quite a bit. If you look at Microsoft,
Zero DTE. Call sign. Start.
Above the 460 area, but since then, and this is again in early June, it's just been a waterfall to the downside. I think the other thing that's going on.
Intel's trying to push a bit higher. This is the high of the day right there. High of the day right there. Trying to push above the high of the day from this morning. First tick. NVIDIA. Oh, excuse me. Intel.
Long dated.
Google is making a lot of headway into custom silicon, as well as spending a lot on capex. Microsoft is spending a lot on capex, but not necessarily moving in the realm of custom silicon. Capex for the business, $190 billion to go. What are the goals of Epic Fury going into it? You said, say it again.
Jeez.
You want to spend this year. And I do think also, if you look at what's going on with Microsoft, that spending also comes inclusive of a lot of component inflation, as well as, again, the agentic AI competition race is creating problems for all software names. So, like I said, irrespective of what's going on with sales and earnings, which are still robust, 16% sales growth, 22% earnings growth, profitability is a lot higher. The earnings multiple trading around 22 times next year's earnings. One would say that's fair value, but in this market,
Intel
software
Pulse.
names are just not
Long
getting
dated.
attention from institutional investors and have been selling off aggressively.
So there's some analysts who don't say there's opportunity here. You mentioned, of course, that Microsoft tried to bridge that 200-day moving average. Is that what to pay attention to next? In other words, if they can claim that and continue past that in terms of the bullish viewpoints on Microsoft.
Yeah, I mean,
Microsoft's still trailing off.
you look at the 50-day moving average, it traded above it, you know, going back to, let's call it March, April. Then it reclaimed the 200-day and then failed it. And then failed actually both these moving averages in very quick fashion. So I think that speaks to
NBIS. Long dated. Deep calls.
CPU companies, the hardware companies or silicon companies, AMD, Intel drawing a lot of capital away. Also, the nature of agentic AI and the uncertainty around how software companies on a traditional basis are going to integrate it into their business models. Like I said, Copilot has not been successful, at least so far. And it's been very expensive for Microsoft to deploy it, and they're not getting a return on it. And for what it's worth, again, unless the stock is trading above its 50-day moving average at the very least, and the slope of the 200-day moving average is moving positively, the stock is under pressure. There's no other way to put it.
All right, thanks, George. That's George Hill, senior market correspondent, with the breakdown on Microsoft. Those shares trading lower by about 2.5% right now. Let's get Tom and Kevin back in here for example trade purposes. So, Tom, this time you've got the example trade. What's the approach to Microsoft?
Stuck in the penalty box for for sure. I mean, it's up 30% from those all-time highs, and they're all-time highs, even if markets are at or near all-time highs. Microsoft hit an all-time high last summer, about $555 a share. So we've seen a significant pullback into bear market territory for this name. It's just struggled. Before that uptick that we saw earlier this week, I mean, this stock was on like a 7-8 day losing streak and pulled back pretty significantly, now down about 14% so far just this month alone. So I looked at a strategy. They report earnings at the end of July. So I wanted to look into that. If you think it's going to rebound into those earnings while avoiding that earnings event, I've got a strategy here that gives you upside exposure as an example. I went out to the
RXT, yeah, I would take some profits on RXT.
Expire in 37 days. And we're going to buy a bullish call vertical. Looking at buying the at-the-money.
Next dip, we'll probably get back in for a longer term position. That was a quick trade off of that news from AMD. Working with RXT. Intel trying to break out.
Q's pulse, long dated.
For $3,000 if it does go back above 415. If you pay $980 in risk. So keep that in mind. The WPay is going to be a risk.
Don't forget we have 2 p.m. Warsh.
That's a risk, but it takes your break even up to 395.60 to the upside. That's only 3% above the current share price in Microsoft. So you've given yourself over a month in this position for the stock to go up more than 3%, starting to get into that profitability zone. But Kevin, pretty good risk reward setup, but you definitely need to move to the upside to start getting into some profits here.
Yeah, Tom, if you can get this spread for under $10, you've given yourself some duration. You know when the earnings are. I mean, if you're looking for
Q's pulse,
recovery
long
in the
dated.
software sector, then this is a chance for a triple, right? It's risk defined. You know what your risk is. It gives you upside deltas, but look at the chart on this on this stock. It is ugly, but it's Microsoft, and Microsoft is probably going to figure out their path along the way. Do I know? No, I don't. No, software stocks are under pressure, but this stock, in a risk-defined manner, gives you a chance. If you get the move, if your direction is right, you get a payoff of about a triple, Tom.
Yeah, and at the beginning of June, this stock was trading, hit a high of $466, so it pulled back pretty significantly, but it does have that ability to go higher on this, and maybe a reacceleration in some of their cloud growth that was, for Azure, was only 29% last quarter. But giving you upside exposure, Diane, you don't need that big of a move. You get over a month in this trade, and then also that
Meta pulse,
415 strike
long
on this,
dated.
the
Deep
upside
puts.
where you get max profitability. That's about that 1 standard deviation move that the July 24th weekly option
SPX
series is
pulse,
priced
long
in at this
dated.
point. So if you get that
Meta
move,
pulse,
that's
deep
max gains
puts.
for you about 415.
All right, example right there
Meta
from Microsoft.
pulse,
That pressure on
long
Microsoft
dated.
comes even
Deep
as
puts.
the market continues to grind higher. Investors continue to keep one eye on President Trump, who is still speaking at the G7 summit. Among the headlines coming out of that, President Trump saying U.S. only lifts Iran oil sanctions if they do things right. He says if Iran isn't behaving, they will get hit again. So a lot of pressure on and all eyes on the U.S. as we get closer to an MOU between the U.S. and Iran. That's going to do it for us today on Fast Market. I'm Diane King Hall alongside Kevin Hicks and Tom White. You got Next Gen Investing with Alex Coffey and Jenny Horn up next.
What is unique about Schwab coaching is the community.
There's a lot of energy. Like-minded people are learning with you.
You can just see and feel all the excitement around getting to learn a new topic.
Some of you want to get everything face to face with you and 400 or 500 of your closest friends.
Some clients like to be in the privacy of their own home on an online workshop.
Oklo, watch Oklo.
As I'm talking, questions are
Coming off the low here, Oklo turning above the 60-minute 20 MA.
But all those ways we have to teach it all come back to the point of making a difference and helping you make progress.
And so that means not just giving you theory, it means giving you the practical implementation using our platform.
So we want it to be fun, we want it to be informative, and most of all, we want you to walk away with a skill set and independently be successful in achieving your goals. Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Micron Pulse, Deep Calls, Shenanigans, SanDisk
I'm
Pulse,
Gladys, live from the
Hero
New York
Burst.
Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com. Welcome to Next Gen Investing, and of course, happy Wednesday. I'm Jenny Horn alongside Alex Coffey, checking in on markets here that actually have seen a bit of a pullback in the S&Ps. While we're not really seeing that same pressure as, of course, we look at some of the other indices like the Russell 2000, which is actually up about 1.2% today. So furthering some of this rotation narrative, as of course, we do have that Fed rate decision coming now just within about an hour from of course, right now.
Yeah, for the first time in a while, it seems like you've had a moment over the last several hours to catch your
NBIS,
breath a
long
little bit.
dated,
If you
deep
wanted
calls.
to move some stuff around, the markets have sort of been drifting. That would be the word that I would use. I don't know that that will hold all day long. It just seems like there's a bit of angst and maybe anxiousness just to get through this Fed meeting. Not that there's expected to be fireworks or big changes, but there's just this uneasiness of uncertainty. And it's not a bad
long
thing,
dated,
but uncertainty, of course, leads to kind of indecision. And when you have indecision in markets, sometimes just nothing happens.
That's true. And that's sort of been, I think, a good way to characterize today's session as it's sort of just drifted as we wait to hear from, of course,
long
the
dated
decision at about an hour from now. But then in about 90 minutes, we will hear from Kevin Warsh for his first time taking the helm as, of course, the federal chair. Overall, just the really time we'll get further clarity on his narrative and really what he expects as his policy and rate
NBIS, long dated, deep calls.
So I do think that this will be an actually really interesting presser as far as the Fed chair announcements are concerned, just because we don't really know. I mean, I know we've heard him commentary, we've heard his narrative, but it's his first time really addressing all of the questions and commentary from these market participants.
Yeah, exactly. I think that's the thing. You know, and I heard former Fed President Robert Kaplan earlier on an interview kind of laying out what he anticipated might be sort of the way that this press conference should go. First off, it'll be a discussion of, hey, what did they talk about? And that's pretty natural. Sometimes you see that in the press statement that they provide as well. Then it might be a little bit about just generally how does Kevin Warsh assess the economy in real time. But then finally, I think this is really where the uncertainty lies, is going to be sort of the philosophy of which a Kevin Warsh-led Fed might actually look. And does that mean a little bit less
Zero
visibility,
DTE,
maybe
call
less
sign.
things like the dot
Size.
or less sort of jawboning expectations and a little bit more kind of behind closed doors discussion and kind of truly a meeting of the minds as opposed to a constant sort of moving of market expectations. Look, I don't know what's going to happen. That's why it's fun. That's why we talk about things like this.
That's true. I guess we can sit here and talk about expectations all day long. We will at least finally get some clarity and some numbers to all of the various narratives in just under an hour from now. So as always on the show, we'll kick things off with some of these movers to keep on your radar, especially as we do see this sort of pause right now in overall markets, it seems. Well, I will say, though, that all of our stocks that we're looking at the top of the show today, every single one of them, the average price target amongst analysts actually would imply weakness, despite the fact that some of these are really our market leaders as far as AI is concerned. So we'll start things off here with Intel. As Intel had to announce beginning production of its most advanced chip node, bringing the company then one step closer to a possible deal to make some chips for, say, Apple devices. So they did announce they're making their new chip node 18AP in Honolulu on Tuesday. Its foundry had to say this development is a signal to Intel foundry customers and partners that they are fully committed to leading-edge process innovation over the long term. But right now, this is in the risk production phase, which is an early production stage where data is indicating it will be able to meet customer requirements upon its final qualifications. And after years of missteps, Intel did count 18A as a key turnaround that would finally convert the company into more of a competitive chip manufacturer for its non-Intel products. Bernstein addressing this, actually raising its price target on Intel shares to $100 a share from $65. With a market perform rating, so they believe the company should benefit from stronger server demand. So this name commands a widely about a hold consensus. If you take the 50 analysts polled by FactSet roughly, there's 32 polls, there are 13 buys, 300 performs. There's no outright sells, but the majority of the analysts right now that cover this name do definitely have a more reserved tone on its conviction going forward.
Yeah, this is. I think this is an important story because a lot of Intel's story, at least over the last year, has been promising and finally being believed. Where a lot of the 10 years leading up to that were a lot of promises that the market wasn't so sure about. So this is a meaningful step forward. But kind of hidden within this is the reminder they have still not officially secured any
long bond pumps,
external foundry clients of any significance. And this is not a stock that is trading at multi-year lows. I mean, the stock has gone like 5x in the last year and a half, and it's off its highs. So it's not just price for a turnaround; it's price for
Spider Pulse,
market share in becoming a player in this space that is so dominated by TSMC. Look, there's certainly demand for it, but a company like Apple, a company like Google, a company like NVIDIA that relies on scalability and high quality and efficiency and making things on time, Intel hasn't done anything that really proves it can do that yet. So for these big companies, Apple's the one that's being floated with this story as like, oh, is this a move for them to get Apple business? Apple's not going to divert capacity and attention to an Intel until they're
ARM Holdings turning back up. ARM.
That is very true, and I would say that again after having broken up as far as Intel producing Apple's chips for its MacBooks and various computers, it would be an interesting move of Apple to go somewhat back on that more in-house stance that it took on several years ago. Is of course developing now its own chips and its own really advanced chips for some of these processors in their computers and personal computers. But now to look at one of the close rivals to Intel, at least as far as the market rate, and that's AMD, which is also up today, not as substantially, but another 2.7%. Mind you, after falling nearly 7.3% in Tuesday's session, before now seeing a bit of a bounce back. So Bernstein did raise its price target to
15th, 1 o'clock Eastern. We're going to run this right before the FOMC. Sorry for being a few minutes late here. Had to get the old computer running the right direction.
Long dated.
Lots to talk about today with SpaceX. Huge up. Fed, FOMC, oil. What else do we want to throw on that? pile. What's up, everybody? I'm watching the chat there, so if you got any comments, chuck them in there. Chuck one, what's up? We start with OPEX. Just how big is today's options expiration? Pretty big, as they like to say back in the day. We see here, this is the total delta expiring. So you're going to see our friends at Goldman trot out some total notional as we tell you every single OPEX. Their total notional is they consider every single contract a 100 delta option. It means it's equivalent to 100 shares of stock. That grossly inflates out of the money options. So they essentially will count a option that's going to expire tomorrow that's 25 or 30% out of the money as 100 shares of stock. That's fake news. So if we measure by delta, that's showing the stock equivalent. It's about 2.5 trillion, which is pretty big. You can see the S&P 500 complex dominates that. So this is Spider plus STX. And then here we have single stocks index, which includes the NASDAQ, and then all the other ETFs, XLF, blah, 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 blah. So number one is obviously, as per usual, huge S&P. This is what we usually pay attention to. These numbers are kind of light, honestly. They were pushing a little bit closer to 90%. We've had some weakness in stocks over the last couple of days. And so that has reduced this distribution a little bit. My takeaway from this is that it's still call-heavy options expiration, not as call-heavy as it was, so not as extreme in the readings. Normally, I would look for this to be a turning point for ops or for the stock market as we're rallying pretty strongly into the event. We had a moment where we thought it looked like Core 1M was going to plunge and we were going to get a bid going on. That bid has faded the last 1 or 2 days in a very similar fashion to what we saw last week. I'll touch on that here shortly, but before we close out the OPEX size, this is the Delta Nostro history. So this is from April 2022 to now. So if you look at the total deltas expiring, we're second right now. It looks like we're second to the June options expiration of 2024, surprisingly. And so, this is a very big expiration. Should be top 1 or top 2, I think, in history. So good, huge expiration. Should be a very large impact. And I want to show here, I should have queued up this before, but we have, if you saw the OPEX effect that I do with my buddy Jack at Excess Returns, if you Google Spot Gamma, excess returns, OPEX effect, you will note that we present some stats in there that show that OPEX is often a turning point. And, being honest, I thought that we would rally maybe a little bit sharper with the Iran deal. Here we are with FOMC VIX expiration today. Then you have June OPEX tomorrow, so it's unusual that we have a Thursday expiration because of the Juneteenth holiday on Friday. So what I've been writing to our members is that you would expect that if Warsh is kind of benign and kind of not necessarily dovish, just kind of like whatever, people would want to sell vol in ahead of the 3-day weekend. So, there's a little path dependency of how this thing rallies, but essentially you would think that this would be a short-term high, and then we'd have the potential to sort of roll over a bit. Now, originally when we were back here on CPI pre-Iran deal, things were looking pretty weak. The JP Morgan collar trade, which is, often talked about every quarter here, is struck right in this general area, 68 to 6,900. That's in the future space. So, targeting this general area, 7,000 being a big round number strike, that downside was looking very interesting if Iran deal wasn't posted up. We've kind of gapped higher here, and if you think about this thing rolling over, and you want to think about potential downside on a either people don't like what Warsh has to say, or it just rolls over anyway because calls are getting kind of expensive. We're seeing some strange single stock flows. Again, I want to talk about that here in a minute. Keep an eye on this area, 7,000 to 6,800. I've been telling our members that the way that I have this sort of played is I'm in a end of quarter put fly at these strikes, and so I've been offsetting that with some short dated, short-term call plays, trying to play a little bit of a rally here into the end of the month. But ultimately, this is the way that I'm thinking about structuring this type of trade. Not a home run that we saw off that much, but any kind of weakness, even if we start to break down lower and just sort of warm up or energize this position, I think that one makes sense. And then the idea is that we could very well pin into this area around that JP Morgan position if there is weakness. And I think if you are a bull, you even want to see a bit of consolidation here. I mean, you could just do your classic technical analysis here. I know that's why y'all come to see Brent's technical analysis. But this whole thing is pretty stretched out. And so, certainly a revisit to this area, I think, would be default case for this June expiration as we reverse a little bit of these gains. The other thing is you think about what OPEX has done recently.
This is Brett from Spot Gamma talking. He's on YouTube. If you want to check out YouTube, just go to June OPEX. Just type in June OPEX, Spot Gamma.
And sideways, then we got going again, and then you can see May, your kind of standard 1-2% correction. So, a standard 1 to 2% correction, easily gets us back in that 7,400 area, if not a little bit lower. That would be sort of the baseline default for kind of next week. But if you just zoom back even a little bit further, what you'll see is that, obviously there's just this giant trend higher, over time, right? And so if you just look back a little bit further and say, you can make all sorts of lows and obviously draw unlimited things, but the idea that we'd have this nice pullback into June and that's a bouncing pad for, a stronger year-end rally, I think if you are a bull, you kind of also want to see a little bit of that correction, right? So.
Audio just went. Now Brent just went mute. Doesn't realize it. Apple pulling back. Tesla at the highs here. Tesla doesn't look like it's going to go much higher. Tesla. Tesla, Intel is trying to push a bit higher. Tesla at the 50-day Tesla.
Sorry there. I had to mute. I'm just going on for a while. I missed a lot here. I know my friend Simon is sitting there saying, hey, call me. What's up, bro? All right. Let me just recap that idea real quick. The longer term trend line repeating to around 68, 6,900, I think is something that bulls would want over the long term, right? So, still cannot hear me? Hopefully you can hear me now. We're back. Sorry, everybody. Good now. All right. Thank you, guys. Sorry about that. This is what happens when you let old men in front of technology. I said some deeply profound things. So anyways, the base idea that we have a pullback around OPEX, I think is good over the longer term horizon, and a visit into the JP Morgan strike around 6,900, 7,000 into month end would be, I think, actually a great buying opportunity, depending on everything that's happening, right? Let some of these rich, cool stock prices cool off, right? The AI names, et cetera, and then, we'll see. That's my base case is a mild correction is 7,400, I think at a minimum into next week. Again, this is more of a next week thing, assuming Warsh is not hawkish or overtly bearish. And the reason is because you go into the 3-day weekend, traders usually want to sell vol or sell options into that 3-day weekend. We had VIX expiration this morning, which has released vol a little bit higher now. Ahead of Fed, you'd normally see vol contract after an FOMC. So bulls are, they're not dead yet, even though the market is kind of weak. Now, why is the market kind of weak? This is the market maker positioning. We're looking at 0DT options. There's a bit of positive gamma right here. It's only a bit at about $1 billion, but this purple line is the one I want you to see. It's minus 8 or 9 billion right now. This is very big negative delta flow for a half-day session. We've done as much as minus 18 billion. That's the record. We've seen that in the last 30 days. So there is a lot of options selling, particularly SPX, SPY, that is pushing the market lower. So if you just do the math here and you say, well, we have 1.7 billion of positive gain in the SPX, and we have minus 9 billion of deltas being dumped on top of us, doesn't take a genius to figure out which pressure is going to be bigger, right? The buying pressure from positive gamma or kind of that selling pressure. And so we've had this contained kind of drop off so far, but obviously we have a bit more to go. That's right. I gave all the good stuff on mute there. Brent Durham, what's up, buddy? I have a rule that I say what's up to all the Brents because I just don't see them. I have a conspiracy theory that there's no. That's not conspiracy. I just have a theory that no one under 40 is named Brent. I don't know if that's true. Anyway, back to the actual content that you're here for. So what about Hero? Number one, let me just say this. Hood is just going bananas right now. I mean, absolutely bananas. And huge options flow, 418 million deltas.
Robinhood, yep, looking good.
Million. So, and this is, not this week's flow. This is longer dated flow. Really impressive move there. I also want to talk about the exchanges today. I have an interesting insight. The interesting insights always kind of fall on deaf ears. What about the single stock stuff? So if you followed us at all, like on X, or certainly if you're a member, you would have noted that last week we saw very big negative deltas in the. I know the old screen is off, so I'm trying to fix this and see if I can get her back. We saw very big negative deltas in the S&P 500 space, specifically this
Robinhood, big move today.
Single stocks. So what does this mean?
Longer dated calls.
You see people selling calls in Tesla, Nvidia, Apple,
Tesla.
All the names in the S&P 500, right? And so that was minus 4 billion last Tuesday. And Wednesday we saw another size of that as well. Yeah, and what was interesting about this is there were sell programs that came in around 10 o'clock in the morning, and they basically just pounded things in the afternoon. Very unusual flow. Those of you who were the Trade Like the House last week, amazing event. Thank you all for joining that. But we talked about that in depth, right? We saw that what looked like that same program and same size yesterday. In fact, if you look at Sherry and what she wrote last night as our PM analyst here, she covered this flow in the PM note and just noted how large it was. And so today, we're looking at this again and seeing in the S&P equity space, it's negative at 400 million, but it was much worse around 11 a.m. So maybe we're going to sign some paper today, supported that a little bit, but it's still negative, but it is way off what it was. This is the opportunity, I think, to cash a lot of options in. Last week, it speculated that some of this was related to SpaceX and maybe trying to clear up some capital to buy that IPO. That was the kind of idea, but we saw it come in again yesterday, that big negative delta flow in the single stock space. And so, keeping an eye on that at this time, because again, if you break this down a little bit, it's a lot of longer dated call selling, kind of like what we're seeing in the S&P. In fact, you look at the S&P 500. I need to do a check on myself here. Yesterday, it was all call selling. Today is interesting.
All right, Tesla turning back up. Tesla.
This dark blue line is longer dated put buying. So that is quite curious. If we look at the SPX, you can see, this is the type of program. This is super interesting. Egg on my face a little bit because I just mentioned call selling, which is what it was yesterday. But today, look at this. This is an algo. So if you turn this on at 220, look how linear that is. And this is 0 DT options. See that? That's just a straight down. What is that? That's like every second you just buy put. To the tune of about $6 billion just on that. And the call selling, which is the orange and green, pretty flat. So that is very odd behavior here with OPEX and FOMC head. While we're here, let's do a SpaceX check. It caught a bid off these lows, and what you're seeing is people coming in now to buy calls. Yesterday, these deltas, there's not a lot of delta money options necessarily to trade around, but this is generally telling us there's now bullish buying pressure. We're approaching what we did yesterday.
Micron. Lots of calls being bought on Micron today.
Like,
just for the record.
Lows today, the stock has pushed up a little bit. Now, on the Founders Note this morning, we posted this chart of SpaceX, and it's our new calendarized gamma. And what you see in this chart is here's 200. I know it's a little tough to see, and there's fairly strong positive gamma support for the dealers in this area. So what does that mean? It means they puts and they should be buying that dip. And so that was based on current positioning as of last night.
All right, SpaceX turning back up.
Positioned into that. So far, that 195 area has held. What's interesting is if you remove the upcoming expiration, you can see that positive gamma that the dealers have goes much closer to zero. And then as we approach July, what you see is negative gamma, right? This is red. So dealers are short puts to the downside. And if you look at this, the dealers are long calls. So what does that mean? Well, this means for July options expiration, what the buy side did in size, it looks like, is the buy side said, hey, I'm going to sell calls, so the dealers are going to get long those calls, and I'm going to use that to buy puts. So that is what the positioning looks like for July. We'll see
Tesla still trying to push a bit higher here. Tesla.
There's more of this, and if you think about it, that makes sense because the call skew was bananas yesterday. And so what is kind of the smart trade is sell the rich call skew and buy the cheap puts. And so, you know, that to me is the super interesting trade. You got to balance this out a little bit against the index buying and the stock lockup that's coming. And, you know, there's a bunch of pieces here, but clearly the smart money, and I say it's smart because it just makes sense here. I'm not saying it was an easy trade for given the retail and you can't hedge it dynamically and blah, 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 but, you know, selling calls to buy puts certainly seems how the street positioned itself yesterday against the dealer books. So that's the SpaceX takeaway for today. Albeit today, you are seeing some early strong, or not early, it's not
Tesla trying to turn back up.
Seeing, you know, some decent call buy.
We're listening to Brett over at Spot Gamma. He's on YouTube right now if you want to check it out. Just Google June OPEX, Spot Gamma, and you'll catch it. He's in the middle, first half of this live session on YouTube.
Push it back up. These flows obviously can change as the more positions are established. You know, WizKid, you can trade covered. I mean, the call skew is so rich, you can trade the covered call. I think the problem with the covered call in SpaceX, certainly if you're a long-term holder and you're like, hey, great, I think it's a great opportunity to sell covered calls because you could sell a 20% on the money call for next month and get some pretty good premium on that, right? And the call skew is verifiably quite rich. So, you know, but I think selling call spreads is not that great because the skew's pretty jacked up. So it's like you're not really getting that much. Like, you know, the skew's not that steep, I guess.
Tesla trying to push a bit more.
We just look at SpaceX to see what that looks like. She doesn't want to load today. There it is. You know what you're gonna do if you come in here, you're gonna, you know,
Intel trying to take the high today as well. Intel.
And you're gonna buy this other one, which is even more expensive, right? So that doesn't pay off all that well. So, you know, maybe if you got into a situation where you do a call fly or broken wing call fly, something like that, that could make a little more sense. But the purest idea is selling this to buy something like this where that skew is quite a bit different. I think buying put flies is another interesting one. You know, buying one of these and selling two of these. I'm only looking at 30-day expiration options if you want to go a little more time there. But that's the rough idea, but I think you want to play. Could the stock mean revert 20, 30, 40%? Absolutely. I don't want to forecast that play, but, you know, after the squeeze was snuffed so strongly yesterday at the 225, the idea that we get that mean reversion as the index community. I mean, the index community usually gets sandbagged.
All right, Netflix is taking off here.
Russell starts with it next week, and then NASDAQ is a little bit longer, but
Tesla, pop.
That's the rough idea. You should be able to see me drawn all over the screen. Is that not true? All right, moving on to what we see here for the Fed and FOMC. The big thing when you look at the way that the options market is positioned at the moment, I think this is kind of an important thing when you look at the way that the market is positioned. Reshare. I'm having all sorts of difficulties here. try this. I think I'll stay with me, even though I'm being rather difficult. I don't even call this job emceeing. No. So we have a couple lines on the screen here. Number one is the term structure from yesterday. You can see it's quite a bit lower than where we are today. I don't want to say quite a bit lower. Well, one or two ball points maybe. One ball point maybe. And then we included in here our forward implied vol, which is this lighter number here. And the forward implied vol, it extracts the volatility between two expirations. And the idea is that when you're pricing in events or you're looking at forward dates, you get an accurate depiction of where vol may be, projected vol may be, by looking between two given expirations. And so what you notice here that I think is interesting is you see the Fed today, and obviously the vol's pretty bit up. Vol's probably going to sink, odds on bet at Warsh's comments today. And I would expect the market to buoy. I mean, that's kind of my base case here, holding 7,500 into expiration, assuming that Warsh does nothing, and then people are just like, great, I'm going to sell options tomorrow, and then I'm going to start myself. I would want it to be bid up as someone who is looking for an opportunity to short into next week. So that's the base case. Now, he may come off as more hawkish than people expect. Who knows, right? And so if he breaks 7,500, that's our risk off level. And that's
Okay, NVIDIA turning back up. Microsoft. We're going to need some short covering on Apple. Okay, Intel trying to break out as well. Intel, high of the day earlier. We're right back up to the high of the day. At the open, there was another little level right here that we just popped above a couple of minutes ago.
The market has these macro concerns that they're keying on it in what looks like a fairly material way around rates, right? Because we went from not needing a hike to potentially pricing one in. Obviously, oil's dropped a lot now, so that's got to be pulled into this dynamic, and deal or no deal, and all those other pieces have to get involved, right? So the macro picture is still one that is greatly leaning on this market. So you could see, hey, we're worried about rates, market gets kind of weak, and then all of a sudden we go, oh, this is actually not that big of a deal. I think retail sales are pretty strong today too. And so, maybe we just need this market to come down, then we stop worrying about rates, and then that's the pivot for a bigger rally to year end, right? So that's the thing.
I would like to reduce my exposure though. I like Brent I've been thinking that we're going to pull back a little bit towards 7,400 at some point. So short-term options, anything that's less than August, I want to either roll out or take profits, especially if I'm in the money or near the money. TSM, what's Taiwan Semi doing? Taiwan Semi. August calls on Taiwan Semi. All right, let me take a look at Taiwan Semi. TSM. Okay, all right, so we might actually break out Taiwan Semi. Taiwan Semi, I have the 490,500. Okay, 490,500. Also have some 450s. Taiwan Semi, those are out in August. I forget why I put the four. Oh, you know why I did the 490s? We were looking for an immediate breakout here before.
That's kind of what we call the risk off zone. And so I think we could get pretty quickly down, certainly to a test of 7,400. And then we start thinking about it at the end of the month, tripping kind of even lower. That goes even for today. That being said, my base case is that we stay under 7,600 now into tomorrow's close.
Trade desk continues to push lower.
Vol will get sold, and we'll kind of like come back into this into tomorrow for sort of Friday. I would think we kind of close in that area, and then I would be looking to likely position for some risk-off trades into next month. Now, we've popularized, and I don't even get paid by the CBO. I should get paid by the CBO for the popularization of Core 1M. If you have ever heard me talk about anything, then you would know that I was extraordinarily annoying into the end of March, early June about the break of correlation, and that was going to cause a spasm in my view. And sure enough, on Friday, I think that was June 5th, we saw a whole of a one-day super violent spasm, one of the bigger vol moves in history on a one-day basis. Depending on exactly how you measure it, it was a big event, right? It was somewhat contained as a one-day spasm. Ultimately, this correlation metric
RXT continues to go here. RXT.
deal, and they smashed that
Yeah, that was a good one, Mondo.
Why? They sold S&P vol, and they bought single stock calls, and that sent this core 1M metric back to 8. Now, this is just an index. I don't want to over-index to just an index, but historically, when we go below 8 on this thing, violent things start to happen. And they can be short-term, 1 to 3 days, or they can be the mark of something a little bit more material as they did in July of 2024. So I've gotten a lot of questions on this now because if you note, we did sort of briefly go kind of under this 8 level. And again, the reason I'm saying this is an index, and so I can't just be like, this is the moment, but we did press this area on Monday and Tuesday. Now, single stocks have started to come off, and you see that correlation metric starting to move up a little bit. So some of you saying, well, this is an index, Brent, why should I care? Because generally what happens when correlation spikes, vol spikes. And so if we just overlay this with the VIX index, what you see here are very big VIX spikes that correspond with spikes in correlation. Why? Because what happens is all of a sudden S&P index vol goes through the roof. The single stock vol doesn't come in that much because the stocks start to crash. And so everything gets correlated and we go nuts. And so in this situation, we have rich calls, which on Friday, where we had the spasm, almost that entire spasm was driven by people just puking out their calls. And we did a bunch of studies on this. We posted on Twitter and in our founders notes that we could see that it was people puking out long calls, puking out long calls. They also added short puts on that spasm day, right? So they took some risk saying, oh, this isn't going to extend. So the reason I bring this up is because you could say in one view, when you look at other times where we've broken below this level or this barrier, right, that a lot of times you have this much larger kind of more material, longer term kind of incident, right? And, you know, in this case, we kind of had this 1, 2, 3 day thing. I think the Iran signing, Trump's like, mark us down, do something, sign an MOU because we're going to do cage match and we got to get the deal done. And it's like, okay. So we had a very short spasm. So this hasn't fully cleared out these conditions a little bit. And let's back this idea a little bit more by going to our scanners tool here. And what this shows you is, you look at the top stocks, this shows you the end of day positions and, you know, calls. If we're more bid on calls, they're going to be to the right of this plot. If we're more bid on puts, they're going to be to the left. High IV, you're going to be up here. So like when everything was going absolutely bananas over March, you were seeing MU, Sandus, all these names in this top right of this chart. And that was telling us that people were falling over themselves to buy call options, and call options, you know, stocks were crashing up, right? Violently crashing higher. We don't have that same dynamic, but what we do see is we're very clustered to the right of this chart.
QQQ.
So people are bidding up calls. We're not crashing up like we were, but nobody, where are the puts? Nobody wants puts, right? They would be showing up over here if that was the case.
Palantir.
So we are going into June OPEX, and I'm sure these calls will be pulled off a little bit more today, but we are going into June OPEX with calls being very overbought, right? They remain overbought. Not at extremes of April, March, but these are pretty rich. So if you're thinking about playing a reversal, I like looking at these names and say, let me sell these calls and keep it at that, or let me sell those calls to buy puts. That's the risk reversal, the same position that people are putting on in SpaceX, right? So that's the thing to watch here is we're all in this quadrant, and in a risk-off situation, we would move to this kind of quadrant, or even just in the middle, right? A normalization, 1 to 2% correction, okay, we're done, fine, and then maybe we continue to go off, right? We'll kind of see, I think, with the reaction of what Warsh has to say. The other thing that I want you to pay attention to here is we've been seeing this a lot, and I talked about this in the OPEX effect. We've been seeing it a lot recently. Look at the difference between the spider and the QQQ. And you think about Qs starting to add SpaceX and the future of technology, The outperformance of the Qs over SPYs over the last month is really, really impressive. And, you know, I can't help, and I was telling Jack about this OPEX effect of, I can't help but think about what it must have been like to be like, what was the transition like between when people used to really quote the Dow and then they moved on to the S&P, for example, right? And you can see how these two, the Qs in blue, they tend to track each other over time.
Nokia, Nike.
I mean, that's 12%. So
Nike looking for that to push out of this area at some point.
OPEX notional, right?
Netflix.
And how small the NASDAQ complex is, 174 billion versus this behemoth of the S&P 500.
Bitcoin.
To see that balance out a little
Maybe
bit.
it does something when no one's watching. Bitcoin.
Get SpaceX in, but these are the tech companies that are clearly set to lead the future, et cetera, et cetera. So
Higher lows, higher highs. Looking for a Bitcoin to get through 67,000 at some point.
like, I'm in the broad-based indices. I own spiders, and you trail.
Meta's turning. Meta turning right here. Buyers at the low of the day. Meta. Watch that 1 minute chart.
You're just a passive indexer, and you're still out, being beaten by the NASDAQ by that much. You start.
Okay, Microsoft's has been a good one lately.
And then the other thing is
buying the evening session.
So much richer.
All right, I liked it better at 383. Nvidia. Nvidia coming off the low. It's going red to green. Nvidia oversold a few minutes ago, turning back up. Nvidia, let's look at the 60-minute. Needs to get back above the 60-minute 20 EMA.
If you are saying, hey, I don't know that I necessarily believe Brent, and I guess I can kind of see, or I've seen in the past where OPEX matter. Well, spider options are about as cheap as they get, right? So you can put on put spread and spiders for next to nothing, and that's great. Whereas the Qs are quite a bit more expensive. So there, the selling call would make more sense versus buying put, in my opinion. Not investment advice, obviously, but that's the kind of way that I would sort of parse through that and think about that a little bit. The Dow. Some people still do quote the Dow, Fulton. I've never met anyone, just like you've never met anyone under 40 named Brent. You probably never met anyone under 60 who quotes the Dow. So, I don't know. Maybe the boomers out there don't quote the Dow at all. All right, I would like to treat, now that we're on this topic, there was Chris Cedillo, somebody posted an interesting article about Lloyd Blankfein. He's the golden. I just drew a blank, and how he's still basically day trading from his iPad. And he's like, I tend to focus on financials and tech because I have a lot of experience in financials. And I was like, that's funny, because oftentimes I'll look at the brokers, and there's a Pam Bondi did quote the Dow, didn't she? And she got fired. She's out. Quote the Dow. So I think I have a decent idea of looking at volumes, exchange activity, and having a little bit of decent insights on that. To the point of Robinhood. And
okay, more of these New York fangs are starting to turn. Watch Nvidia here. Nvidia.
These stocks, that's why Robinhood is up so much. I checked this morning, but pardon me, those stocks would be doing pretty well. But what I want to talk about here is the SIBO. And the SIBO has not paid me my royalties yet for quoting Corona so much. I'm waiting. That's me, OPEX. Look at this. I mean, this is a stock that over time, this is the SIBO, over time has done amazingly well. And then look at that. So I've seen some theories as to what's going on here, but look at the CME. I think the ICE is also public, right? These things are getting obliterated. Obliterated, right? In rapid rounds of this price destruction here. In fact, look at that from the high. That's 33%. And we're talking about a month. Just in fact, if you look at the last 2-3 days, it's down 15%. So what's up with this?
Nvidia, looking for a pop here on Nvidia.
There's one crypto that is maybe interesting. And it's this hype thing, right? And the hype thing started to get hype when people started to watch for the perpetuals on oil.
Okay, Microsoft looking better. Okay, so these look like they're going to run end of day with 2 hours and 18 minutes to go. Watch Microsoft, that's turning up too. Might get something going here. RSI oversold. Watch Microsoft.
Excuse my French, freaking hilarious. This day and age, and under a Trump regime. But, would you say that there's a correlation between these two in the past? Not really, right? But But look what has started to go on here. You know, and you think about the Iran war where the perpetual started to trade, and this is a pretty clear correlation, right? I mean, inverse correlation. I don't, you know, I'll be fully transparent that I don't know exactly how much hype trades and can you short SIBO and buy hype in any kind of a clear and managed way in any kind of size. I don't know, but what I can easily see here is when this thing started to react,
Pulse,
shooting up,
S&P 500, 7,600,
the reversion,
7,600 call, 5,000 of those.
people are watching hype in SpaceX and the perpetuals trade a lot. Yeah, you know these other exchanges.
Feel the energy.
You know, this is a pretty wild diversion. Now, is the SIBO going to die because of this? I don't know. But then you also have to mix in Polymarket and some of these other things, right? And so I kind of think that the betting, you know, the binary betting
Nvidia Pulse.
markets are
Shenanigans.
overhyped. And the reason I think they're overhyped is because the people pushing to push those markets out the hardest are the market makers. And the reason the market
SoFi
makers
looking good.
is because they make
SoFi having a good day.
the profits on that thing, which is probably
Okay,
not
just
all
off the highs of the session. Robinhood having a good
but
day.
at least when you own stocks and hold
Okay,
them
back
over
up to
time,
the highs,
you
Robinhood.
make money, right? Because stocks always go up. But anytime you see like Susquehanna or a group like that, like, hey, we want more, you know, like give us more prediction markets, please, 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 please. Why do they want that? It's not because they're getting run over like a truck, right? So, you know, it's a super interesting moment. I think that this is, you know, you cannot deny this. And in fact, if you do the old 1 over here on SIBO, you know, these two look pretty. I mean, how do you deny that correlation, right? So, a lot of shifts here, and why do I think this matters? Options volume keeps setting records. SpaceX, ton of options volume, more records. There are a few more options exchanges now. That's a very robust industry, obviously, when we're dependent on here at StockAnna. So, you know, it's a very curious moment in time. Will the correlation settle in over time? I suspect if there's any kind of a drawdown, the hype token stuff may cool off. Hype is also at the oil stuff, then they have the SpaceX stuff, so that gets a lot of attention. You know, we'll see how this plays out. But I think this as an explanation for what is happening. You look at hype and then add on the betting markets, prediction exchanges, and you see kind of what's going on a little bit there.
It looks like we're going to pin near the 75.10 zone.
In that space.
75.10 looks like we'll pin there.
Here, you know, and the individual brokers so far, as we look at Hood, they don't seem to be as affected at the same time, right? So, you know, quite curious. I can't imagine that the SIBO goes away anytime soon. You know, the rate of change here is really pretty wild. You know, this thing has reversed a lot of its gains, obviously, at this point. So let's keep an eye on it. Let's pull a dividend in that thing. You get a whopping 1% dividend yield.
Intel still trying to press the high.
Always inside info, but not going to cause huge moves to SIBO profit. Well, I mean, you can't deny the way the hype is trading. So maybe people are buying hype and selling the exchange. I don't
Home Depot.
know much about that market to say.
Okay, off the highs of the session. It's a Gravestone Doji trending. Looking for this to be 355 in a couple of weeks.
It's pretty wild. All right. We're going to probably wrap this one up here. Any questions, any last minute questions, pop them in the chat before I wrap this one up ahead of the Fed, so you can all go watch that. Yeah, MIX, it's across all these exchanges. Like, you go through the whole group, and they're all really getting hit pretty hard. So, you know, how much is hype doing to really pull that down? Like, I don't know. But I suspect there's been a lot of short-term headwinds for these things. Why can't you start your own exchange on the prediction markets? I'm sure they all are. They're trying to buy them. Obviously, there's a lot of news around that. Maybe the brokers are trying to do it themselves. Like, a lot of stuff is going to change here with that stuff over the short term. All right, one last trace check here before we wrap this thing up. We're getting pretty stable and quiet before the FOMC. We're still holding these key levels. As we put in the founder's note here, we anticipate the 7,500 to 7,600 range being held into Wednesday, so that is today. So this is no mas, as we're about to hit FOMC. Assuming FOMC neutral, I think we could push up a little bit higher tomorrow's OPEX if we sell vol, kind of get a short-term sigh of relief. But I want to position for some short trades into next week, either by some of the spider put flies I mentioned before, or looking at selling calls and those names. Selling those calls is called spreads or called flies, and using that to maybe buy some puts as well. Just some ideas that I'm looking at.
FOMC in a couple of minutes.
Research, yada yada. SpaceX, decent support I see here in this 195 area. That support is going to start getting removed according to our current maps. These maps will be updated again tonight based on all the flows. So SpotGame subscribers will have a updated chart for this. We're putting this in our Discord as well.
Okay, all the New York fangs are showing signs of short covering for the most part, except for Netflix.
Over there is a false guy. We just added a hero burst alert to that as well, so you can check that out. And those are again available in the Discord chat, and I'll be posting these updated maps in the Discord chat as well for tomorrow. All right. If you're interested in joining us, found since any of this interesting, go to SpotGamma.com. And you can subscribe to the Alpha program, which gives you full access to the site. I think I'll be back with members for Q&A tomorrow. I got to double check the schedule though. But if not, we'll be seeing all your member subs on Monday. Thank you all specifically very much. Any questions, email us info@spotgame.com. I do sort of check Twitter DMs. Usually that's a basket of just garbage, so it's hard to get my attention there. So info@spotgame.com is the best place to get a hold of me. And that'll be it. Hit the like button. Look at that. Thank you. I appreciate it, Margin. And we will be seeing you all. Well, members will see you tomorrow, or Monday at the latest. And everybody else will see you next month. All right, take care.
Okay, that was Brent over at Spot Gamma doing a little live session. Okay, S&P red to green, red to green. Looks like we're just flat along that 7,500 level. Looking for a little end-of-day rally, hopefully. If we get an end-of-day rally, I'd be reducing my exposure a little bit more into Thursday. It's just me. Okay, especially I have a couple of positions that I bought end-of-the-week options that expire tomorrow. So some of those are working, some are not. NVIDIA, close to working. If it can push a bit higher, if we can get the NVIDIA up to 208, that would do it for me. Microsoft trying to turn Apple. I believe I have some Apple calls that expire tomorrow as well. I got longer dated stuff too. I just was doing a couple of little day trades. Robinhood, I bought some Robinhood. Let's see, what did I buy? I have the 110, 115s for September, Robinhood. Big burst today, Robinhood. 110, 115s. Looks like we could get there pretty quick the way this is going. Let me zoom out a little bit. Let me go to 9 months. Okay, so we got this consolidation over here. I would think if you just draw a line through the middle of this consolidation right here, okay, that's where we're headed. 110, 115. That's what I have. 110, 115. So I bought the 110 and I sold the 115. So I'm just looking for this to get up there, get rejected at 115, make a couple of dimes, and see where this goes. Robinhood. Okay, so this consolidation up here is where I'm targeting. Okay, a little cup pattern. Cup, form a handle right around 115, 120. Makes sense. Consolidate and then continue higher. Robinhood has a lot of things going for it right now that could and most likely will add to the bottom line, meaning higher prices. There goes the S&P turning back up now. S&P holding the 7,500 level. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday. We've got FOMC in 8 minutes. Warsh in 8 minutes. Warsh. Okay, let me boost. 0 DTE. Call side. A lot of 0 DTE calls today. So I've discovered that you can keep Pulse audio on and be in the Pulse, a different channel, on Discord so you can watch what's going by. Okay, so we've got 4.2 million in S&P options calls. Looking good. The Qs as well. All right, there goes NVIDIA. NVIDIA pop in here. NVIDIA pop. Okay, so I have some NVIDIA here. I want to exit on the pop. NVIDIA, where are you? There you are. Okay. NVIDIA.
SpaceX shenanigans.
Okay, that was a nice pop. Headed towards 210. Get above 208. Those will do good. 207.50s, 210s. NVIDIA popping. NVIDIA popping. S&P turning back up. Okay, here is NVIDIA. For those of you trading NVIDIA. Okay, nice little bounce there. Turning back up, NVIDIA. Look at your 1 minute chart. Look at RSI oversold. Put a stop underneath that. Now you can start moving your stop up. This looks good.
0DTE.
NVIDIA.
Call side. Size.
There goes Tesla. Tesla. And okay, everything is starting to catch a bid now. All the New York Fangs are catching a bid. New York Fangs catching a bid. NVIDIA, Apple, Microsoft, Tesla, Intel. Okay, there goes Google. 1 minute chart strategy. Okay, so these are doing really well. 1 minute chart strategy. I'm just referring to the 1 minute where we get RSI rising. Let's see, that's NVIDIA, Microsoft coming off the low. We talked about Microsoft just about 10 minutes ago.
0DTE.
It was starting to move above the 100 period, the red line, starting to accelerate. Okay, that's Microsoft. Tesla trying to go green now.
0DTE.
Apple turning the corner, 1 minute RSI oversold right there. You get a lower low and divergence, price action reversing. 296 to 297. Let's see if we can get above 300. That'd be really nice. A call wall. Okay, futures turning back up, looking good. Futures, S&P 500, back up.
Zero DTE. Call strip. Size.
Okay, S&P, SoFi, looking for that to continue. Looking at the 60-minute, 20 MA is trending. It can come back. It can come back a little bit before continuing higher. Okay, let's go. All right, so this is a 195-minute. $195 2 bars a day, 2 bars per day. Okay, you can see this is starting to turn. Once it gets above 20, forget about it.
Zero DTE. Call strip. Size. Micron pulse, long dated, deep calls. NBIS.
Okay. All right, so the futures did pop off the low. We're waiting for Warsh in 2 minutes. FOMC.
Micron pulse, long dated, deep calls. 0 DTE, call strip. Size.
FOMC, 2 minutes. Boy, they're playing this up. Warsh faces the biggest test of his career as Fed chair. Please. Talk about hyperbole.
Interested in investing in AI and the power grid they need to power it. You tell me a sovereign that's also not interested in border security and investing in its defense. You tell me a sovereign that's not also invested in energy security and investing in that. There are 3 massive CapEx programs underway globally that will need capital, compete for capital, and create a cost for that capital.
And certainly not limited
Micron
to
pulse, long dated, deep calls. 0 DTE, call strip. Size.
Cybersecurity in the context of it being a risk to the financial system, but what can we glean from how other policymakers are thinking about this?
I think they're all gathering information. I think they're wary.
Okay, NVIDIA's still pushing here, looking good. NVIDIA.
Would remind everyone that housing was also regulated going into the GFC, and yet it's built into the financial system. I think what Christine Lagarde is doing.
Low tick alert minus 800.
Low tick alert first.
If something does happen,
Low tick alert. Okay, breaking U.S. interest rate actual 3.75, forecast 3.75, previous 3.75, no change. No change. 3.75%. If there's no change and the markets are trending towards highs, maybe there's an expectation. I guess people think that the markets are going to move lower. All right, we are moving lower, in fact, right now. So coming off the highs,
Micron pulse.
look for reverse action back and forth. Okay, a lot of stocks are seeing the highs getting sold. Okay, 7,500 needs to hold. 7,500. You guys are a little late.
There have only been 4 Federal Reserve chairs in the past 30 years. Jerome Powell, Jenny Yellen, Ben Bernanke.
Q's pulse, long dated. 0 DTE.
Okay, everything pulled back with that particular announcement. I don't see what the big deal is. There's no change, no change. I guess some people were looking for a cut. I don't see him cutting in his first appearance.
Low tick alert minus 800.
6 of them seeing 2 moves, but 9 see no moves or a cut. The median down this year does move to 3.75% from 3.375%.
SpaceX, long dated, deep calls. AMD pulse.
Suggesting the Fed chairman did not enter one. He said he doesn't believe in the dot plot. 2 members did not submit a dot for 2028. The statement was cut to 4 paragraphs. The first, the vote unanimous, then the decision, along with a statement that the committee...
Fed removes a statement referencing additional rate cut adjustments.
The second and third graphs are the economic assessment. Activity is expanding at a
Okay, so here's Intel, NVIDIA. These are pulling back at the moment. I don't think it's going to make that much of a difference. I can't see the market just rolling over and producing big red candles and head towards the 200-day. It's possible, but let's see what the New York FANG looks like now. It's probably, yeah, it's going to be pulling back, right? All right, so it looked a lot better earlier. Was a doji spinning top. Still a doji spinning top, but below yesterday's low. All right, see if they buy the dip here. We do have positive gamma below, so there's that. 7,400 coming into view very quickly. 7,400. Okay, 7,400. There was a big level down here. 7,400, now 7,430. That was from earlier. The dollar spiking higher, dollar spike. Bitcoin spike. Bitcoin spiking.
SPX pulse. 0 DTE. Call side. Size.
Bitcoin spike.
Definitely putting his mark on this Federal Reserve. Just to underscore what Mike was just saying, it looks like potentially Fed Chair Kevin Warsh did not put a dot. That is speculation. There are only 18 dots. There are 19 members. And meanwhile, you're looking.
Oh, so the dot plot represents the different Fed governors. Put in a dot. That sounds so stupid.
NVIDIA pulse.
It's like put a next.
Long dated. Deep
All right, everything's pulling back at the
Tesla
moment.
pulse. SanDisk pulse.
Okay, what does VIX look like? I was going to buy some VIX
Tickle alert -8.
August 20s.
Extreme low tickle alert.
VIX. Okay, I was going to buy the 20s. This big spike in VIX at the moment. Okay, look for this to come back in a little bit. Overreaction. Change direction a couple of times. Oh, see, Bloomberg is so the hyperbole is so thick you can cut it. Oh my gosh. Warsh, it's first time as Fed chair. Look what happened. Oh my gosh. I don't know, it just seems a little juvenile. Looking for a bounce here. I mean, how many Fed rate cuts have we had since, we've had the room?
NVIDIA pulse. Long dated.
And
Q's pulse.
we're sitting up here near all-time highs. Pull back? Yeah, we can pull back.
Intel pulse. Long dated. Deep calls. Micron pulse.
Feeding into the inflation picture as well. What is it that you're looking out for as far as some of the language here? Because you raise a really interesting point.
So it's like sell programs hitting all at once. Everything drops all at once. Looking for the buy programs to come in.
NVIDIA pulse.
Earnings are good. 84% beat.
Marvel pulse.
The 5-year average is 78%. 10-year average is 76%. We're beating by 84%. Q1 going into Q2. So dips are most likely going to get bought. Nothing to get excited about here. Give me a couple of minutes. I'll be right back.
So yeah, he's going to have to put his stamp on where he thinks expectations are going to be. You mentioned, retail sales have been pretty robust. Earnings have been blowout, Sam, and that's supported this risk-on aspect into the equity market at this point. And now we've got crude oil falling with the potential deal
SPX pulse.
this week. So what does that do to inflationary pressures that have been going the wrong way? They've been going higher. And how does he balance the two Fed mandates between, hey, robust jobs market at this point and inflation rising, but most likely to start to come down relatively quickly at this point? I think you're going to see a real big bifurcation in some of the commentary from the Fed after this meeting and after, Fed Chair Warsh speaks today, is that, hey, you're going to see more division. And maybe that's a good thing because he stated before, hey, going into these meetings, I want it to be like a holiday argument or holiday fight when you bring up topics maybe you typically talk about, and maybe that's good for the Fed.
0 DTE. Call side.
Absolutely. I mean, people
Size.
say Kevin Warsh walked into a very divided Fed. Yes, okay, it was divided, but it wasn't around the decision.
So if we're up higher, what does that say? By tomorrow.
He wants to see family fight. He said that explicitly, and so obviously he wants to see healthy debate around this.
Intel Pulse. Long dated. Deep calls. Deep
He has to
puts.
say in his first press conference as the Fed chair. Tom White, really appreciate it. Thanks so much for the reaction. Now let's take a look at the bigger picture with Jeffrey Cleveland, Managing Director, Chief Economist at Payton Regal. Jeffrey, thank you so much for your time. What did you make of the decision and some of the comments we're getting out of it? It's obviously unanimous vote here. Convenient timing with oil coming off and yield giving them a little bit of relief here. Just walk us through your initial thoughts.
0 DTE. Call side. Size.
I guess brevity is clarity. That's a much shorter statement than we're accustomed to in the past. The last sentence of the statement with the committee promising price stability being the key takeaway. So maybe that's more of what we could expect ahead. Less is more. Less information coming out, but more clarity, more to the point. We'll have to see. I thought it was interesting that 9 of the 18 folks that submitted dots. So I think we're missing one dot. Should have 19 dots if my math is correct. We only got 18. So, but be that as it may, half of them saw a rate hike in 2026. So that's quite interesting. My only thing is I would say we have a ways to go in the year. It's quite possible we have continued economic growth, as you pointed out, a stable unemployment rate, and then I think it's possible at some point later this year core inflation starts to cool. And then to me, that's a Fed on hold, not necessarily hiking, but obviously the committee has different
0 DTE. Call side. Size.
Yeah,
Size.
I mean, if this is a data-dependent Fed, I mean, how would you be characterizing the numbers that we've been getting? I mean, I obviously mentioned the retail sales on this morning. We've seen the Atlanta GDP tracking at 3%. That was revised again today. You know, this is a strong
0 DTE. Call side. Size.
So how do you think that is likely to feed into the calculus here?
Yeah, I mean, you said it, resiliency. So we have a resilient economy. We've had, last year we had the tariff shock. This year we had the Middle East and oil shock, and still the economy continues to grow. Obviously, we're getting a nice tailwind from tech. The U.S. is a big beneficiary of that story, so continued growth. I would say the second big point, stable unemployment. The unemployment rate, despite softer hiring trends in the last 18 months, the unemployment rate's still around 4.3%, and the FOMC expects it will stay there.
Micron Pulse.
So that's
deep
great.
calls.
And then
Shenanigans.
sticky inflation. Now, I think we can debate how bad the inflation story is. I mean, we're above target, but on core PCE, we're about 3.3 relative to a 2% target. I think I'm going to be keen to hear what the new Fed chair says during the press conference. Does he mention an alternative measure of core inflation, which is the Dallas Fed's trailing mean measure of inflation, which is up 2.3% in the last 12 months. So it shows a little bit less of an inflation concern. So it will be interesting to see how he frames that. Altogether, though, I think this is a situation where the Fed can just be on hold. They don't need to cut. They don't need to hike. Just wait and see how things play out. If you have a resilient economy and inflation does eventually cool later in the year, then that would be a great story. And you don't need to stamp out the hiring. You don't need to push the unemployment rate higher with rate hikes.
Well, that's right. I mean, there seems to be a view that the Fed is likely to try to avoid having to hike and sort of sit on its hands throughout the rest of the year. But, I mean, the data could very much change that course of action, obviously putting more pressure on the Fed to have to reconsider what happens. But what flips the script, do you think, to consider then, once again, rate cuts?
Okay, I would say you have risk in both directions for rate cuts. It would be an unemployment rate that starts to rise. Again, we saw that in 2024, the unemployment rate moved up 30, 40 basis points, so 0.3, 0.4 percentage points, and then the Fed was cutting rates. So I think that's really a key.
0 DTE. Call side. Size.
On the other side, what would drive hikes? What would really build the case?
So not just 9 of 18, but 15 of 18 or something. I think wage growth needs to reaccelerate. So far, even though the economy's been resilient, wage growth has been pretty tame. Average hourly earnings have been cooling. So I just don't see this overheated economy, this overheated labor market where the Fed would need a hike. But that could change as well. So I think you have risks to both higher and lower rates from here.
We're about 20 minutes away from Kevin Warsh taking the stage and microphone for the very first time at the Fed as the chair. What changes are you expecting? Do you believe he comes in all guns blazing, trying to really make his mark and put a stamp on his first press conference here, or does he take a sort of more measured, balanced approach?
Well, I have to tell you,
Good pulse, long dated, Avgo pulse, deep calls, 0 DTE, call side.
And then what happens at every press conference is the assembled media, the press saying, hey, well, the dots say this. And then the Fed chair always says, oh, but the dots are just a collection of just whatever we thought at the time of the meeting. They're not a policy, communication. So then I'm always left with, why do we have these dots then if they're not serving some purpose? So I can see him moving away from that. I'm not a big fan. I can see also, hey, do we need 8 press conferences a year? Selfishly, as a Fed watcher, and I'm sure yourself as well, we like to have. But does it really help monetary policy?
All right, 7,500. Can we get back above it? We got the little dip first. The hyperbole is so thick you could cut it with a knife. Ooh, the Fed leaves rates unchanged. Is that the end of the world? We're trading at all-time highs. I guess the market's looking for a rate cut. Okay, Bitcoin just rolled over after a big spike. Mm-hmm. Okay, so we got Microsoft turning back up now, short starting to cover. Tesla, short starting to cover. We'll see it with NVIDIA maybe. Apple, good strategy. Not spending all that money, CapEx. Apple. Okay, does it create a bearish engulfing candle? It's one thing to have an opinion. It's another to just watch price action, see what happens here. Do we come back to the 50-day first? A lot of people talking about the S&P 500 trends. Okay, just looking at the trend from earlier this year, all right? Even if we just take this, a pullback to 7,400 seems very doable, right? And then we bounce back up towards the highs. That makes sense, doesn't it? MACD, stochastics turning up, so we're looking for closes in the upper half of the daily range. You can see they're buying the dip on the S&P. I just find it amusing, the hyperbole. Yeah, the dips are starting to get bought now. All right, so people throw things away. Why? Why are they throwing their shares away? You really can't rely on CNBC or Bloomberg. Oh, they're into it for the business, for the advertising. Bloomberg's a little bit better because it gives you all the data. You can make your own decisions off the data. Just watching the data on the right. I really don't listen to the people that are talking most of the time. They're talking their book every time they come on the set. Okay, Tesla turning back up. All right, so you get people to sell. You get the sell programs to come in after the Fed. You get the U.S. dollar to spike, and everything goes back to normal. Everything goes back to normal, right? Right after the Fed, you get these moves in both different directions. We'll have Warsh will be speaking at 2:30 in front of the press. That'll be interesting to see how he performs. He's pretty articulate, so I wouldn't be surprised. He has a prepared statement. I don't know if he's going to be taking questions. I mean, the questions are kind of, I don't know, elementary. elementary. The questions I hear a lot of times. Steve Leisman always asking questions. Well, what if this happens, or what if that happens? What if, Steve? All right, so U.S. dollar bouncing back up above VWAP. NVIDIA, no shorts covering yet, but it's at the low that we saw earlier. Looking for it to move back up to VWAP. The daily over there on the right, we're below 50, 50-day. Tesla saw a nice little bounce so far, back below VWAP, back above now. Holding the 50-day is I don't want to say critical. That sounds a little bit too simple. Just needs to hold the 50-day, get it to bounce. Interest rates, they kept it at 3.75. Forecast was 3.75. Previous was 3.75. No change. Yeah, no big deal. You know, if I don't know, there's a lot of ifs here, but if the earnings weren't as good as they are, a lot of things would be breaking, you know. Let's see what Core 1M looks like. Core 1M. Okay, Core 1M with a big spike back towards 1050. Okay, so a lot of calls got crushed just now, maybe. Correlation, we're starting to get more in sync with the S&P maybe, and the Qs. So this correlation index relates to the price of call options compared to the same with the indices, or when they get too far stretched. You can imagine a benchmark. Say the benchmark is 7,500. The benchmark on the S&P cash 7,500. And for some reason, all these calls are way up here trading at 8,000. They're going to come back in towards 7,500, right? They'd be more in sync. So the ratio, because they're way up here at 8,000, just using an example, Core 1M is down below 8, or was. Now it's starting to bounce, as you can see right here. So that becomes more, that becomes more bullish. I don't know what happened there. Core 1M is spiking. Core 1M spiking.
Micron Pulse.
And how do you think the market is likely to react? Because we've already seen stocks turning negative, although they do seem to have found their footing just in the last couple of minutes. We did see an initial strengthening in the dollar and a tick up in yields.
Everything's back to VWAP.
Pulse. Micron Pulse.
Bernanke, Yellen, and Powell's first days as Fed chair, and actually you did have the S&P higher going into that 2 p.m. press conference with a subsequent sell-off into the afternoon session. And you were wondering
0 DTE. Call side. Size.
Day here. Obviously a shortened trading week too, which you need to take into consideration. How are you thinking about all of that?
Yeah, so it's interesting. Every Fed day has its own sort of.
All right, so we got a holiday shortened. I guess it's a holiday, right? June 15th.
NBIS. Long dated.
It's more a day of celebration, right? In celebration of Juneteenth. Okay. Juneteenth. What is this? Why do I have to have a pop-up? Juneteenth, 6/19. Federal recognition. 1865, the day all people living in the United States, including formerly enslaved, were officially granted freedom. Okay, so that's Juneteenth. Okay, so that's what it is. So we're off on Friday. Bottom line, markets are closed. All right, let's take a look at NVIDIA for a minute here. NVIDIA. All right, so S&P buyers at the low of the day. NVIDIA, 50 days up and to the right. We could continue to roll over. Okay, so we could do this, continue to roll over, right, down to the 200-day. Or this could turn back up. Okay, this could turn back up. Sorry about that. All right, so this could turn up. How do I adjust this? There we go. So this could turn back up, price action. So we don't know what's going to happen. We'll see. Have to watch how markets react. Haven't made any really changes. The only thing is with any bounces, we were looking to reduce exposure on any options that expire tomorrow. Okay, Google, I see HCPG talking about Google. Google holding on to the 50. Tomorrow would be a nice day for a bullish engulfing candle, maybe. We had a hammer a week ago. Hammer on Thursday, back to the 50-day on Friday. Monday, Tuesday, up above 50-day, back below. Back to it.
Kevin Warsh's opening statement. We hear from the Fed chair about today's rate decision and the Fed's path forward. Kick off the morning with the Declan and the decisions moving markets. Morning trade live that breaks down the macro moves.
NVIDIA starting to show a little bit more weakness. NVIDIA. What's AMD doing? AMD thought to be gaining ground on NVIDIA. The price chart reflects it. Okay, NVIDIA's lower. Micron, memory, not affected. Seagate, not affected. Marvell, Marvell, not affected. MRVL, Marvell, not affected. Lam Research, not really affected, still at the highs. On Semiconductor, ASML, Taiwan Semi. Okay, these are relatively unaffected. NVIDIA's off a little bit. Okay, Tesla, rocking and rolling. Tesla, the Doji right at the 50. It would be better for the bulls, obviously, if this was higher. For the bears, a close below the 50-day would be good. RSI is right at 50. MACD and stochastics trying to turn from oversold.
0 DTE.
Okay, Tesla, choppy. Okay, what's SoFi doing? And the banks, relatively unaffected. Banks, Wells Fargo did pull back. If you want to get back into some Wells Fargo on the dip, that's not a bad idea, actually. 60-minute trending. Okay, so we want to look for the first bullish candle. Once we see the first bullish candle, you can put a stop underneath. Looks like this might actually turn out to be a bullish candle. Starting to form a hammer on the 60-minute Wells Fargo. Okay. Everybody getting so excited about Warsh press conference.
Micron pulse, deep calls. Spider pulse, long dated. 0 DTE, call side. Size.
Take is a little bit surprising in terms of the conciseness of the statement. So I think there's going to be more emphasis from the market, at the very least, in terms of what the Q&A has going for Kevin Warsh coming up soon. I think one of the things to keep in mind is this is what I'm taking away right now is it looks like the rate cut narrative for this year is out, first off. The other thing is, if you look at the statement, they seem to be more focused on the aspects of inflation, and they're not really emphasizing labor market. But the market may construe that as that they see that the labor market is sound and healthy as well as the economy. So it looks like they're going to be a little bit.
All right, futures pulling back a little bit. Nvidia pulling back. Tech pulling back a little bit, not surprising. New York FANG. Okay, a doji. It's not the end of the world. Could be a pivot low and a pivot high next week.
Nvidia Pulse, long dated. Micron
RSI at 50. Stochastic MACD have reset, so these could turn in either direction. The bears have lost control to a degree. Okay, bears have lost control to a degree. All right, so RSI is flat. Histogram is rising, so that's bullish. Stochastics is bullish. Okay, so we're looking for dips to get bought. Okay, let's go look at the equal weight. That'll tell us a lot. Is it just the New York FANGs? RSP? Nah, not really. It's holding the 21-day. Buyers stepping up. Buyers stepping up. It's below the 20 EMA on the 60 minutes. So temporarily right now, there's no buy on the S&P. S&P 500.
Micron Pulse, long dated. Deep calls. Deep puts.
S&P. 7,400's the next. 7,430, I believe, was the next level. All right, let's see if they rally this up in the day. Warsh should speak here in a couple of minutes. All right, so there was a unanimous vote to hold the rates between 3.5 and 3.75%. Unanimous vote. Okay, we're waiting on the Fed here.
Wow, in a decade now.
Plus 20% or more.
Only $1 trillion company.
Yeah, and more stocks have gone up.
Okay, what's Home Depot doing? Home Depot. Let's see, VIX is higher. Earlier this morning, like around 11 o'clock, I was thinking of contemplating buying the 20 call. Could have got out of that with a little profit, but not as big a spike as I was expecting. That didn't happen. Okay, so this is VIX right now.
Can we talk buzzwords, David? Are we at that point even? Do we have to just wait and hear Warsh at his first conference to know what buzzwords might be for the future? Or is it going to be
Okay, so Home Depot. Home Depot pulled back a little bit from the high. Okay, trending. It's not going to go straight up every single day. I would expect the 9 and 21 day to catch price action. Should be higher into the thick of hurricane season, June, July, August, September, into October. Hurricane Sandy lasted all the way until November. SoFi. Pushing that upper Bollinger Band, looking for it to get through 19, then 20, and then start to head towards a 200-day moving average. All right, he's talking now.
FOMC meeting exemplified the very best of the Fed's traditions. Rigorous debate, open-mindedness.
Yeah, I figured it would be a prepared statement.
Responsibility and accountability for performance. In this business, they all add up to one thing: getting monetary policy right, or as near to it as we can do. That is our North Star. My colleagues and I are here to serve our legislative remit, which you've heard us say before: price stability and maximum employment. And these objectives guided our business in the meeting just concluded. As you saw a few moments ago, the committee decided to maintain the target range for the Fed funds rate at 3.5 to 3.75% in support of the Fed's dual mandate. The committee also reaffirmed its policy.
Intel back up.
Reserves in the banking system.
strong. Job gains have kept pace with the workforce, and the unemployment rate has changed little. We recognize that inflation has been running well ahead of the Fed's long-stated inflation goal of 2%. That's been going on for more than 5 years. Persistently high prices are a burden for the American people. But the recent past need not be prologue. I am pleased to report
NVIDIA
that
Pulse,
members of the
long dated,
FOMC are
NDX
unambiguous
Pulse,
and
0
unanimous.
DTE.
This committee will deliver price stability. At any institution, a change in leadership is a natural and timely opportunity to reaffirm its mission, to review current practices, and to consider whether those practices best meet our objectives. My Fed colleagues and I will be working in close collaboration to ask what changes might improve
10-year yield.
monetary policy.
10 years all over the place.
On that score, you might have already noticed a difference in today's policy statement. It's a bit shorter, a bit simpler, and it dispenses with some older language. That statement just gives you the facts as best we can judge it. Absent also is so-called forward guidance, which we agreed was not well suited to the current policy conjuncture. This afternoon, you also received the usual summary of economic projections. It's been the practice of this committee for participants to submit these projections, and I have encouraged my colleagues to continue to do so. I, however, have refrained from offering any projections of my own, consistent with my long-held views on the SCP, at least as
Low tick alert.
in the median projections, real GDP
Low tick alert.
is at 2.2% this year, 2.3% next year, and total PC inflation runs at 3.6% this year, 2.3% next year. The unemployment rate stands at about 4.3%. The median participant judges that the appropriate federal funds rate to be at 3.8% at the end of this year and 3.6% at the end of next. Let me turn now to a few words on a key initiative that we're announcing today. I'm appointing a task force in each of 5 areas that are central to the broad conduct of monetary policy. First, Fed communications. Second, the Fed's balance sheet. Third, our use and reliance on existing data sources. Fourth, productivity and jobs in an era of transformation. And last, the Fed's inflation frameworks. These subjects are timely, consequential, and in my view, worthy of a fresh look. My colleagues and I discussed them with energy and purpose over the last couple of days. For each of these independent task forces, I'm enlisting some of the very best minds, both inside and outside the economics profession. They will be supported by subject matter specialists from our superb Fed staff. And they'll have a straightforward charge. Start with first principles. Ask hard questions. Examine current practice. Consider alternatives. And ultimately propose next steps for policymaker consideration. Since last summer, my colleagues discussed possible improvements in the form and function of Fed communications. This new task force will build on that effort, and I expect propose some well-considered changes, including to the SEP I mentioned a few moments ago. The second task force, one on balance sheet policy, will review the benefits and risks of the current ample reserves regime and the composition of the Fed's balance sheet. They will assess alternative frameworks for the conduct and operation of monetary policy. The third task force, the one on data, will evaluate new information sources and consider methodological changes to improve data gathering, with the aim of giving policymakers more accurate, relevant, contemporaneous, and perhaps most important, data for our economy.
All right, the 10-year is backing off a bit.
Productivity and jobs.
S&P is starting to move a bit higher.
inflation frameworks. That'll examine the
All right,
current
futures starting to bounce a little bit.
principles and weigh the full range of ideas.
I just keep thinking it's one day. Nothing's changed. Literally, nothing's changed. 3.75%.
In this overall initiative in the coming weeks. Enough for now to make a simple statement.
Intel.
Each task force will
Intel's trying to break higher. Intel. Core 1M continues to shoot higher. Core 1M. Core 1M is continuing to push higher as the markets pull back, crushing some of these calls. Okay, Intel breaking out. Intel starting to break higher. New high today. Intel new high today.
Hi, Karen. Howard Shire with Reuters. Good to see you again, and welcome back. This is a lot to be putting in motion so fast. What is the timeline you have in mind for each of these?
So I think it'll depend on
High tech alert.
It also depends on the urgency in which we need clear answers.
High tech alert.
Still in the business of recruiting and finalizing. My expectation is the task forces will begin work in the next couple of weeks, and we'll start to get some more information from them, some more framing of how they see things starting in the fall end. Hopefully most, if not all of them, concluding by year end.
And just specifically on the inflation framework, you talk about first principles. Does this include a review of the 2% target itself? You've mentioned that things to the right of the decimal point don't matter. Should this be starting from a premise that 2% as a point estimate is too strict?
Let me break that into two pieces. First, on the inflation framework review, their remit is what are the drivers of inflation? It's the Fed's responsibility for inflation. In part,
Intel high tech alert.
but that'll overlap with my data group. On the 2% inflation objective, that is the Federal Reserve's long-held objective of 2%. You've heard me say before.
Intel on the move.
Left of the decimal point. Well, the 2 is the left of the decimal point. For now, 0 is to the right. I see no reason until we have reestablished our commitment and ability to deliver on the 2% inflation objective to revisit that. So that'll be outside the scope of what we're taking on.
Thank you so much. Colby Smith from the New York Times. You've in the past said that inflation is a choice, and in the policy statement, it includes this pledge to deliver price stability, as you reiterated today. But looking at the SEP, the bulk of your colleagues expect core PCE to run around long dated.
Okay, Intel, nice little pop there.
Inflation target not to be reached.
Intel, nice pop.
So I'm curious how patient you think the Fed can afford to be at this juncture in terms of waiting for one-time
Jeez,
inflation waves to wash
he's only been here one day.
and for applying inflation to step down after 20 years of inflation
Oh,
running
man.
above target, and under what circumstances you would support the Fed taking some action and raising rates?
So quite a bit there. Let me try to break that into pieces. First, we have the capability and commitment to deliver.
I loved how the press, when they ask a question, they ask like 5 questions inside of their one question. Pretty funny. Pretty funny now. Okay, nice breakout here. There goes Intel.
The Fed statement says that inflation is primarily determined by monetary policy. You bet it is. I've said for years inflation is a choice. You bet it is. Today I'm announcing that this committee unambiguously and unanimously have decided we are going to deliver on that. The rest of your questions sounded like an encouragement for me to give forward guidance. We've dropped forward guidance.
Yeah, I caught that too. They're just trying to get him to commit to something. They just don't like change. The press.
Providing forward guidance is right. Others have, I'd say, different views and think as a general proposition, forward guidance isn't the business we should be in. But that'll be taken up by the Task Force on Communications and my policymaker colleagues. We're going to listen hard to what the experts say.
All right, looks good, Intel.
Decision.
Another example of something I probably want to reduce my exposure in a little bit. It is moving back up to the highs. Options that I have expiring tomorrow. Do I have any? I don't think I do on Intel, actually. No, I do. Okay, so I have some. Okay, some 130s. and some 130, 140s. Okay.
It's uneven. I look at the housing markets as one example. Fed policy isn't the single determinant of the state of the housing market. But broadly, I would say there, Fed policy appears to be.
Okay, NVIDIA with a nice reversal as well. NVIDIA. Okay, so people throw their shares away. We get an announcement. Then they reverse it. I mean, how do you get people to let loose their shares? You start sell programs, they sell things down, you buy the dip. People wonder why they sold, only to see things reverse right back up. Or they take my stops or whatever. NVIDIA back to VWAP though. They're trying to get back above 50. I don't think we'll get above the 50 day, but that does look pretty good. All right, Tesla turning back up. Same thing. Tesla drop below VWAP, turning back up now. Tesla.
What the dot plot's future is. I'm going to have to give you the same answer I gave to Ms. Smith. We've got a task force for that. I'll give you a little bit more. I reviewed the dot plots.
The press, I don't think they had enough time to get used to what they're going to be talking about, or because their questions he's already answered. You know, we got 5 different things that they're going to implement. Fed policy, the balance sheet, etc. The press, I don't think they were ready for it. They weren't ready for it. NVIDIA turning back up though. Nice little reversal.
This was more likely than not. This was more likely than their other scenarios. So I didn't hear tons of conviction. What I heard was kind of humility that I think we should have. I did not submit a dot. For me, it's not helpful.
Okay, what's McDonald's doing? McDonald's was looking for, okay, whoo, there goes Intel. There goes Intel. Intel.
Transcripts, minutes. This will be part of that. I don't want to prejudge the outcomes there, but I'm pretty open-minded about what they could be. I was just incredibly impressed over the last couple of days. My colleagues over the last 2 days, and frankly, the first 3 weeks I've been here, been very open about changes.
Nice move here on Intel. Intel.
Our number one goal is to get monetary policy right.
Nice pop there.
To get monetary policy right is to deliver on the remit that Congress gave us, to deliver on price stability, and there was no disagreement on any of those points.
At the risk of possibly getting the same answer about task forces, communications. What is your feeling about these news conferences? Are you going to continue one after every meeting? Do you find them useful? What is the future for the way Kevin Warsh will communicate?
Well, this one's probably got another 15 or 20 minutes in it, so I don't want to prejudge the outcome. Press conferences can be a very useful way to communicate with households, businesses, and more broadly, through using the likes of you. I had a great old mentor named George Schultz, and his mantra was press conferences are useful, but when you have one, you want to make sure you have something important to say. Today, I think we have something important to say about our commitment.
A good point. That's a good point. Instead of just blathering about, talking about the same stuff over and over. You have a press conference when you have something to say. I like that. Okay, coming back in a little bit, Intel. So that would look like a little short covering there.
The best people I know in business, economics, academy, technology, and the rest to share their views. That's what we're going to be doing here, the pursuit of truth. I think we're going to come up with some new and interesting things. We made some changes today. I expect more changes to come. And some of those might well be worthy of a press conference.
Robinhood. Okay, Robinhood. Okay, Robinhood. Robinhood looks like it wants to break out again. Robinhood. Robinhood. Wow. Nice move on Robinhood. Intel looks like it wants to keep going. Okay, what's Wells Fargo looking? Wells Fargo, nice little dip. Looking for that to bounce. Goldman Sachs, Morgan Stanley at the high of the day. Very nice. Morgan Stanley, Bank of America, Citigroup high of the day. Morgan, we just said Morgan Stanley. PNC Bank. Okay, so Morgan Stanley looking good. JP Morgan, just off the high. Wells Fargo, bouncing. Google turning the corner. Google needs to get back above the 20 EMA, and it's staying above the 50, right? Staying above the 50-day. Google looking for the bounce. Just above the 50-day. S&P 500. Okay, nice hammer. Back above the 21-day. This would be good for a reversal. Take out 75, 75, 75, 80 tomorrow would be nice. Let's see what hedge flows look like. Okay, hedge flows look okay. 7,500. We want to be back above that by the close.
I'm interested in what the outside experts' view is on the subject. I'll say this, Jen. Most of the data
I like what this guy's presenting already. You know, one of the biggest problems I think we have is that the Fed chairs just keep going blathering about. Sounds like he's going to pull back on that. I mean, you got every one of these Fed governors talking like 5 of them a day, 10 of them a day at points in the past. And they're all saying the same thing. Why do they keep going on and on? Just my pet peeve. I know that many of you have voiced the same concerns. Let's see. Intel looks like it wants to keep going here. Intel. NVIDIA. Intel. Nice little pop on Intel.
also say this. Almost every private company CEO that's running his or her business are doing so with real-time information that isn't subject to much revision. That is telling them what just happened at that very moment. As you know, there are normal, long and variable lags in the
DoorDash.
really interested
Okay, 3 days up. Big day on Monday. Follow through Tuesday, Wednesday. Starting to bounce back up. DoorDash.
You're hearing from my answer that some of the data that we receive, that we're waiting on, the first Friday after the month, the payroll index or something else, that might be an echo of history that's quite useful on its third revision.
CBRS turning back up. What is SpaceX doing? SpaceX. Okay, trying to stay above VWAP. SpaceX. A lot of calls got bought on SpaceX on the dip today. That was noted by Brent during the 1 o'clock session that he had. A lot of SpaceX calls being bought.
Thanks. Welcome, Mr. Chairman. Edward Lawrence with Fox Business. So if you don't give a lot of ongoing forward guidance, won't the markets have more volatility, and shouldn't Americans have more access to what you're thinking going forward?
So I think financial markets perform best when they react to incoming data. I think the financial markets work less efficiently when they ask a question, how will the Federal Reserve react to that incoming information? The more that markets are paying attention to what's happening in the real economy, deciding what's good data and what's less good data, the more financial markets can price what they believe is the most likely and what are the tail risks. Financial market prices are probably the most important source of information to guide central
0 DTE 7575 call. Somebody just bought some contracts there. Probably just dealer hedge flow. Let's see, 0 day, 0 day, 0 day. A lot of 0 day. AMD Pulse, AMD. Let's see, AMD. AMD, nice little spike. AMD spike.
Ultimately, the goal that I said at the outset, deliver on the price stability objective that Congress told us to do, and we better get get in the business of doing.
AMD.
If I could take you in the meeting a little bit.
AMD with a spike.
The first meeting, the board members seem fairly hawkish when you listen to in general.
Okay, AMD with a spike there. Off the low, buyer stepping up.
There was one proposal on the table. There was no discussion of any other proposals.
What's Core 1M doing? Is still going? Core 1M still higher? Okay, it's jockeying around at 10. All right, AMD.
It has been the practice of this central bank and others to have a range of alternatives. Today we had one. I thought it further discussion, deepened it, and made it clear what we needed to do and how we need to deliver. I wouldn't prejudge what happens in the future, but there was only one big subject for us. We took it on. We had a good family fight on it for a couple of days, and we ended up, I think, in a better place.
Thanks a lot, Jones, Financial Times. Coming to this blind, reading this very nice short statement that I think we've all appreciated in the room. One might wonder why you didn't raise rates today, considering what you're saying here.
CBRS is starting to turn back up. Had a pretty good day. First bullish day in 5. Dip buyers keep showing up on CBRS, buying the lows over the last 5, actually over the last 9 trading days. Today's a green day. If we can push a bit higher now, would be good. It's up 4.5%.
Reactions to what we say unfiltered, I think, is more helpful than having delivered a statement, me then improvising further upon it. Best practices of task forces is a subject I've thought some about. I've been on a task force or two in my life. Best practice.
Russell, okay, with the yields moving lower, Russell has pushed a bit higher. Okay, Russell looking a little better. Okay, nice little dip from the Fed. Dip and rip. That's a $4 move right there. Not bad. Can't buy it right now, but looking for this to be moving higher over the next few days. What's the Qs doing? Qs back up. All right, low tick alert. So more back and forth.
Across the reserve banks on each of these, in some sense, seconding them to this group for a period of some number of months, so that the leaders of the task force know what the most analytical central bank in the world thinks about that. They can reflect on it in a final best practice. We're not outsourcing decisions to anybody. Administrations, past and present, reserve banks have chosen.
Walmart falling off here. Walmart.
Around the table. These will be our decisions. We can agree to some of the recommendations, disagree with others, have a good family fight about it. But what comes from them will, I hope and believe, make the discussion we have internally better, stronger, more of a dialectic, so that we can finally deliver on that price stability objective.
Just a quick follow-up on your markets point. If you look at 2-year yields, they're really suggesting that markets think more tightening is needed. Would that be your read on what the 2-year yield is saying as well?
We were in such a good place. This is why we don't do third questions, I presume. I'm not going to offer any commentary on market reaction over the last 30 or 60 minutes.
Really? I mean, think about what that question was. I don't know. I understand why, but the market's reacting. Could very well be up or down tomorrow. Who the hell knows? The market reaction. People are just buying and selling. Trying to make some sense out of the Fed, Governor. The press is definitely not used to the new Fed chair, because they're asking questions that Jay Powell would normally have answered. He's already said that they're not going to do forward guidance anymore, and they keep asking stupid questions about market reaction over the last 60 minutes. AMD pulling back in. Okay, we're below 7,500, so this is kind of setting up a fade into tomorrow, the way things are right now. I'd like to see it above 7,500. What did Brent say the flip point is now? Let's see.
this era, this chapter of the Fed.
If I told somebody in the milk aisle that I had a task force for that, I think that would be doing a very poor job. So I appreciate it. If I saw somebody in the grocery store, what I would say to them is that we cannot have a very significant effect on
Let's see. I think he puts it here, right?
price of oil in the markets today, or even
74.75. 74.75. 74.75.
it's to make sure that those changes
Okay,
in
right
oil
now.
or beef or eggs or milk don't broaden
Okay, so we want to stay above 74.75. 74.75. Okay, we're below. We're right above that level right now. 74.50.
Treasury also under review. There was the normal breakfast meetings with the Treasury Secretary.
Okay, 74.45. That is a flip.
Conversations with the president since you're swearing in.
So on the president, I don't have anything for you. With respect to the Treasury Secretary, he has been posting pictures of our breakfast, so I don't think I can deny that. The long tradition at the central bank is that the Fed chairman and the Treasury Secretary meet weekly. I think we've pulled off 3 of those so far. I believe he's overseas this week, so this will be the exception to the rule. I think they're very useful discussions. The central bank's objectives and our roles in response to
74.75. 74.75. I said 74.45.
and in my view, monetary
74.75.
in the conduct of what we do. But that doesn't mean we're not interested in what's happening with the fiscal authorities. The way I think about it is this central bank needs to have a wide lens, but a narrow remit. We need to be quite interested in what's happening in the world. I won't be breaking any news here to suggest I'm quite interested in what's happening.
All right. So we want to stay above 74.75. 74.75. Preferably above 7,500.
So we're aware of things that could affect our day job.
Dollar is back to 100.
Steve Leesman, CNBC. Mr. Chair, thank you. Mr. Chairman, thank you for taking my question. You had said in the before you became chairman that you thought productivity was a reason why the Federal Reserve could lower interest rates. Do you still believe that to be the case?
So the committee had a discussion of productivity today. AI came up. The way I thought about it before and socialized with the group is that artificial intelligence, the latest generation of general purpose technology, is perhaps as important a change in the economy and business and households that we've had in my adult lifetime. It is filled with both a huge opportunity and with risks. I take both of those very seriously. You may have heard me say before that AI is shorthand perhaps for American ingenuity. That doesn't mean that it's going to be easy. That certainly doesn't mean it's not going to be disruptive. But over the long term, my conviction, and I heard quite a bit of support for this around the committee today, is the United States is a winner as we go down this. The United States is ultimately going to
Okay, Rackspace, RXT, RXT. All right, big move today, Rackspace. A bit extended now. Wait for it to come back. If you're thinking about Rackspace, I'm thinking about getting back in. I sold it earlier for a nice profit, so I'm happy with that. But I'm going to see what we do here. We pull back a little bit more, Rackspace. I'll be looking to buy maybe the 8 call if they're available, or the 10, whatever they are, available on the dip.
That's your second question. I'm going to give the same answer that I gave before. I'd say as I think about the conduct of policy, what matters is what's the effect of policy. Not what do we say, but what happens. The best way I can describe it is uneven. I do see some restrictiveness and things like how
The press, the look on the press face is pretty funny.
just make one other point.
He just basically looked at Steve Leesman and he said, "That's your second question." That's pretty funny. The reaction. Everybody's just kind of trying to figure out how to talk to him.
That Federal Reserve chairman show up at a podium like this and say, you got to choose. And you're going to have to decide whether you're willing to tolerate higher
Netflix.
more
Wow, Netflix is down to 77, 76. Okay, Netflix pulling back some more.
Low prices, strong employment, mutually compatible. So what you heard from the committee.
Dollar's hovering around 100, the US dollar. Bitcoin's back up near the highs that spiked right after the Fed decision came out. Bitcoin turning back up. It's a doji right now on the daily. Looking forward to get above 68,000.
That judgment you expressed was not expressed by any of the 19 people around the table. We'll be meeting in 6 weeks. We'll take up the issue again.
And if I could ask about AI, the build-out is generating enormous demand right now, CapEx, data centers, power. The productivity payoff may be further out. So in your judgment today, is AI adding more to demand or to supply?
It's a good question. At the central bank in the economics profession, what we spend most of our time doing is counting demand. It's easier. We can see it, we can count it, we can check it, we can revise it. What we do, though, is we infer supply. You'll notice in the second paragraph,
10-year yield up a little bit again. It's down, it's up, it's down, it's up. It's at 4.46%. We want the 10-year to stay below 4.5%, basically. Netflix is getting hammered here. It just keeps going lower. Netflix. AMD's off the highs. Okay, RXT. That's starting to fade, so that might give an opportunity. Intel spiked up. 125, pulling back in a little bit. Intel. Okay, we only got about 56 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday, June the 17th. We got one more trading day in this week. We're off on Friday. Markets are closed. The Fed is trying to get, I was going to say Jay Powell, trying to get Warsh, Kevin Warsh, to say something that they can quote, I guess. They're not really offering any insight. These questions don't really, I don't see any help with these questions. Supply and demand. We got a lot of supply, a lot of dollars still floating out there since 2020. Did they have M1 and M2 on here? Let me see. M1 money supply. Oh, that's discontinued. M1 money. Weekly. Monthly. Doesn't really help. Intel bouncing. Intel with a little dip there. It spiked up to the highs, selling it some into strength made sense. A little dip here. Intel.
We're making decisions that we say are real contemporaneous data, not data that we call contemporaneous. It's really an echo of history.
Thanks. The other question I wanted to ask is related to the building renovations. Are you considering any changes
Oh, geez.
to the renovations, the projects, just in light of the fact that they came out in the last year?
I heard something about that. I don't think I'm breaking any news, but my view, when you show up at a new institution, you should go meet with the Inspector General, just as a matter of good practice. I had one meeting with the Inspector General, and he told me what I believe the world knows, which he'll be coming out with a report on the building and the building projects at some point later this summer. I'll be interested in reading the report from my perspective with a forward-looking glance.
Okay, let's say you're concerned about the markets right now. Okay. S&P 500. Let's look at the weekly time frame. We're up here at the highs. We're not making a move through 7,600, but we're not making a move down through the 10 EMA either. We're just hanging in this area. 74, 75 is a level we'd like to close above today. But if we don't, 7,400 is a likely candidate for a level to be tested tomorrow. Okay. But as far as long term, this looks fine. This looks fine. Let's see the daily. We talked about the daily just a couple of minutes ago. The daily, if you just a subjective trend line through the lows here. Okay. If we do pull back to this level, okay, that would be right in this area, 7,400, which is exactly where, we think that we could see price action go. And then make a move back to the highs. RSI is turned down a little bit. Stochastics is showing look for closes in the upper half of the daily range. MACD would be very easy for this to continue higher tomorrow. Could also make a slightly lower histogram bar like that if we were to pull back to that trend line, or what would be a subjective pullback to 7,400, which is what everybody's watching for, 7,400, if we can't stay above 74.75. So if we can't stay above 74.75 or 7,500, look for a test of 7,400. May happen, may not happen. We'll see tomorrow. The markets could get bought up here. The dip could be manufactured in the sense that institutions have programs, sell programs. People sell, institutions buy. I don't know. We're just kind of like right here in the middle. 7,400 is what I'm watching, though. It's fully expecting that we could see 7,400. But the longer term, into remember, July is one of the seasonally strongest months of the year. So we're watching for July, June into July to be a strong move. Okay. On average, this tends to be a strong time of the month. Okay. July right here. Strongest month of the year, next to November. So, I like what he just said, Kevin Warsh. He said somebody asked him a question about how the markets are reacting, and he said the Fed is not going to do that anymore. They're not going to, interpret forward guidance based on the market's reaction. The markets are going to react, and they'll analyze how the markets react with supply and demand, whatever. So I really like that. I'll have to read more about exactly what he said because I'm not really paying 100% attention to what he's saying. Just suffice to say, June usually leads to a stronger July. Okay. So any dips, I'll be looking to buy. Any rips, I'm looking to reduce exposure, and anything that I'm trading short term, like tomorrow's calls or whatever. I took a few things off with a small loss in some because I had some options that expired tomorrow. Took those off before the Fed meeting, the Fed announcement. Microsoft rolling over. All the New York FANGs are down right now. Okay. RSP. Let's see what equal weight looks like. Removing the weight of the. Actually, you know what? Let me do this. RSP. Equal weight. Look at the equal weight. S&P 500.
Everything we do.
Let's go out 20 years. 20.
3 weeks to monetary policy, then all those things. But the more we deliver on our promises as good supervisors and good regulators, the more benefit we get, the more credibility enhancement we have in monetary policy. When we deliver on our price stability objectives, which we will,
Extreme low
people
ticker.
will feel as though the hardships that they've been living through in part because of inflation the last 5 years are in the rear view mirror, and that credibility will have dividends across what we do, and the institution will come to press conferences like this, always with an impetus to reform, always with an impetus to do better, but we're going to put some points on the board.
Labor data in recent months, how would you sum up the labor market right now? Do you see it as stable and potentially a source of inflation? Thank you.
Yeah, so the committee, if I were to try to capture how the committee thought about it, the committee thought that the labor markets were stable. There were some people around the committee who thought that it was trending better than that. Trends matter more than data points. what's happening over 3 or 6 months matters more than any one data point, any one data release. And I'd say the jobs data has been moving in a good direction. If I heard one other thing around that subject over the course of the last couple of days, what I heard was that strong productivity-led growth is not something that we fear, but something we embrace. Thank you all very much.
Okay, that was Kevin Warsh, his first news conference as Fed chair, and making it clear right from the outset that this Fed is going to be far different from Fed's path. He said, and I quote, made some changes today, expect some changes to come. You saw those changes immediately in the statement, which was shorter. It was simpler. He said, quote, just gives you the facts. There was no forward guidance in the statement, to which he said we dropped forward guidance, quote, not well suited to current policy. 18 of 19 members, as you know, gave their projections as part of the quarterly dot plot. Warsh did not. The Fed chair suggesting, quote, for me, it's not helpful in the conduct of policy. He underscored the Fed's commitment to getting inflation to the objective of 2%, said, I am pleased to report that members are unambiguous and unanimous. This committee will deliver price stability. There was the task force, of course, in 5 areas: communications, balance sheet policy, the use and reliance on data sources, productivity and jobs, inflation frameworks, examining the drivers of inflation. He said there could be some changes to the communication structure in the future. We already learned from the statement itself that this was a much more hawkish view from the Fed. The dot plot certainly was. 9 members projecting a rate hike, 5 seeing 2 rate hikes, 1 seeing 3, and 8 projecting to hold. Very interesting first meeting from Kevin Warsh. Welcome to the halftime report. The closing bell. I'm Scott Wapner. Let's check the markets for you here too, because they are moving. The stock market did turn lower on that more hawkish statement from the Fed. You still have the Russell 2000, which is in the green. The dollar was up, rates were up. So that's the story with about 45 minutes to go in the trading session. Joined as always now by Jeffrey Gundlach. He is the Double Line Capital CEO and the CIO, the founder of that firm. It's so good to have you on what is clearly a new era in the Fed, as Chair Warsh laid out moments ago. What'd you think?
Well, there's a lot to digest there. He opened up by saying he's committed to moving the Fed forward. And then he laid out what that meant with those 5 consultant task forces, I guess is what I call them. I think he's buying himself some time. But the real phrase of the day, without any doubt, is we will deliver price stability. He said it more than anything else. And one thing that might be in his favor on that, since he's buying himself some time, I mean, he's talked about these task forces and that they would probably start working in the next several weeks, and that maybe they get around to having some ideas or conclusions or suggestions somewhere in the fall. So that to me suggests that it's unlikely that rates will be changed until the fall. Also, inflation is, by our model, which I predicted in our last conversation, Scott, I predicted that the May CPI would have a 4 handle on it, and that's exactly what it was. The good news is that our model shows that inflation will be dropping along as we move towards the end of the year, and based upon the commodity complex today, could be as low as 3.5. I thought it was very interesting that Warsh said that he looks to the left of the decimal point on the inflation numbers. And, you know, he says the one that's left to the decimal point on our target is 2%. Well, what that sort of suggests, I know for years, there's been talk about maybe the Fed will raise their inflation target. It doesn't really mean 2, maybe 2.5 is okay. That's kind of what he said. I mean, if you really want to take it to the extreme, if it goes to 2.99, the number to the left of the decimal point is a 2. So I wonder if we're really talking about that price stability of 2. Also, one of those task forces is about inflation statistic frameworks. And he talked about old data is an echo of the past, and he wants more real-time stuff. What that could open the door to, if you want to be cynical, or conspiracy theorists, it might open the door for creating new inflationary views, new inflationary readings, new inflationary techniques, which could perhaps, if you're a cynic, facilitate the road.
All right, so this, check out the equal weight index. All right, we have pulled back a couple of days. The volume is lower. If it was like this over here, like in March, I'd be a lot more concerned. It just looks like a trend. Trend intact. All right, so we just rolled over here. 74.75.
Are solid, and even half the committee thought they might be getting better. That further distracts you, like a magician's trick, distracting you from what's going on in the trick by focusing your attention on the other hand. So, but I really, what a change in tone. Right? It sounds to me like just perhaps the Fed is no longer going to just be following the 2-year Treasury. I did a study on this. It goes back about 20 years. Of course, the Fed followed the 2-year Treasury completely for 20 years. And maybe that's not going to happen anymore. And I saw this fantastic chart. I think it's the best chart of the present moment.
Okay, Apple pulled back.
Morgan Asset Management. And what they did is they went back 55 years and looked at all of the Fed moves in the Fed funds rate. And they did a scatter chart. They had red dots, which were tightenings, and blue dots, which were easings. And they basically, on the x-axis was the ISM Manufacturing Employment Index. And on the y-axis was the ISM Manufacturing Price
Okay.
Index. And if either of those are
We have about 40 minutes left to go. 40 minutes left to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Wednesday, June 17th. I'm going to take a 2-minute break, and I'll be right back.
prices are rising.
conflict. And we know that there's been a broadening out of some of these price pressures while the labor market has been solid. I just feel like,
Low, tick alert, -800.
conceded that. And so was consistent with the person that he has always been, which is someone who's really grounded in data.
There's also been a comment, and I thought that his answer to one of the questions was really interesting about why he thinks that this shouldn't be an overly communicative Fed, how the data and how the market response to the data should be done more purely. Take a listen to exactly.
Extreme low, tick alert.
I think financial markets perform best when they react to incoming data. I think the financial markets work less efficiently when they ask a question, how will the Federal Reserve react to that incoming information? The more that markets are paying attention to what's happening in the real economy, deciding what's good data and what's less good data, the more financial markets can price what they believe is the most likely and what are the tail risks.
This actually, to me, highlighted a real question that's been asked. Jim, is this sort of codifying the fact that the Fed's going to follow the markets? The market is going to be sort of the arbitrator of what the Fed should do because it is a pure indicator of the collective wisdom of crowds.
I think the market should be the thing that the Fed follows. His statement reminded me of that famous line from the economist Charles Goodhart, when a measure becomes a target, it ceases being a measure. Meaning, if the Fed has already decided what they're going to do, then we can ignore the payroll report, we can ignore the CPI. Maybe we should. Maybe we should be reacting to all of this and having the market express its best judgment, and then letting the Fed bring in that information. And I agree with him, is the proper way for things to be done, than them to just summarily decide what they're going to do. Say they care about the data, but they've already made up their mind.
Do you agree? Yeah, I think that makes a lot of sense, right? The market being an important signal, an important source of data for the Fed, instead of just manipulation. It is really hard, though, as market participants, not to try and anticipate what other market participants or other policymakers or people making decisions are doing or interpreting with the data, And that is part of the data and part of the behavioral side of things that we all incorporate into our process. But I think, Chair Warsh's point was very clear that the market and that mechanism, Jim, as you're pointing out, is a really powerful mechanism, and we shouldn't fade it.
Right now, we want to get back with a part of the task force. I don't believe he actually has been appointed to a task force. He is officially the Bloomberg task force on the Federal Reserve. Bloomberg's Michael McKee, you are in the room, and the press conference actually went on a little bit longer than some people had expected.
They committed to a press conference, though, not exactly concrete. His answer to you was really interesting. What was your takeaway from this conference?
Well, the answer, of course, like almost all of his answers, ended with there's a task force for that. But basically, they're going to look at all communications. And he did express the idea that he doesn't necessarily think you should have a press conference after every meeting if you don't have something to say. Now, that's going to be the thing that the task force is going to have to look at is what qualifies as something important to say. Today, obviously, but if you're in a situation where you don't know where inflation's going, where you're going to vote to hold rates where they are, does that require a press conference? If not, then how do the markets react? But then there is kind of leading the markets. And if they come to you and say, hey, come on over, we're in a press conference today, then they're also leading the markets. So it's a difficult needle to thread at this point, I think, for Warsh to try to get out of this, to put that genie back in the bottle. But we'll see what the task force comes up with. He was very, very complimentary of Fed officials today, and he basically framed this all as we're all working together to make this work better for monetary policy. So it's going to be, we're all going to be sitting back and waiting for these task force reports to come out.
Michael McKee, thanks so much for all of your work and insight today. Just real quick here, it does seem
low tick alert minus 800.
Paying attention to the initial salvos of the reaction. He went on and said, honestly, I'm not that concerned in the first hours. That said, the idea that they dropped any kind of commentary on the labor market, and the fact that he said we've missed for 5 years our inflation target and we are going to fix that. Is there any other way to interpret this, other Kate, than unabashedly hawkish? I mean, here's what I would say. If I think repeated that we have been overshooting the target.
Extreme low tick alert.
I thought it was incredibly easy. It actually is a compliment to me. It's acknowledgement that policy is going to be really active in terms of getting us to the goal.
All right, so we're rolling over pretty quickly here. Now that we're below 74.75.
Where we are today as a little bit more hawkish than otherwise people might have expected. But also, I think that's thinking perhaps more clearly than perhaps what we had heard in the.
All right, let's go take a look at the New York Stock Exchange as well. New York Stock Exchange. Okay, that's pulled back a bit. Still above the 20-day, 920. 50, 200-day, up and to the right. So we were looking for potentially for a pullback of 1 to 3, maybe 5%. June, and then rise into July, the seasonally strongest month of the year. And that's what we're doing at the moment. AMD off the high of the day. AMD did tag 532, it looks like 532.80. Pulled back. Pretty decent pullback there from the high. All the New York FANGs are lower at the moment. A doji. Doesn't look bad, a doji, right? New York FANG components, there's 10 of them. That's not that bad. I mean, realistically. Okay, so Apple. Almost an outside day on Apple. Apple, Amazon. Amazon did roll over. Okay, so reversed and moving back to the 200-day. Did we bounce there? Google below the 50-day. Meta. Okay, back down. Got rejected. Looked like it had something going for it earlier in the week. NVIDIA. Below the 50. Looks worse for where we are now. Microsoft. Yeah, Microsoft's just been looking bad. Microsoft looks like it's headed down here to the lows like Netflix. Netflix headed down to 75. Get a double bottom. This is going to be a good opportunity, I would think, down here. Let's see, Snowflake, Broadcom. Broadcom's hanging in there. Okay, so that's the New York FANG components. ARM Holdings, ARM, ARM. Completely oblivious of the market right now. ARM Holdings. Okay, Marvell. These are showing relative strength. Okay. Western Digital. These certainly don't look like the indices. Western Digital, Micron back up to the highs. Some of you trading Micron in the room. ASML at the highs. Okay, that looks okay. Intel, yeah, it's off the highs of the day, but Intel's a doji. Still sitting inside of this, I guess you could call it a range now. Was a descending channel earlier in the week. Looked like a descending channel. We came back down and tested the upper trend line. Intel, okay, we tested that upper trend line. We bounced. That looks okay. Okay, 921. Notice the 9 and 21 are up and to the right. So is the 50-day. So is the 200-day. A lot of people still don't like Intel. Don't think it's going to be moving higher. But look at RSI. We've got the markets moving lower, yet Intel pointing higher. Okay, so that's that. That's number 8 on the NASDAQ 100. ASML, we talked about that. Showing relative strength. Synopsys, SNPS, all of these stocks showing relative strength. Home Depot, pulling back in a little bit, but it's trending. 921 crossing up to the 50. The 50 is turning. This tends to do well during the months of June, July, August into September and October for hurricane season. Okay. Walmart got tagged. Walmart got tagged. For those of you still in Walmart. AMD. AMD is at the highs, inside day. Qs. That looks a little better than the S&P, right? The Qs. S&P looking a little worse for where. Let's look at breadth had started to deteriorate a bit. Okay, these are all turning down. So after they turn down, they eventually turn up. So we're looking for the dips to get bought. As long as you have options that are further out in time, August, September, you should be fine. Should be fine. Okay, let's look at the New York Stock Exchange. Okay, the McClellan volume oscillator. Notice it was wide ranging, and then it tightens up a little bit, less amplitude in either direction. Now it's getting closer and closer to zero. And which direction we go now? Right now it's kind of neutral. What's junk bonds doing? Junk bonds probably gap down, right? Yeah, okay, so junk bonds are neutral to bearish right now. Mostly bearish. This looked a lot better this morning and to start the week. It's only one day. It's one day. The Fed decision, new Fed. Tomorrow could be a completely different day, just judging by IWM. Okay, that's sitting on top the 21-day. Of course, we could pull back, sitting top the 90 MA, sorry. 21 days right there in the center of the bands. Notice the bands are coming together. So we could very well just sit inside of this range until July gets here and we start to rally into July. July tend to be a strong month, strongest month of the year. IWM, Qs, of course. Qs pulling back to the 21-day. As long as we have time, especially, if you're in shares, you're just sitting here and waiting, basically. It's in a range. We're right in the center of the range. Okay, so we're in the center of the range. Okay. Upper half of the range. Stay up there will be good. Qs. Yeah, it looks worse than it is, really. S&P pulling back. It looks worse than it is. Yeah, we're back below the 60-minute. Shy of a double top. RSI will get oversold probably soon. But there's a lot of stocks out there that aren't doing what the index is doing. Caterpillar, it's off the high of the day, but it made new highs. Can it pull back in tomorrow? Sure. Cummins, that's at the highs. 3M, industrials have been looking good. The banks look okay. Banks are looking okay. Morgan Stanley, Wells Fargo, okay, coming back to the 200-day. Wells Fargo looking for a follow-through. Goldman Sachs at the highs. Material stocks, Albemarle. What's Albemarle doing? Albemarle flat. XLB. Okay, what's gold doing? Gold, GOLD. Gold, GLD. Silver, SLV. Copper, let's look at Southern Copper. That's good for the economy if it's moving higher. Speaking of economy, let's go take a look at the AAII bull bear ratio. Okay, it's more bullish than it is bearish. It would be bearish if we were way up here at the high. If we were way up here at 22 and turning down, that would be more bearish. The fact we're down below the zero line could turn back up. The momentum indicators are turning up. So I'm looking for AAII bull bear to become more to turn as we go into July. Okay. Consumer price index at the highs. Let's see. Industrial production. We want to see this moving higher. Industrial production. If you are looking bullish on the economy, you'd be looking for this to move higher. Okay. It is moving higher. Okay. It was a descending channel. Okay. If I go back to 40 years, okay. Descending channel. Okay. Okay. Let me go to 20 years. 20 years. 20 years. Okay. All right. So you can see for much of the Biden term, industrial production was moving lower. Then Trump came into office, started talking about bringing industry back, blah, blah, blah. It's not a political statement. I'm just making an observation that industrial production is rising. Okay. RSI is rising. Momentum indicators have turned up. Okay. This is good. Industrial production means jobs. It means people making money, blah, blah, blah. Okay, so that's industrial production. We want to see that moving higher. Housing starts. Okay, right in the center. Okay, that red band. It's in the middle. The highs, obviously, and the lows. Okay. Back in Jersey, we bought our house in 2006. We bought at the absolute high of the day, high of the 2004, 2006 run up in housing prices, and that was the beginning of the great financial crisis. And housing prices dropped, crashed, turned around March 9th, and rose back up. Now we're right in the center. We're right back in the middle. So there's really not much of a signal here. We can have our opinions about housing, but for now it's right in the center. So neither here at the highs or there at the lows. So that looks okay. What else? Transportation divergence. Oh, that was the other thing. The other thing is that transportation has been looking pretty good. TRANS, transportation. Let's see. IYT, right? IYT, transports. I don't look at that often. This pulled back. Real estate, XLRE, that pulled back. Materials, looks like everything is pulling back a little bit. XLC, communications, okay, pulling back. XLE, energy, pulling back. Financials we talked about. That's at the highs. That'll pull back in a little bit. XLI Industrials at the high. Gravestone Doji. Consumer staples pulling back. Utilities pulling back. Healthcare. What's not pulling back? Transports. Consumer discretionary. Retail. Okay, everything's pulling back right now. So for the time being, sit tight, keep your cash. If you've been taking profits off in the strength, reducing your exposure, as we were talking about this morning, remarking how Frano mentioned the same thing the first couple of minutes of the trading day. Paraphrasing what she said is that she's looking to reduce some of her exposure, that, she doesn't like giving things back. So I'm under the assumption that that's what she did today, some of that today. Not to focus on Frano, I just happened to notice the comment, so that's exactly the way I've been thinking. All right, so I'm not looking for a big pullback. Okay. The 50 days there, 7,400 is coming into view very quickly. All right, so that's 7,400, 7,390. That was a gamma flip before. 7,390. Let's go 7,400 now. 7,400. There's a big level on 7,400. You don't want to buy puts at the low of the day. I learned that lesson a long time ago. If anything, we'll see how if the markets bounce tomorrow morning, I'll give an opportunity. This is selling off pretty quickly here. I don't know if you caught what Brett said, but he had some put flies, 7,400, 7,300, 7,200. I think he said something like that. So this closest leg is coming into view, 7,400. Okay, so we're down 115 points. Futures down 113. S&P cash is down 89. How is that possible? Okay, so they're behind. They're showing 74.18, and we're down here at 7,400 already. So Bloomberg's behind.
The second interchange that was really quite revealing was when asked about restrictiveness, it wasn't so much about the unevenness, but what he went on to say about what is the source of the unevenness. I found that to be the most revealing comment, because he said that might be due to transmission mechanisms. That one might be about the interest rates, that's reflective to housing, and the other, the easiness of financial conditions, is about the balance sheet. Well, that's about some of the risks of running an ample reserve system that maybe here is being hinted at as being changed. And if you were to change that, what is the biggest beneficiary of the big balance?
Home Depot,
Right? That was the whole point.
Taiwan Semi. A lot of these getting smacked around right now.
Bring down that term premium, and we're still seeing the legacy of that benefit. So if the signal here is maybe we're going to be hawkish on the balance sheet, I'm not sure your reaction is big curve flattening. I get the initial reaction, hawkish surprise in terms of the focus on price stability. But there may be some other second order effects here we'll think about that actually will become first order.
So Jeffrey, I got a question for you about the balance sheet. I agree with a lot of your sentiment about it. And I'm thinking back to earlier with the Fed when they adopted inflation targeting. It took under Bernanke 5 years before we eventually got inflation targeting. Are we going to have to wait 5 years for them to change the balance sheet? Can this institution, especially since they've got Fed Governor Michael Barr, who's kind of against it in the first place, to move that fast? So when I agree with you about the balance sheet, is this something that's going to take years to unfold?
Well, Jim, I wonder, we're around the same generation. My reaction to the statement was, wow, that looks like one of the first statements I've saw in my career.
All right. So definitely taking some money out of the markets. Literally. Markets coming back. 7,400. Wow, that's a big drop very fast from the high. 100-point range, 7,500, 7,400. Noted that the last couple of days. We saw these big levels here. Net open interest, 7,400 was a big level, is a big level.
Does this make you rethink some of your
Okay. It's pretty wild.
You know, the Fed may be less supportive in terms of financial conditions, but it's occurring in an environment where the contribution, particularly to risky assets, of the Fed's role is much secondary, much more secondary to what we're seeing in the real economy, right? And that's the AI impact, the incredible amount of capital expenditures, the incredible amount of earnings growth. So it might be an opportunistic moment for the Fed to take a step back on supportive financial conditions when financial conditions can stand on their own.
Yeah, I mean, Jeff, I couldn't agree with you more on this one. That what's been driving the equity market, of course, has been the earnings.
Okay, we got a little bit more than 16 minutes to go.
As well as all the CapEx beneficiaries and the companies and industries that are benefiting from adopting this technology. So it's hard to say that earnings are really coupled in any way with the rate position at this point. And that, if we are fundamentally driven, which our team certainly is, we have to stay focused on where the earnings are going, who's growing them, in this case it's the U.S. or wherever else, and regardless of where we are in kind of a relative monetary policy. The one thing I just would want to highlight, though, is that for the fringe companies, the smaller companies, those that are reliant on borrowing, people have gotten themselves incredibly excited, as you remember in the beginning of the year, around rate-sensitive parts of the equity market. Like, this is a time for rotation, we're going to get excited. But now I think we're getting a message very clearly from policymakers that the rates trajectory is not lower in the near term. At best case, we're kind of flat. And that's not going to be an environment where companies that need to borrow in order to keep up with their large cap counterparts are going to be able to do so at a very attractive rate. So that needs to be factored into people's expectations for margins and then earnings. And if you care about earnings in this case, which we really certainly do, that should tilt your size, overall exposure.
I wanted to go back to the idea about how communications is changing under Fed Chair Kevin Warsh. A question from Michael McKee was on communications and press conferences, whether Warsh would continue holding them after every meeting. He said that they can be a useful way to communicate with households and businesses, but you need to have something to say.
All right.
Perhaps there won't be a meeting, a news conference after every decision. Having said that, if households and businesses are learning from this news conference, are listening to this, Jeff, what do you think they heard from this?
All right, SpaceX giving back some now.
I think he wants us to reiterate the main message, right? He said the other useful thing is everyone here in the room helps to amplify. I don't know if he said that, but it was implied. You help to amplify that message, and the message was the recommitment to the Fed's.
So a lot of things got sold.
Stability of prices goal, and I think that's the message that he wanted to get out: the recommitment to the attainment of the goal, and all the
New York Stock Exchange. All right, so that pulled back quite a bit off the high. Weekly. Okay, so I guess you could call this a double top in the New York Stock Exchange.
We're going to see a different type of Fed right now with a different type of objective and communication style, and that's not necessarily a bad thing. I think the market reaction is appropriate because part of the path that they're going to go on is going to.
All right, what's VIX at now? VIX put's getting expensive again. Okay, VIX back to 1850.19. Okay.
I love the overall message, again, around working with the rest of the FOMC, around bringing in outside voices to these task forces. But I do want to say something. It's important to reiterate that commitment to price stability and to the target. But there's a phrase that keeps coming back in my mind, which is that your actions speak so loudly I can't hear what you're saying. So let's see if there's follow through in terms of action and not just trying to job on the market and say, hey, we do care about it, but we're not taking the necessary policy actions in order to get us closer to that goal. So I'm watching very closely what happens over the next 6 to 12 weeks in these next couple meetings.
Kate Moore, Jim Bianco, both of you, thank you so much for being here.
7,400, big level.
Japanese yen. Now, the weakness versus the dollar going back to 2024, we're seeing all sorts of sell-offs in various equity markets. A big day for the broader Wall Street market. It's not your father's Federal Reserve. Or maybe it is. Maybe that's the whole thing. Maybe this is your father's Federal Reserve, depending on what you're born. Exactly. It's maybe a harkening back to days of yore when this was a shorter statement, when the balance sheet was not a big tool. What a day history making from New York City to our TV and radio audience worldwide. That does it for us. This was
Robots who walk, talk, and perform tasks just like us. It's the stuff of science fiction, right?
This is not science fiction anymore. The age of the humanoid is here.
With robots as smart as we are, rather than replace us, can they help us?
Okay, starting to see some short covering. Starting to see some short covering here. You don't want to buy puts at the low of the day. Almost always a losing idea.
If you haven't heard of me yet, that's exactly why your bank account's empty. Join Grand Fortune Club. Spin the reels and watch the big wins keep rolling in. Get up to 20 SC plus 300 free spins. No ads, no deposits required. Instant on-to-rotos. Come try your luck. The jackpot is waiting for you.
All sectors are lower. Most stocks are off the highs of the day, faded, as many of you have already talked about in the trading room, been watching the room. One day does not make a trend. We are fading. We're shy of or a lower high, I should say. New York Stock Exchange pulled back. Everything is taking a break thanks to the Fed keeping things at keeping rates at 3.75%. No change. Got 10 minutes to go. 10 minutes to go.
Low, ticker rate minus 800.
All right, looks like a bear flag here.
Jobs Ohio connects the world's best to better sites, earlier funding, and skilled talent to ensure success. Take the first step today at jobsohio.com.
So is there any way to improve your winning jackpot odds? All right. Honestly, out there is rarely asking that. If they already win a lot, yeah. But there really is a great way to take big jackpots. Right. When you sign up, you get up to 30 SC and 500 free spins. Right. You get some small rewards when you start spinning. So it's not really important. The key is, friends, you gotta remember, once you hit a decent sized win, you keep spinning right away. Oh, yeah. You gotta chase it. That's how you hit the big ones more often. I have to try. Everyone should give it a shot. No ads, no deposit reminders, easy cash out. The big prizes are waiting for you.
What if you can have your cup run over?
Yeah, so all the sectors are low. Let's take another look again. XLB, XLC, XLRE, IYT, transports, XLC. We just said XLC, XLE, energy, financials, off the highs of the section, but at the highs, nonetheless. XLI, off the highs. XLK, hanging in there at the 20-day. That's probably going to be lower too. I mean, a lot of these stocks are still at the highs of the day. Like ARM, still at the highs. Marvell, just off the highs of Doji. ARM, and we just said ARM. ARM Holdings, Applied Materials, higher today, fading from the high, but higher. Broadcom, okay, trying to bounce. Seagate Technologies. There's a lot of stocks that are still looking very strong. Micron, hanging in there, inside day. Intel, it got knocked down from the high of the day. Inside day, though. Intel, let's see what the 60-minute looks like. 60-minute, okay, it's below the 60. Kind of choppy price action. Probably going to be a slow day tomorrow. If we get a big bounce in the morning, overnight, or whatever, that would be good. But not expecting a whole lot. S&P, we're down here at 7,400. That's a major level. We saw that on Trace. Net open interest at 7,400. This is 0-day, non-zero day also. Non-zero day. 99 percentile, 7,400. So we came right down to that level.
Pretty dramatic, down 1.3%. Similar story when you take a look at tech stocks.
Okay, a lot of people talking about the S&P 500 and the JP Morgan collar that it rolls at the end of the month. JP Morgan.
Basis points that is leading to a very dramatic flattening of the yield curve as you see traders now pricing in a rate hike by October, and as a result, volatility is moving higher. The VIX trading with an 18 handle.
Okay, so here are these strikes here of the JP Morgan collar. About 4% would be a move back to the 10 EMA on the weekly. That's possible. Okay, that's possible. A move back to the 10 EMA. About 4%. We'll just say 4%. I'll move back to the 10 EMA.
15 years ago when the news conferences began, 14 years ago when the dot plot came to be, and 8 years ago when Jay Powell took over. But it's a new day, and Kevin Warsh made that clear during his 42-minute press conference. Take a listen.
At any institution, a change in leadership is a natural and timely opportunity to reaffirm its mission, to review current practices, and to consider whether those practices best meet our objectives. We've dropped forward guidance. I'm appointing a task force in each of 5 areas that are central to the broad conduct.
All right, so we had a 21% rally, more or less, 21. About 21% rally. Yeah, we're giving 4% back at this point. We did this 2 weeks ago as well. Actually, last week too. We dropped below the 72.37, bounced right back up above 7,400. So anything's possible. Your guess is as good as mine what we have in store for us in the next couple of weeks. I do look forward to July being a very strong month, so looking for a bounce over the next couple of weeks. If we do fade, so just hold. Oh, there goes Apple turning in another direction. All right, so they're already starting to snap up Apple off the low. Apple off the low of the day. There goes Apple. Shorts covering. I would just look at this as shorts covering, nothing more. Don't jump to conclusions. I just noticed the volume out of the corner of my eye. I saw that spike up. Microsoft's starting to turn back up. Not a good idea to buy puts at the low of the day. If you're fearful, wait for a bounce tomorrow. I know it's hard to do, but better to buy puts if you're thinking we're going to go lower. Buy puts if we get a gap up tomorrow. Okay, here goes Apple. With 4 minutes, 30 seconds to go. 4 minutes, 30 seconds. A nice rip to the upside would be a relief to the bulls and, you know, end the day with a little bit of sunlight, if you will. Apple yesterday put in a pretty good day performance. 2 days up, we broke through these pivots right here. These pivots right here. Came back down all the way into yesterday's price action. Now they're buying the dip. All right, looks good. Looks good. So what's AMD do? AMD, all right, that dropped off. Intel dropped off as well, but it's starting to bounce. Intel's a doji. We did make it all the way back to 126, 125 or so. Inside day for now. Intel. Applied Materials having a good day. That did pull back over the last couple hours. Gravestone Doji. Micron pulling back. Okay, Tesla. Tesla back below the 50-day. For a while there, it looked like Tesla was going to stay above the 50-day and start to rally some more. Maybe we get buyers down here tomorrow. S&P is starting to turn up. Shorts are starting to cover. Just look at it. Just view this as shorts covering. Dealers covering positions. That was pretty wild. That was a pretty wild drop there. Apple turning back up.
What does that playbook look like when it comes to bond markets more broadly here? When you think about
All right, so the bears got a nice little rout to the downside. Let's see if they cover their shorts into the close. With 2 minutes, 30 seconds to go, I'm your host, Cousin Ben, coming to you from theclosingprint.com. Wednesday, June 17th.
Kind of going sideways in price, but credit performance is strong. So we can stay in this uncomfortably tight spread environment for some time. And so,
okay, we were down like 115 handles at one point, starting to rally up a bit. It's gonna be hard for us to take back that 100-point loss. I got a feeling maybe 50 points. Maybe we get halfway back there. Hard to say. I guess from what I gather from Bloomberg, the markets are pricing in a rate hike. We're at 3.75, a rate hike possible. That's one of the reasons why we faded a bit from the best levels of the sessions. We ran up on the Iran news. Tell you what, though, earnings are really good. So hard for me to get super bearish. Yes, I see the markets pulling back. Don't misunderstand what I'm saying. But I have to weigh that against earnings. Companies are making good earnings, and some of these are at the highs, like Robinhood, for example. That's off the best levels of the session, but Robinhood had a big spike today. Okay, it's also best levels. This is Robinhood. Look for it to continue. Robinhood's going to do fine into end of year, I would think. Okay, so 50% retracement would be somewhere around 120 to 125, I would think. I think we marked this up actually. Anyway, we've got 30 seconds to go. 30 seconds to go. Don't get too upset with the markets, right? You can't go back and forth. I talked about that earlier in the week. The emotional roller coaster. Okay. All right. That's the closing bell. I unfortunately have a hard stop, so I hope everyone has a great evening. Take care. We will see you in the morning. Chin up. Everything's going to be fine. Take care.